on the anniversary. So to dig into what led to these conditions that you're going to see plenty more about going forward, we are continuing a look back at Silver Squeeze, biggest moment in the history of finance. The Arcadia Silver Network. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Saturday, January 29th, 2022. Yes, amazingly enough, this is the 1-year anniversary of Silver Squeeze, the Silver Squeeze. Well, the thing is, none of those issues were ever resolved. And amazingly, they are actually flaring up on the anniversary. So to dig into what led to these conditions that you're going to see plenty more about going forward, we are continuing a look back at Silver Squeeze, biggest moment in the history of finance. The Arcadia Silver Network. Marcus here with you for Arcadia Economics. Welcome on in for a quick early afternoon video. As you can see by the title, is First Majestic Silver getting short squeezed today. Interesting situation, and I'm going to pull up the chart here, but looks as if First Majestic Silver could be getting short squeezed a little bit. As you can see on the silver price, certainly quite a volatile chart today. And it's interesting, I was studying the option board last night, so we'll come back to that. But what I found fascinating is that a couple hours into the trading session, I look and I see First Majestic, which we'll pull a second chart up here. First Majestic's up about 80 cents. Well, everything else, silver was down. All of the mining stocks were down, which now First Majestic has come quite back in a bit. But here you see at 10:47 a.m. Up at 1490. Then over 1480 again, 1484. So it came back in, sold off quite a bit. But let's take a look here. Can see the blue line. That's the price of First Majestic. Here's where it's up 80 cents. And in the other lines, the teal is SLV. So you can see that was down. The brown line is SIL, Silver Miners Index. That was down even more. And you can see MAG Silver in the green line on the bottom. So that was a pretty consistent pattern, I would say. SIL, maybe it's not perfect indication of all silver stocks, but measuring pretty much what you saw there. And my first thought was to call First Majestic as I was looking around to see if there was any news out. I didn't find anything, so I called First Majestic, talked with one of the investor relations people there. He said there was no news out. There had been a large buyer round, but what came to his mind, it looked like it could be a short squeeze. So to be clear, that is different than saying that it conclusively was a short squeeze, but that was what popped to their mind. No particular news. Did call Dave Kranzler, and he certainly thought it was a short squeeze. So now what's interesting is that if you take a look here, is that we actually recorded a call about this last Thursday, I believe it was. Here's our roundtable. What's up with the short position on the First Majestic Silver? So anyway, I don't know if somebody was watching that and decided to take action on it, but just was really interesting to see First Majestic up so much while the other miners were down. Again, obviously there's imperfect information there, so I can share with you what I saw and the feedback that I got. And by all means, that's not legal licensed trading advice. So make of that what you will. And last note, before we wrap up, again, this is going to be a quick one, although stay tuned later tonight, part 2 of Andrew McGuire coming. And that's also where that gold and silver options expiration clip that I posted last night came from. And it's interesting. Perhaps didn't get to do quite as much on this over the weekend as I might have liked, but here's the option board, if we can get that out of the way. And it was interesting because I was thinking about what Andrew said. I watched that a bunch of times, and then I looked at the option board, And certainly there are some interesting conclusions. I don't think going into it, it's completely blind. I won't say that I knew it precisely, but when I looked at what happened here, and especially I think I was looking at the option board, maybe right around here, and there are some clues that some of this would make sense, which I will be doing another option call about. And for everybody who saw the last option call or is interested in digging into this more, we're finally organizing our option group consulting program. So you can find out more about that by clicking in the link below. We'll have more details out shortly, but some of the option things and creating an area where you can get your questions answered, but also creating a network of other people that you can discuss things with, which I often find is a biggest part of any of these ventures. So a lot of good stuff on the way. So click in the link below to find out more about that. With that said, we're going to wrap up for today. But again, Andrew McGuire, part 2 coming up later. And the link to get more information about the options for metals and miners group program in the description field below. And I will see you soon. You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on into the show. We have a midday matinee today where we are going to discuss whether there will be a failure on the Comex this year. Fortunately, I am joined by 2 great Comex experts, analysts, and certainly in an interesting time in the world, a lot to dig into. So real quick to welcome our friends in here. Rafi Farber of the Endgame Investor. How are you today, sir?
I'm pretty good considering I'm on a complete lockdown, but things could be a lot worse.
Well, I guess that's fortunate for us because you have plenty of time to dig into the Comex on a level that I think is really hard to find elsewhere. Maybe if there's one other source, at least in the galaxy, it would be our friend Rob Keynes of goldsilverpros.com. And also, Rob, I hear you have a conference this Thursday with not what's going wrong, but some actual solutions. Is that right?
That's right. We got a conference called Solutions 2021. It'll be this Thursday. So I guess 2 days from now. And I'll be hosting yourself as well as many other guest speakers, 11 a.m. to 9 p.m. Central Standard Time. It's free registration. And Chris, if you'll just include the link in the description.
Yeah, that link is in there. And Yara, perhaps you can put that in the chat so folks can get access to the conference. I'm looking forward to it. And one last note before we dig into all the wild things happening on the Comex, but we do have a sponsor for today's show, which is Bluestone Resources. Jack Lundin, who you've seen on the show before, and is advancing their Cerro Blanco gold project. And here they were announcing that basically they did a project readiness update, thorough and extensive review of the current mine plan, engineering, flow sheet, capital, and operating costs, along with the execution strategy. And Rob, I know you're familiar with Bluestone. In fact, when I first heard about them, I asked you, you want to give a quick recap of the news they have here today?
Yeah, so this is basically their 2020 highlights. So they have opened a $30 million credit facility with Natixis, which allows them money for exploration and to kind of takes away the uncertainty around where they're going to get their financing, which is so key to the explorers. They got their financing secured. They can use as much or little as they needed that. Jack Lundin was appointed as a CEO into the board of directors, which is big because the Lundins are really, really big mining family, serially successful, get involved in a lot of good projects. And when somebody like that signs on to your company, you know you're doing very well. They did a lot of optimization. They did their studies, engineering assessments for their project, 92 million equity financing, of course, for the company. Completed basic engineering, but probably the part that investors really want to hear the most is they completed 15,000 meters of infill drilling. Infill drilling is a type of drilling that you do on a mine to tell exactly how good your resource is. So you start doing your dispersed drilling to see where the resource is. You infill to see, okay, how much resource do we actually have? And it's highlighted here by 1,380 grams of ton gold and 2,194 grams of ton silver at one of their intercepts, which is astounding. Those are bonanza grades, beyond bonanza grades on both fronts. So it's going to be a good gold, silver exploration company. And because of their success this year, it looks like their profile just got upgraded. So this definitely is one that your viewers may want to take a look at.
Well, appreciate that, Rob. Again, you can find out more at bluestoneresources.ca. And with that said, for the question of the day, and Rafi, let's start with you. We'll just throw it right out there. I mean, we've heard people talk about it for years. The events are seemingly building. You're one of the people writing about it. So do you think we're going to see some sort of break in the Comex this year?
Well, when we say break in the Comex, we're probably talking about something like the gold shorts are unable to deliver on the gold that they promised to deliver, or something like that. Right? But people conceptualize it as in like if the Comex fails, then the dollar fails. But I see it the other way around. I mean, the question, will the Comex fail, is more of a question, will the dollar fail? The reason I say that is that the only reason that a massive amount of futures traders or a massive amount of institutional investors would want to deliver on physical gold and actually have it is because the dollar is failing. That's why they would want monetary gold. So if we were going to get like a flood of physical demand like that and stands for delivery in in the hundreds of thousands until it clears out the Comex, the dollar would have to already be significantly, obviously on its deathbed, like let's say inflation 10% a year or 15% a year, and then it becoming obvious that these debts can't be sustained anymore. So then everyone would go to the Comex and say, yeah, give me the gold and take the dollars and let's just get out of here. So yeah, a dollar failure would probably cause a Comex failure. But if the dollar is still functional in some way as a money, then I don't see it happening. So the question really is the dollar going to fail this year? And it could very well happen, especially if food prices start to rise very fast and the CPI finagling that they do is no longer believed.
Yeah, I think that's a great way of phrasing it. And Rob, what do you think about that?
So the Comex acts as the futures market for most of the world. You have the LBMA, which is really sort of an OTC, unallocated gold market. So if you're wanting to trade futures, most people go to the Comex to do that. And it's sort of the center of it. So it's not really a great physical delivery market. However, there have been healthy deliveries on it this year. In fact, I think we had more deliveries on Comex this year than we've ever had. Rafi did a really good job in his Endgame Investor newsletter of talking about a particular phenomenon that started to occur a couple of months ago. And that was that people were using the Comex for spot delivery, meaning in a futures market, you'll take a futures contract. If you want to actually take delivery of the gold, these sellers will say, okay, we have gold to deliver, and the longs will take that physical delivery. But that occurs a small percentage of the time. But typically that while the longs will declare their intent to take delivery on the month of delivery, the futures positions are set up ahead of time. What's been happening the last 4 or 5 months, Rafi, correct me if I'm wrong, people have been coming into the Comex and been taking what he calls spot delivery, or what other people have been calling the shadow contracts. And that's essentially they're coming into the market, they're presenting a futures position, they're taking delivery of that gold almost immediately within a few days, because it does take a couple of days on the Comex to facilitate that transaction. So now you were getting, for several months, a lot of physical gold pulled off the Comex, when traditionally it's heavily dominated by the paper trading, the paper side of the market. Then we started to notice at the end of 2020 and going into 2021 that had slowed down. December, we expect to be a really big delivery month, and it was fairly robust in gold and silver, but it had started to slow down in the precious metals. And then we saw the EFPs kick up. The EFP is an exchange for physical. It's where you take like a Comex future position, you go over to like the London market, and you do your physical that way. So some of the physical delivery that had started to occur on Comex looks like it's been shifted over to London. So people are going back to London to get their physical gold. So there's all sorts of uncertainty and questions around, what happened there? Why did people go to Comex to pull a lot of delivery, more than we have that I've seen in recent memory in a given year on a market, which is really a futures market? And then why all of a sudden did that stop and it started to shift back to to London to the LBMA. It's very curious. I think it shows maybe some signs of distress in the inventory numbers. One thing I talked about on my show, I want to say last night, and then also we've been talking on it the last few weeks, especially, is there are ounces coming out of the registered category, which are the one tied to the actual deliveries, and going into eligible, which is basically just gold storage. So people are using the Comex vaults for gold storage. They're not necessarily using it for delivery of the physical as much as they were in 2020. So we'll have to see that trend. Now, why I bring that up is because if the Comex runs out of physical, while it is a futures market, it would affect their credibility to be able to deliver the metal. And if all you're doing is trading paper on this market, and it's just a bet on gold one way or the other, then it shouldn't really affect the gold price, and it shouldn't affect the gold market, I would advocate. So we'll have to see if those delivery patterns hold up in 2021 to see if they're really having stress in their physical inventories.
Well, Rob, we have, and Chris, we do have a big delivery date coming up on Friday. I think it starts. Mm-hmm. Right, the February contract is reaching its rollover deadline, I think on Friday, on the 29th, and then the remaining contracts in the February contracts that are open should go to delivery or otherwise settlement. So I think there's something like 125,000 left, and like 25,000 rolling over the last few days, for the last 3 days. So, I mean, at this rate, there could be about 50,000 deliveries. I think that was the May or the June record last year. But it's hard to say how many of these deliveries are actually physical gold leaving the Comex versus how much are just delivery tags or warrants being exchanged on gold bars inside that, and everything's kept inside. So the one thing I'd point out is that one thing that we haven't seen, and you were correct about the spot deliveries. The other thing that we're seeing is that the other reportables, again, those people that are trading their own accounts, they have a lot of capital and they'd be interested in getting physical gold delivered, as opposed to the money managers or the hedge funds that don't, because they're managing other people's money. They are still holding a record position of about 170,000 contracts, which is unprecedented, and it keeps inching up month after month after month. But if these people were taking delivery, we would see their positions start to fall as the contracts close out and they actually get their delivered gold, which hasn't happened yet. So, and in the meantime, the managed money category has fallen, I think, to the lowest level since May 2019, which was when gold finally broke out of its 6-year trading range. So I think we're seeing some very bullish numbers on the COTs, and I don't think the other reporters are going to be spooked out of their positions by the bullion banks smashing the gold price any given day. I don't think that's going to happen.
Well, Rafi, you raised the key question there. I know there's been a lot of debate, rightly so, but what can we take away from these Comex numbers? We've seen the deliveries are large. Like you point out, it doesn't appear yet. I haven't been seeing much evidence of metal leaving the building. So perhaps, Rafi, you can start with you, but what can we take from that, and what does it really mean?
Well, I'm thinking, I've been pondering this question a lot, because nobody really knows what's going on behind those doors, and nobody's going to answer those. Nobody's going to answer that question straight. It's like trying to ask, the chair of the Federal Reserve to, say something honestly. It's just, he has his script and that's it. So, I'm thinking, if I was a Comex trader, why would I stand for delivery and then not take the metal? Just exchange the warrants. Maybe some of it is leaving, but it seems that the supply of registered metal goes up and down, and there's no real crisis going on yet. It seems to me maybe it's the beginning of some suspicions. Maybe they want their warrants to, or they want the right to their bars. Maybe they have an intention to take it later, or, they don't want to be stuck standing for delivery when there really is a crisis. It could be just some kind of suspicion that maybe something is off here, which was pretty obvious in March and April when the shutdowns first started, and then there was these huge premiums in the physical market. So I think it's just actors in the Comex getting ready for, if they need this, they should already have the warrants in their names, and then they wouldn't be in a scramble. It's like let's call it like Comex preppers, maybe they're unsure and they're being careful.
And Rob, what do you think?
So the issue, I think, with the Comex is I think they did run out of gold earlier this year, or get really close to it, because there was a huge amount. And I don't have the chart ready for you. I wish I had. I showed this earlier on in a video. I want to say about a month, 6 weeks ago. In 2020, they came dangerously close to having no registered gold stocks. I can share that if you don't mind. I'll share a screen on that.
In a moment.
I'll talk through that, Chris, as you allow screen sharing. But so essentially, they ran dangerously low on registered inventories of gold stocks, which means those are the ones that get delivered against the contracts. So let's look at this chart from Gold Charts R Us. You can see the eligible, which is the light green, had surpassed, after the last financial crisis, had surpassed registered. Registered, this dark green, as you can see, dwindles here from the financial crisis to about 2020. Had dwindled down to almost nothing. In fact, it had touched zero, I think, 3 times and almost a 4th time. That means that nobody's putting that gold up for delivery on futures contracts. And if you don't have gold for delivery on futures contracts, you don't have gold. Again, there are 2 categories on Comex. There's registered and eligible. If you're sticking it in eligible, it's just storage. And I think April 19th, this came out. Ronan Manley of Bullion Star was the first to document this. On April 19th, it came out that the Comex admitted they had no clue as to how much of their eligible gold inventories could be up for delivery on a futures contract. They were guesstimating 50%, and they said, you know what, we'll move that up or down. We don't really have a clue. And the reason is because it's private investment. So the majority of the stock was right here. You can see right here, they had nearly no stock for the actual futures positions until this point. And this point occurred, I want to say, I think it's about April, if I remember correctly, I want to say around April 20th or so of last year, the registered category, this dark green, shot up, and all of a sudden there was this influx. And you can see the overall amount of gold just shoot up on the Comex like all at once. It happened over a period of a few days. It's like they just took this massive delivery. And I don't have the next chart for you, but I have documented in my videos previous to this that most of that gold we think came from London, because in the last 5 years there have been very minuscule deliveries from London to the US. A little bit here and here, but net it had been negative. More gold had flowed, east to London than had flowed west to the US. That trend reversed in April at the exact same time that the Comex inventories exploded. And there was a massive amount of gold that came from London to the Comex. So what I think happened, more than likely happened, or at least a large part of what happened, is that the London gold market basically bailed out the Comex, and that's where they got their gold from.
Could be. Two things about that, Rob. The date April 20th, that was probably one of the weirdest days in modern market history. I remember, I think that was the day that oil went to like negative $35 a barrel, and everything was just getting mixed up, and nobody knew what was going on. The other thing I wanted to mention is that I had looked at gold import statistics around that time, and you might be right about London, but I seem to remember that I think Switzerland was also involved. Maybe London didn't have enough, or maybe London was going through Switzerland or something like that. Maybe they owned gold through the Swiss, and a lot of it was going through JFK. Most of the gold imports in April, May, and June during that quarter went through the JFK airport, which is Comex rules. I think it has to be within 100 miles of New York City. So all that gold coming from Switzerland, maybe someone from London, was going to the Comex. That was a huge import boom of gold in just a few months. So yeah, it might have been an emergency.
Yeah, and Rafi, in your recent article that I'll pull up here, you also mentioned that you see something building in palladium, which gets a far less attention. So perhaps you could share what you're seeing there.
Well, palladium, I'm not a palladium expert, but I follow it along with gold and silver. They do tend to move together sometimes. So, I mean, I noticed in palladium that, I'm looking at this chart since somewhere around July, it looks like. Since July, palladium has moved within a very, very tight trading range. Something that I've never seen a coil this long. Usually when a security or a commodity coils like that, there's a very tight bid call spread, and I'm not talking about like on a scale of a minute, but in a scale of weeks. Like if you reach a certain price, it's knocked down, then it gets tighter and tighter, which means there's a big fight going on in the price. And I can't figure out exactly what is special about palladium that is giving it a 27-week long coil like this. But usually when they break, they first break to one side and then they break to the other side. Usually when a coil breaks, you see it go down, sharply for a week or two and then reverse, or sometimes it goes up sharply and then reverses down. But what I think is a lot more interesting than palladium and is related to this coil could be platinum. Because platinum, I think for the first time in 21 years, first time in over 2 decades, excluding the 2008 crash, I think we have a platinum golden cross, or you could just call it a platinum cross, where the 50-day moving average, the 50-week moving average moves above the 200-week moving average, and this is the first time that's happened in 21 years in platinum, and platinum has been severely underpriced for a very long time. So I think the coil in palladium and the price action in platinum might be related. So they're both platinum group metals, and they're used for similar industrial purposes.
Yeah, will certainly be interesting, especially platinum. I believe the all-time high was 2,300-ish a week or two before Bear Stearns collapsed. JP Morgan took over, and the price plummeted, which I'm sure is just a complete coincidence. But Rob, amongst other things that I'm sure mean absolutely nothing and people would be wise to throw in the conspiracy theory bucket, what do you make of this massive one-day addition to SLV and the Silver Trust? It looks like it was about 20 million ounces. Now, keep in mind, this is the weekly chart, but if you look at the one-day chart, that was the biggest one-day addition going back 2 years, 5 years. I think if we go back 10 years, we can find one day that was bigger than that. But any thoughts on what we saw last week on that one?
Yeah, so the way that's supposed to work, and if you go back to my conversation with Nick Barishev, who's president and CEO of BMG Group in Canada, runs a gold fund, and has read the authorized participant agreements for SLV and GLD. He thinks, based upon his reading of that and his understanding of the market, being a gold fund CEO, is that a lot of the gold and silver that go into the GLD and SLV are leased and they're not owned because their fees won't support them purchasing and holding that. So you can have a big influx of silver into SLV, and that may reflect some of the transactions that people, purchasing shares of the SLV, whether or not they actually have that silver or the GLD has that gold. We don't really know because there's chain of title issues, and that's endemic in the gold industry. There's no way to tell that someone holds a bar that someone else doesn't have a claim to it, really, unless you audit it end to end every holding facility and put all that together. And we know that doesn't happen. So when I see something like that, it indicates there's a lot of demand for silver. But what I really want to know is who really owns that silver. Where did it come from? So those are my questions.
Well, I think that's fair enough. And Rafi, you looked like you had something to say there, perhaps? Comment on that?
I was just recalling again what happened on April 20th with oil. When oil went to like negative $35 a barrel, and then you had this U.S. oil ETF, USO. Something happened. It stopped tracking oil. It just totally backfired. And if we can see oil go to negative $35 a barrel, and in that time, gold was also selling off, but much less than any other commodity. Gold and silver were even though they were crashing, they were much stronger than let's say oil or wheat or any of those agricultural commodities on that day. If we can see that, then we can definitely see ETFs like GLD and SLV go the other way. If physical demand for gold on a failing dollar becomes a serious issue, these ETFs are not going to help. They'll help track price, and if you want to play options or leverage to get more dollars in the meantime, they'll work for a while. But like when there's a real crisis, they're not going to do much.
Yeah, I think that makes a lot of sense. And again, you guys both talked earlier about maybe the metals happens when there's an overt fracture in the dollar. Gee, sure seems like these guys are trying their best to facilitate that. Because let's say 10 years ago, if we go back to 2011, let's say that I told you that a former Federal Reserve chairwoman was now running the Treasury, Fed balance sheet bigger than ever. God only knows what they have planned this year, but to the degree that now a former Fed chairwoman actually says this.
But right now, with interest rates at historic lows, the smartest thing we can do is act big. In the long run, I believe the benefits will far outweigh the costs, especially if we care about helping people.
Well, first of all, I'd like to applaud that eloquently placed demagogue at the end. So if you don't act big and destroy the currency and steal money from the middle class that's working, you're the bad guy. Leaving that aside, isn't this the same thing Bernanke said back in 2010? We were supposed to act big then. They've been acting bigger and bigger. They set a new record for biggest act ever last year. And now, whether there's independence, not independence, now you have Powell who's already acting big, and now the Treasury is talking about acting bigger. So, I mean, is it possible that we will see that overt Lehman-like fracture of the dollar this year? Rob, you want to take that one first?
I don't think we'll see it this year, and there's a couple of reasons why. So really quickly to address what Ms. Yellen said, she's talking about monomonetary theory. And that's, if you've looked at the amount of money supply, M0 and M1, it's basically gone hockey stick. So when you see hockey stick formation or vertical formation in monetary creation, in the past, that's always led to the death of currency. So I could see people saying, yeah, we're getting closer to that stage. However, what happened in 2020 were a bunch of shutdowns, not only in the US, but around the world. So a lot of the flow of currency, the velocity of currencies had slowed down. And I think that temporary deflation had basically saved the monetary system or extended it out just a little bit. I don't think it saved it long term, but I think it gave it more time. And I think they've already got their replacement system ready. They want to go to digital currencies. They've trademarked the digital euro. The Fed has put together FedNow, which is direct payments to people, digital format. So and the IMF has laid out this plan in 2015. I've documented this on my channel. And the BIS has concurred with this. So all these supranational groups and the central banks have all come out and said, we want to go digital. They're not ready to quite go digital yet. Their frameworks aren't completely in place. There are some issues with the current digital currencies. They've got to get those worked out. They cannot let the fiat currencies die yet. They can't let them. They're going to put them on life support as long as they can until they're ready to flip the switch. When they're ready to flip that switch, they'll let the currencies completely die. Working against that, of course, is the internet and people, social media, deciding that, hey, that's one thing. Hey, we believe that the currencies are weak, and I won't limit it to the dollar. I say the dollar, the euro, the pound, even the Chinese yuan will come under some pressure as well. All of them will. And so the people are going to start looking for alternatives. And I believe in terms specifically of the dollar, you've had all these other countries getting out of dollar denominated trade and dumping treasuries and things. So they're exiting out, but it's a fragile balance. You don't want to exit out too quick and crash it, because if China exits out of the dollar and dollar trade too quickly, they've got all those treasuries, and they don't want that to blow up in their face. So it's like people are tiptoeing around the fact that they know the dollar is going to die, while you have the Western central banks trying to keep the dollar alive just long enough to get the digital currencies out there. And it's literally a tightrope. And I don't know if they're going to be able to hold it together until they roll out the digital dollar and the digital euro and the digital yuan. I know China's leading the way in terms of digital currency. Europe is right behind, and the US is right behind. But they're trying to keep it alive. I think for an individual perspective, your hedge is gold and silver, because if something like Rafi said earlier, if the dollar dies, if we have a banking crisis, a black swan, and it ends up killing the system, and they don't have the digital currencies ready, it's going to be pandemonium. And that's where you're going to want to have your gold and silver, because that's your value. That's where you're going to survive that sort of situation.
Rafi, if I can give you just the same question, slightly different twist, is Janet Yellen, the Fed, whoever else is involved in these things, are they going to go big enough to push silver past $50 this year?
I don't know on specific price targets, but yeah, it's very possible. one thing I want to say about Janet Yellen and these people that are high up and they have a lot of power and a lot of money printing tools at their disposal. You know, we tend to think that they have these grand plans and they know what they're doing. And this is where I part company from Rob a little bit. You know, I see things a little bit differently. That I remember something Julian Assange said in an interview maybe 3 or 4 years ago. And he was asked something along the lines of, what's the scariest thing that you noticed in seeing all these cables and seeing all these state secrets? And what he said was like, what scared him most was that there was no organized plan to any of it. It was just a cacophonous mess of power centers that are squabbling with one another. And the right hand doesn't know what the left hand is doing. And it's just this massive bureaucratic power machine that's totally confused with itself. So I don't think there's any central plan, or if there is, there's several of them from different power centers. But I don't think any of them really know what they're doing. And I think they've drunk their own Kool-Aid so deeply that they might think that they are absolutely powerful when they're not. But something is going to slip. And I think it could be this year. And I think the focus should be on food prices, because Rob mentioned something about a velocity of circulation, right? But you know, people need to eat. They need to eat the same amount of food they ate when they're not under lockdown. So that means that all the demand for stuff that they're not buying, all the demand for food, for let's say airline tickets, which they can't buy anymore, is going to go into stuff that they can buy, which is food, or they need to buy because they need to buy the same amount of food, whether they're eating at a restaurant or at home, doesn't matter. And when prices of food become obviously higher, and people see what's happening to their grocery bills, forget about the CPI. How much is it costing me to go buy food for my family for a week? I mean, they can see the numbers. They don't need the CPI to tell them this. And when it goes too high too fast, they're going to keep buying and hoarding. They're going to hoard, and they're not going to want the dollars anymore. And that's when you're going to have hyperinflation. And digital currencies are just going to make it worse, because the only thing that slowed down hyperinflation in Weimar Germany was the physical constraint on actually printing the paper money, which if it's digital currency, it's going to go even faster down the drain.
Yeah, it's like
I will disagree with that for one moment, because I think the digital currencies, now I'm not going to say that the digital currencies are going to be successful. I know I've disagreed with people like Alistair McLeod on this, and he's made comments on my channel. He disagrees with this, and that's fine if he does. I believe that the cryptocurrencies left alone in the current debt system would behave exactly as Rafi said. They would die faster than the printed currency. But the problem is they're not going to implement those in the current system. That's why they're not ready to implement it yet. When you tie together negative interest rate policy, you tie together modern monetary theory, which is basically print to oblivion, and then you tie together the digital currencies. What they're going to do is they're going to negatively discount the value of your digital currency in the bank. So if we go back to whether or not there's a global plan, if you go back to the position paper released by the IMF that's still on their website in 2015, which I've written about several times, they outline a plan they think they're going to implement. Whether they're successful or not, this is their plan. When they roll out the digital currencies and try to push out cash, they're going to discount your bank account electronic dollars by a certain amount. That's negative interest rates, not in the bonds, but in the banking system. And they think that's going to allow them to control the currency in circulation. Of course, the other tool that they have is taxation as well. And that is a popular Keynesian trope, which you can take money out of circulation by taxing it. You can also discount it through people's bank accounts. Whether that system works or not is to be seen, because they've never done it before. But that is their stated plan. And it is fully outlined in about a 50-page paper in the IMF. As to whether they can all implement this, because you do have different regimes, you do have different central banks. Of course, the commercial banks are involved in this as well, because they're the ones that get the money first. You know, I do think that they're squabbling over it, but I think that the world is sort of moving that direction. China has indicated they're moving that direction. The European Central Bank has indicated they're moving that direction. The US has indicated they're moving that direction. How they facilitate that, you know, that will determine how much chaos we have and whether or not this system will stick. I don't think it's going to last forever, but I think they're going to get something into place where they go those digital currencies and they try to manage it. Now, as to how well they manage it, I don't know, but that again goes back to why you want to have gold and silver. That's your backup plan, because I do think whatever happens in the fiat and the digital currencies, it's going to be very chaotic and not as smooth, you know, as we've been used to. I would say prior to the last financial crisis, leading up to 2008, it was relatively a good system with some issues here and there. As we accelerate to the end here, it's getting more chaotic. And I think when they switch over to the digital currencies, it'll get even more chaotic. And that's why I think you want to have the gold and the silver. And I'm going to keep saying that over and over. The gold and the silver is your shield. It's your protection.
Well, on that, we definitely agree.
Yeah, and I think one of the themes that you both touched on and are in agreement on that I've been thinking about a lot, where, yeah, things are manipulated. Yeah, there's a lot planned in advance, but I see it more, it's like a tie game in the fourth quarter. Nobody knows how this is going to go. I don't think the story is written, which kind of makes it fun when you can actually, get in there, and maybe that's what life is all about. Fellas, we have 9 minutes left, and I have a couple reader questions. So maybe we'll do a lightning round here. If we can, we'll just one person per question. If you can keep it 30 seconds or less. And also anybody watching in the chat right now, type in your questions and we'll see how many we get to. But Rob, I will toss the first one to you here again, and keep 30 seconds or less. To what extent do the manipulators have the ability to keep manipulating indefinitely?
They can try to manipulate indefinitely. Their manipulation tactics tend to work in the short run. They got to keep doing it over and over. There's a research paper I quoted months ago, written by somebody who had looked at the U.S. commodities markets for about 130 years. And I guess coined the term hammering. You hammer the markets and it keeps it down, but it comes back up. So the market will eventually overwhelm the manipulators. But in the short run, the manipulators have the advantage because they have the market data and they have the tools. So what you want to do is be long-term and outlast the manipulators.
Can I take a crack at that one?
Yeah, actually, I'll toss in a little bit. Question number 2 is similar. If the banks have unlimited funds to buy Comex contracts and sell at will, why would they ever stop? So take it away, sir.
Yeah. Well, so when we're talking about gold manipulation, let's take it from another direction. I mean, if we were on a full gold standard, the price of gold right now, according to, in accordance with the money supply, would be something like between $18,000 and $20,000 per ounce. So the fact that it's only $18.50 or whatever it is today, that's the big manipulation, and that's because there's very little demand for gold, physical gold, as a monetary medium, except maybe for the hoarders who plan to use it as a monetary medium when the dollar collapses, and central banks who, to some degree, in some countries, back some of their money supply. So when we're trying to blame the Comex for manipulation, it's small change compared to that big manipulation. And what's the limit? The limit is the absolute limit is the demand for gold as jewelry, which is the second biggest demand for gold. It's not monetary; it's jewelry. So if, let's say, the Comex, let's take an extreme example, manipulated the price of gold to $100 an ounce, then you'd have all these jewelers buying as many contracts as they could and taking delivery on them, and then that would be, that they'd arbitrage it back to around where it is now. So it's really the monetary value of gold that's being suppressed, not the industrial or the jewelry use. And that's the absolute limit, and it will break.
All righty, we're going to take one from the chat here. Joey from Seattle. Rob, maybe you could field this one. Why aren't U.S. Marshals arresting the bankers?
Well, that's a good question. I've asked this for a lot of people who have been in the industry for a very, very long time, both in gold and also the financial industry. And there are a lot of laws that make a lot of what they do legal, not necessarily the spoofing aspect that people are getting fined for, but a lot of the malfeasance that occurred in 2009 was legalized. Is it lawful from a constitutional sense? No, certainly not when the government's involved. But from a statutory sense, when they make laws that allow them to do things. I'll give you an example. FASB 56 is an accounting rule that was passed by the Financial Accounting Standards Board, I believe, which allows the government to go dark. They can report whatever number they want on their financial statements, and it does not have to be true in aggregate or each individual transaction. So there's now 2 books from the government. There's the transparent books that they don't show you, or the books that are real, and then there's the books that they're going to give you. So they can spend any money amount they want. Of course, Dr. Mark Skidmore from Michigan State University, Catherine Austin Fitts, former Assistant Secretary of HUD, documented what was 21 trillion in missing money is now 50 trillion. And now we don't even know what the next number is going to be because they went dark with FASB 56. Those are legal constructs which allow them to do it. Now, are those a violation of the Constitution and the requirement that the government is transparent with their finances? Yes, but until somebody takes that to the Supreme Court, it is what it is. And so you're not going to get that transparency in the spend, and they're not going to go to jail because they have a piece of paper that says that they can do that.
All righty. Number 3 on the list here of 4. Why are gold and silver markets on Comex allowed to trade what seems to be 100 paper ounces for every actual ounce when other commodities are traded at a much smaller ratio? I'll take a quick comment on that. I don't think it's that the other ones aren't allowed to. And when I've looked at this, most commodities seems to be the same thing, just to varying extents. Rafi, do you have a quick comment on that one?
Well, I would say that banking cartels have a vested interest in keeping the gold and silver price down, because if it goes too high, their money is sick. But they're not going to. Farmers are going to be the ones that are trading wheat and oat futures, and they're going to be trying to hedge their bets. So the banks aren't going to try to manipulate that so much with their money. But gold and silver, they will, because that's their business. Whether they know that consciously or not, I'm not sure. But I think they realize it, and which is why they're in there and they're dumping contracts. But even so, it's really small change compared to the real manipulation, which is gold should be $20,000 an ounce if you're on a gold standard. That's the big issue.
Well, it'll be wild to see whenever this stuff finally does lose their grasp of control. What numbers we get. My gut tells me they'll be bigger than I think. But anyway, we'll leave that there. And in the chat room, I don't know if you guys are watching this, but apparently Bob Hunter is on fire. So Bob, for you, I will ask Rob, what do you call a sheep that is religious?
Don't have a clue.
A Baptist, says Bob Hunter. So thank you, Bob, for lightening it up for anyone who's not feeling the silver price today. Although we'll do one last serious one before we wrap up here. Perfect question. What do you think will be the trigger when the banks, BIS, finally stop the manipulation? Will this be their choice, or will they be forced by a change in market conditions outside of their control? If the latter, what would that be? I'll go first on that one. I think they'll eventually just lose control. You guys touched on it before, where you got to remember, it's like the banker, it's kind of like that CIA gangster goon mafia mindset, but like when things go bad and they start turning on each other, and you're not dealing with people who are looking out for each other's interests. So I think the greed ultimately implodes upon itself, and one day you have a break when someone shows up for metal that they can't deliver. But quick thoughts on that one, Rafi?
I think it's food prices. It goes back to that, because once people can't eat enough food, what's financing all these lockdowns and why aren't people rioting in the streets is because you keep giving them checks and they can still buy food with it. But at some point that's going to stop, and people aren't going to have enough food, and they're going to get angry. And that's when this whole system falls apart. You need to give the masses their bread and their circuses. Right now we have, their dollars and their Netflix. That's what keeps everyone calm. But that's not going to last forever. And when people get angry, they will go out to the streets, and the entire system will be under basic threat, and they'll be forced to back the money, because otherwise the division of labor will break down. You can't have that.
Yep. Rob?
I kind of agree with both of you, Chris. I think it is kind of like the mafia. There are Eastern, Western, different institutions that are vying for power. Certainly China's wanting to rise now, and looks like they have the economy to do it. They've just been going gangbusters in a lot of ways. Of course, they have their own issues with their own banking system and some of their state-owned entities. But it is like different, mafioso families fighting each other for dominance. But the one thing that they agree on is that they need to control the markets and control the masses. And I do think the one thing that will end up breaking that, as Rafi said, is going to be shortages in food supplies, and where people can't feed their children. Because if you're a parent and you can't feed your child, you're going to do what you have to do. There's nothing that's going to stop you. And certainly we've seen that in some less fortunate countries, including one my wife came from in Cambodia, where the communists tried to basically subject them, and the people eventually, with the help of the Americans, of course, they eventually fought back. So I do think that we're in for a little bit harder times. And so beyond the gold and silver, you want to look for food security as well. That's a really good point by Rafi. But the whole world's not going to be able to do this. And so I think when it's going to go way beyond what we saw in the States. It's not going to be political. It's going to be, people's ability to feed themselves and take care of their families when they're going to put pressure on the people at the top, and when that system is probably going to break.
Yeah, and Rob, one of the things that's, it was a great answer, although even better than that, I know people often, it's easy to get overwhelmed by the things that are going on. Yet, fortunately enough, you've put together Solutions 2021. So for anyone who's hearing this and saying, all right, great, I get it, money printing, this and that, but what can we actually do about it? Could you just let folks know what you're doing on Thursday?
So on Thursday, we're going to be holding our second virtual conference. The first one we held was last August. This one's going to be a single day. It is free registration for anybody. You just go to this website. It's on hoppin.com/events/solution-2021. The link is on my YouTube channel for anybody that needs it. We'll be talking through with a lot of experts, including you, Chris, on what to do when the dollar dies. That'll be my session with you. We'll be talking to Fernando Aguirre, who is a survivor of the Argentinian currency crisis. We'll be talking to a couple of different precious metals dealers. We'll be talking to Daisy Luther, who runs the gigantic website, The Organic Prepper, about other types of preparations like food, like Rafi talked about, and other ways to secure yourself in the coming chaos. And then we're going to have, as Chris is highlighting here, probably his favorite part, the after party, where for 2 hours, we're just going to sit and talk. So if you want to come express yourself, ask questions, tell people your story, come do that at the after party. I hear that Chris is going to be playing to Spring Cheese at the after party and going to be giving a concert. So I look forward to that.
I not know that was on the schedule, but we'll see how all that shakes out. And Rafi, so people can be prepared. I know Rob has one of the smarter conferences around, but one of the ways you could be up to date is going to the Endgame Investor. And if you could let folks know what they get there.
I do a daily market commentary with an extra oomph on the weekends. Weekend review. I review Comex numbers. I review issues of backwardation in contango. We go through the technicals and we go through the fundamentals. And I also very closely follow the bond market. This was my last letter that I sent to subscribers, so you get a little idea of what I write. And I have some good emphasis on the actual primary markets in U.S. Treasuries and how much has to be sold per auction now that the federal deficit is like $5.3 trillion. And we go through the math. Like-minded people, if you're on lockdown or you can't leave your house, it's just good to talk to people with common sense, which is why I'm so glad to speak with you, Chris, and with Rob. And, it's not easy on lockdown, and common sense might be the only more commodity that's rarer than gold these days in so many ways. It's good to talk to people like you, and join us join my newsletter if you want to see what I'm writing for a 2-week free trial, no charge, and see what I'm doing.
Yeah, and I'm glad I just saw this because we talked with Andrew McGuire the other day about Comex options expiration, which is today. And I'd love to discuss this further. We're actually opening an options club here at Arcadia, so it'll be great maybe we can get you involved there, because I think that's one of the times where there are some clues of what might happen, and perhaps we'll dig into that in a future episode of the show. So thank you guys again for being here. Again, the links to both of those in the description field right below. Go there, click on it, get the Endgame Investor, read that, and then come join us at the conference on Thursday. Rafi, Rob, thank you so much for being here, and it'll be fun to follow how this plays out throughout the year.
Thank you, Chris.
Thank you. Thank you, guys.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network. Especially because he pointed out that on Tuesday, apparently, we had 20 million ounces on one day allegedly deposited into the SLV and the Silver Trust. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight, part 2 of my call with Andrew McGuire, where we dig in how you can sue JP Morgan, or at least some thoughts along those lines of how you can recoup some losses he does think some class action suits, even bigger ones, are coming. We dig into a bunch of different intriguing stuff in the silver world that I think you'll want to stay posted with. Although real quick before we start, I'd just like to let you know how this video came your way tonight. And it is thanks to our friends at Bluestone Resources. Obviously, with Joe Biden in the White House, Janet Yellen in the Treasury, and insane amounts of money printing coming soon. If you're looking for gold exposure, this is run by Jack Lundin of the Lundin family. Going to get him back on the show soon. You can see at their website, they had some nice drill results last year. So again, should gold continue to soar, as I think that it will, certainly Bluestone, a company that you want to take a look at and be aware of. There will be a video to Jack Lundin of Bluestone at the end of tonight's clip with Andrew McGuire. So just hang out. It'll be coming right your way. And with that said, here is today's call.
These conditions are ultimately unprecedentedly bullish for gold and silver as predatory house accounts seek to load up on physical ahead of widely anticipated at least 20% gold price rise into the end of June. And this will likely be the revaluation point, and gold will be priced in physical terms. Hallelujah.
Well, I think people are ready. Although, Andrew, what would you say if we took everything you just said, yet Silver Chris re-raised you and said, if we tack on, this just came over late last night from the great Nick Laird of Gold Charts Are Us. Go sign up, everybody. Gold Charts Are Us. Plug for Nick Laird. I love his service, especially because he pointed out that on Tuesday, apparently, we had 20 million ounces on one day allegedly deposited into the SLV and the Silver Trust. Although to put that in proper context, back at the 2-year, you can see that that's not like a couple bars lying around the closet. I think that would be a one-day record. Possibly, okay, it looks like maybe there were a couple other days in the history of silver that were more, but what do you think about that one? Again, we can see here a big number they put up there, Andrew.
Yeah, I mean, silver, that's our baby, isn't it, really? And 600 tons, I mean, come on, Chris, this is la la land. I mean, it's impossible. It's just not possible for that to be physical. It's just not available. I mean, that is as much as the entire UBS in fact, it's probably more at this point than the largest store of physical silver, which is not all for sale, but it would be sitting at UBS. That is it. There's nothing else. And that, as I say, even that 600 tons is not available. And in fact, you try and buy anything off them, and basically it's just not available at this point. And silver at the refineries, we're still looking some months out for signs to complete orders. So implausible. And I think, you've raised silver. I mean, in fact, come on, let's look at this. Let's look at this, Chris. I see this now as a history book, because I think what we're looking at now is going to be all the work you've done is already encompassed in here. And I think, yeah, you can maybe add some more to it, but essentially in the rear view mirror, the timing of this book is amazing. Look, we've talked about Basel III. Silver will be a massive beneficiary of the unwind of undeliverable unallocated gold. This is an official move to revalue gold. Paper silver positions will also have to be closed. We talked about GLD. What about SLV? Totally impossible. We just talked about an impossible situation. We also remember these hundreds of tons that were flowing in, probably 200 tons a day at one point in March. It is impossible that this was physical silver. These were silver credits, as was GLD, just gold credits, i.e. unallocated positions. This is extremely bullish for silver, and why every major bullion bank is loading up on physical silver. And as a result, dips will be competitively jumped on by both good and bad actors alike. Now, it's important to also keep in mind that this SLV represents, it's important to remember, it's unallocated silver credit, not a physically deliverable price. So we're going to evidence, I mean, we're talking 100 to 1 in gold. It's probably 500 to 1 in silver. I mean, this is, these are the most leveraged positions on the planet Earth. These are the banks that are valuing silver right now at 35 bucks. And I'm talking about right now at 35 bucks. Do you think they've got a single ounce for sale? No. The paper positions they have that they've been controlling have simply because of position concentration, where they immediately snap up anything in the spot market that might be deliverable and put into the hopper of the refineries. Now, I think once silver closes the technical gap, and I think this is an important level, because I know from a wholesale market perspective, I know that a lot of the first year banks are looking at this. You get above 26,225, you're going to see a gap close pretty close to 35 bucks. And look, it's going to take no prisoners once you get there either, because it's going to be 50 bucks pretty soon after that. As soon as we see $30, it's going to suck in a massive amount of sideline money, which is going to compete with these insiders who have a very long physical gold position, the silver position. Now, as I say, we're 100% certain that these actors you're talking about are filling their boots with all the physical silver they can, and they are busy taking delivery of all physical silver on offer so deep below this fair value. It's just a no-brainer. 25 silver, give me a break. I mean, the upside profits, even in the March contract, are huge. In fact, I mean, you're an OPEX guy, right? You understand, but you're an OPEX trader. You understand the options market. And you only have to take a look at the structure. It's so blatantly obvious that the house at no point needed a price 25, a sub 25 silver price, and if it had, that would have moved into backwardation, potentially putting SI in the crosshairs of even larger size delivery. Look, we're not alone in seeing dips in silver as an actionable physical buy.
Well, I appreciate that. And actually, we'll come back to options in a moment. As I know you mentioned, I've been lazy and forgetting each month to look at the option board before option expiration. But this month, I want to be ready. So perhaps we can dig into what we can ascertain leading up to that. But something I'm so excited about, I can't even wait any longer. So here we have criminal enterprise, JP Morgan. And in terms of, all right, maybe we can or can't affect the silver price by just letting investors know that the banks are running a Ponzi scheme that's set up for the inverse of It's a Wonderful Life, which we'll leave that aside. But what we can perhaps influence is the legal process here. Now, one thing I'll throw out there to begin, I forget who it was I was talking that mentioned this, but saying something to the effect that JP Morgan will never go, it may have been you even, that they'll never go to a courtroom because they'd be subject to the discovery process and God knows what else you would find in there.
Yeah.
So you take that a step further, but here's what catches my eye. JP Morgan settles lawsuit that accused firm of spoofing precious metals. All right. So the suit by Daniel Shack. Any chance you've been in contact with him or have ever met him, Andrew?
No, I haven't personally, no.
Well, I'm going to see if we can get in touch. I'd love to talk with him because here, settles lawsuit. That's an interesting precedent because while this article does not say exactly what the settlement was, basically, these guys went to JP Morgan, said something, and JP Morgan said, here is your check. I've asked a couple legal friends, or maybe there's a lawyer watching in the crowd tonight, but basically 3 plaintiffs had accused JP Morgan you know, and by the way, long denied, JP Morgan, which declined to comment, has long denied engaging in spoofing. So basically, this sets a precedent that anything JP Morgan ever says is at least worthy of further examination. But again, down here, these guys went with some case. They got an agreement. So based on what you know and have seen, I know there's a couple suits out there, but what's the next step? I'm happy to spearhead something or at least pass along information. But for the people who were stolen from, what do you know there?
Well, I think that what you've just really drawn attention to is the fact that somebody has gone and lifted the lid enough to spook them to want to settle. Now, I think that there, as we said before, there is no reason that an infinite number of class action suits could not be sprung up at this point. You've got enough here that any good lawyer could put together a class. And there's enough people who've been rinsed over the years to join that class. And ordinarily, you would maybe get 10, 20 cents if you were lucky on the dollar, and the lawyers get rich. In this instance, you've got admissions of criminal, well, you've got the regulators talking about criminal organizations, and it's going to be very difficult. And I think in each and every case, I think you'd find a settlement before you even got to the court steps. Because, as you say, it's this discovery process. You cannot, in a court, the forcing of that discovery process would lift the lid on not just spoofing, it would lift the lid on the kind of evidence that we're providing, which was, this is where the gold price, silver price will be on the next day. So really, you know, it's a question of, you know, I hope somebody is watching this and sees the potential. A good lawyer could easily put this together, and you would instantly have enough subscribers to come in on that, participants to come in on that class. And it really, in this case, because it would probably be settled without many legal fees at all, I think a series would have to be, probably non-disclosure clauses would be put on, but there'd be a range of settlements popping up, and each one would not be revealed, but there'll be a lot of them. None of them will ever get to court. They have to be settled. However, this bank can make $1 billion in a trading day. So perhaps not in gold and silver anymore. Again, now we've got this situation, this put under the market, and to me, that's never been there before. It never ever been there before, and it's only because they've screwed themselves by making themselves pretending to be a physical market, and people simply coming and saying, "Well, I can't get it from a refinery. I'll come and get it from you. You better know." So they can't price it at that price. So this is the only condition. We've never seen this condition in the history of the Comex before. It wasn't designed as a delivery market, but it's kind of got themselves in the squeeze now, and the Comex will be grossly affected, hugely affected by Basel III rules too, because obviously you can't have a spot price that is different, a physical price that is different to the futures price. And so the spot price will have to be, because we're having unallocated contracts converted into physical, so the spot price will be a physical price, and all of a sudden you've got to have exactly the same price in the Comex. So it's really, and the over-the-counter market is 10 times larger than the Comex. I think we have a solution here. I think these guys are running for the hills. But I think for those people that have been hurt, and to recap many of the things that went on in here, should go and get a settlement out of these guys. In fact, they've got their arms out saying, just let us write you that check, because we can't let you look under the cover. And I'm sure there's, unless somebody refuses to actually accept that and continue just for the sake of getting discovery, and refuses, no matter what the size of the settlement, well then, okay, then maybe we would see that come crashing down. But I think whatever it is, you know, start to getting into $1 billion, start getting into big money. But what I'm saying is, go grab your money back, go buy silver, and then, hey, you know, you've won anyway. It doesn't matter. These guys are bad actors. They're criminals. There's a lot of criminals in this world. Let's move on and be positive.
Yeah, and if there are any lawyers or experts in that field watching who have some insight there, you can email at arcadia@milesfranklin.com. Last one, is there anything you can point us towards here to look at the option structure? So if we have option expiration come in next Tuesday,
yeah,
I want to be ready for this one. So what can we look at that can give us any insight into which way the price is going to be rigged? And I might add, just before I turn it over to you, that this isn't my opinion, and I actually have some weird hobbies. I actually read some of those settlements where the former JP Morgan traders confessed, and in one of them, they talked about front-running the options, driving it. Basically, they're selling insurance policy and then lying about the fact the house is on fire. But how can we outgame the spoofers next week? And again, not legal financial trading advice, just...
No, exactly. But I think what it tells us at this point, what it tells us, and again, we'll know even more on Monday, but what it tells us at this point is that for silver in particular, as I say, at no point has the options market suggested sub 25 is going to be beneficial for the insiders. It is really, I think 26 right now looks more magnetic. But I think it's going to be difficult because we're only talking about 3 trading sessions away, and then but silver, as you know, has at no point since March moved into backwardation. It is running at up to 30 cents. Currently 10 to 12 is about, never drops below 8 or 9 cents contango. And the reason is because it has become the market. And I think what they're trying to avoid is any form of backwardation to be attacked. So to me, the option structure, I don't know if you see the same as me, but I see right now, really 26 is more magnetic. 25, they really don't need it below 25. In fact, I think it would actually not behove them to have it below 25, simply because there's a lot of wholesale interest that in the spot market that would be competing against them. And I think that we further out the curve, we're seeing some lightening up of positions all the way up into 30, seeing some lightening up of resistance. So I think we're at an interesting point here. I'm not telling everyone go out and buy silver or buy the dip, or I'm not saying any of that. But what I'm saying is it would not suit insiders to have it below that level.
All right. Well, we'll look forward to the fireworks next week. Andrew, and wrapping up, any updates with Kinesis? How are things coming along? Things people should know?
Yeah, look, I would actually, in fact, Tom Coughlin, CEO, just gave a really good update on Kinesis. I really would invite everyone to hop on the Kinesis website and catch up with the Kinesis 2020 year-end update and pretty much what to expect. I mean, if you look at that, some of the detail there, and I think if you scroll up to page 12, I think you're going to see, look at the increase in trading volume, and I think you're going to see, look at that. I mean, we're talking in the region of over 360 million traded just in December. It's really catching on. Digitizing gold. I mean, everyone's talking about Bitcoin, everyone's talking about cryptos, but really when you're talking about digital gold, you're kind of attracting the people. It's not a crypto. It's what it is just digitized gold, not just digitized gold trading on the blockchain. So obviously, and if you're sharing the yield of those transactions, it's going to attract a lot of institutional interest as well as everyday interest from people. So, I mean, we're talking about the report. If you look at Tom's update, we're looking at the release of the virtual Kinesis Visa card. There's the iOS and Android mobile applications. new platform interfaces, the new Mint integration into the platform. These functions are becoming simpler and simpler. We've had massive back-end development in the EU and the UK banking card program, the Indonesia projects, banking integrations, which you're going to hear a lot about soon. You'll soon be able to trade Kinesis in almost every single currency seamlessly. Look, there's so much more. I mean, really, I just want people to come and join us on this journey, because it's not going to cost you anything, and yet you can just use this as a payment system. So please go and have a look, and come and be part of the solution, because we are all part of the solution.
How are we looking in the US? I know they stick silly regulation everywhere. And I know you guys have spent a lot of time digging through the damage that government does. So how's that looking right now?
Well, I think, I think really there's nothing to stop this being a full global currency. I don't see any obstacles along that route. We are KYC'd. We are, I mean, we've got the wind at our backs in this situation, because we are actually, we adhere to regulations, and really, but all we're doing here is providing an alternate monetary system to the fiat system, and also at the same time having 5,000-year-old gold, equally the even more ancient silver, backing each and every transaction, backing and having that gold and silver in your name. Sometimes I know that some of my family members here keep buying KO. They never spend it, but I think it's important that you do actually use the system and then share in that system, because your bullion that you own is never going anywhere. If you can draw that bullion down at any time, it sits in the vault. So, it's something, I think, to understand how it all works, just have to hop on, and there's people there will answer your questions. Any granular questions you've got can be answered live on chat.
Thank you again for sharing this update on gold and silver. Folks at home, go contact your lawyers so we can sue JP Morgan, have a big party, and we'll look forward to doing this again next week.
And take this book with you when you go.
Yeah. Well, I thank you. Thank you for being a part of that one, Andrew. And if anybody does want to pick up the book, link in the description field below, available in audio and paperback. And Andrew, with that said, I guess since we're a little bit late this month, who knows which felonies JP Morgan will commit by your next appearance in about 2 weeks. So thank you for being here, and we'll catch up soon.
I think there's going to be a scramble. It's going to be exciting. Thanks, Chris. And I look forward to the next one.
You are watching the Silver Squeeze 1-year anniversary, a look back on the unresolved issues in the silver market here on Arcadia Economics. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on in. An exciting day in the silver market, financial markets in general. Fed meeting coming up in just about an hour. We're going to be doing a live stream for that one, covering that event. Although obviously we have this GameStop situation going on. Been getting a lot of comments. Could we see something like this in silver, which we'll dig into today real quick. Our sponsor for today's video is Silver Elephant, that has some new drill results out. You can see there 4 meters grading at 393 grams per ton silver and 518 grams per ton silver equivalent. I'm going to record a separate short video where we'll go through that. It'll be coming your way in just a couple minutes. So lots going on today. And again, you can see the silver price, quite a divot. Actually got a little lucky, bought my options down there today. Worked out in my favor. And in between that, I've been reading comments about GameStop, which you've probably heard by now, that basically there's a group of investors on Reddit that realized there was a short position. And basically there was a big squeeze here. And what is interesting is you saw in a very short period of time, here is GameStop. Let's say there's January 11th. So 2-3 weeks ago at $19 here on the 7th, around $18. Now up to $340. People were talking about it yesterday when it was, let's see, where is yesterday's price? When it was quite a bit higher. But then you see today up $193, $194, showing what can happen when you have a short squeeze. Wild, violent moves are possible. And as I woke up this morning, I was checking some messages, and people were saying, well, what about if these same guys who were looking at this knew about what was going on in silver, which I've always thought something like that was really just a matter of time. Here is the group Wall Street Bets. I'm not a regular Reddit user, so I'm just learning on the fly as we go here, but to the degree, it's very interesting seeing what is happening here. And that was kind of what I always imagined with the book, The Big Silver Short, where we dug into this situation where it just seemed to me that it's like, there's going to be some day when people find out what's really been going on, how that comes out. I didn't even know there was a Wall Street Bets, but when you have a situation like that, eventually enough people find out and there's a break point. I don't know what that will exactly look like, but to the degree that a couple people were tweeting, sending messages on Twitter, asking if there was a particular thing I would recommend. I would say if somebody is new to the short position saga in Silverland and really wanted one specific thing that you could take a look at that I think would raise some questions that I've not been able to find the answer to. I don't know anyone in the financial world that's been able to find another answer to. And let's see if we can get that page loaded there. But there is a video. Let's see, I believe it's here. The Silver Manipulation Smoking Gun. So you can Google that or go on YouTube, which details really the bizarre sequence of events that happened in 2008 when silver was rising as banks and mortgages were failing. Then you have that Bear Stearns JP Morgan deal, which we had limited information about for a long time until Bart Chilton revealed much of what happened in that interview he did shortly before his passing. There's what the thumbnail looks like. So if you Google, hopefully you can spell a little better than I can these days, but Silver Manipulation Smoking Gun. I would say if somebody knows nothing about what's been happening, watch this one, because the basic premise is that Bart Chilton, who was a commissioner during the CFTC's investigation into silver manipulation, really confirmed a lot of what was happening in this bizarre situation where price of silver is rising as money printing is soaring. And then right at the same couple days after the JP Morgan Bear Stearns deal, where Bart confirms that they did take over a position that combined was over the allowed limit. He gave them a waiver to reduce that. He was furious when a couple months later they had come back and increased it. And this is the same time at which silver is falling from $21 to $9, in the face of which the people who really buy silver were buying more strongly than ever, to the degree that you had silver dealers reporting they thought they were going to go out of business because there was no inventory anywhere in the world as the price is falling about 60%. So laid out quite a bit more eloquently here. But if there is anybody who watches the show that is a Reddit user and you're wondering what I would suggest to share there, so that would be it. Alternatively, there is the book, The Big Silver Short, which is a little bit longer, more detailed, but I've always wondered what would happen if a lot of hedge fund managers or someone with bigger pockets than myself was aware of what was going on. Excuse me. So there is The Big Silver Short. You can get the audio version of that at our homepage, arcadiaeconomics.com. And lastly, just something to think about. So here, just pointing out again, that we have these markets where here in a matter of a couple of days, I understand there's different reasons, But here from 18 bucks to 334. So I'm going to ballpark that. That's a 40 bagger now, because 10 bagger, no, 20 bagger, I'm sorry. So 10 bagger would be 180, then 100. So let's call that about a 20 bagger in 2 or 3 weeks. But it's not like this is the only time it happens. Here, if get my Tesla chart up here. Tesla, let's go back to September of 2019, right before the Fed swap lines. You see 48. So 10 bagger would be 480. So almost a 20 bagger in Tesla. And then you have Bitcoin here. Another asset that some people turn to in times, or I don't know, I guess I can't say in times of chaos, but I think that some people who are concerned about the paper currency thing are looking at Bitcoin, which if you go back here, let's see, in 2019, well, you got probably too many windows open, but you can go back and see that a little bit more than a year ago, thing was trading about 3,000. So 10 bagger territory now, went as high, maybe 12, 13 bagger, depending on where you want to mark it. And I point this out to the degree that it's like this just is kind of becoming normal. And then you have silver, which has a situation more glaring than any of these. And not only is silver still only half of its 2011 high, but it's half of its 1980 high. And I would say that the people who actually buy silver, you know, it's worth pointing out that, yes, there's different mindsets, different people focusing on this and looking at it. But I would say the people that actually go out and buy physical silver usually do so when they get scared off by what the governments are borrowing or what the central banks are printing. And you've had that. I mean, in 1980, we didn't even have quantitative easing. And now here in 2011, we had quantitative easing. Apparently it didn't work. And then now we've blown out, I don't want to say we, it's not like you and I were part of this catastrophe, but basically the Fed has blown that out in the past year, blown away by multiples. The balance sheet was at under $1 trillion in pre-Lehman, went up to 2 and change. Then last year spiked up to over 7. God only knows what it will be after a couple months, let alone it could even be bigger in an hour from now. Again, hit that subscribe button and notification bell, and that way you can join us for some live coverage of this Fed debacle, whatever they have planned. But you add all that together, and now Janet Yellen is saying that, Janet Yellen, who's now in the Treasury, and is saying that the Fed and the government should act big with stimulus. So basically saying we've already blown past hyperinflation, but now that they should act big, and here's silver, half of its 1980 high. So again, I can't tell you the exact future, but if there's ever been something that has been primed, I don't know if there's anyone on the Wall Street Reddit's group watching, but in my opinion, I'm not telling anyone else what to do, but if there's ever been a situation more fitting for something like this, I would say even more so, because yeah, we talk a lot about what would silver do, what's its fair value, but let's say it experiences and goes Tesla, where it goes miles beyond its fair value. What would silver actually reach? Who knows? What if, who knows what will happen based just on the Fed meeting alone? Will be interesting to watch. So in either case, again, hit the subscribe button, the notification bell. I'm going to be back shortly with an update about Silver Elephant and their new drill results, which is also in the description field below. And then we'll be hanging out for the Fed meeting together, and I'll be looking forward to it. Thank you, as always, for joining me, and I will see you soon. You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Hopefully I am coming through loud and clear this time. I had a false start. There we go. Looks like we are all set for the Fed press conference, doing some live coverage here with you today. And there is the news. Let me pull it up. Fed leaves the key interest rate and asset purchases unchanged. But just like on CNBC, today we will go through the news. We'll watch the markets as they react. I can't even imagine what's going to happen in silver after what we saw earlier today. And I was having a conversation with someone about how things have gotten so distorted in gold and silver pricing that even if you know what the Fed, even if you knew the Fed was going to launch a new quantitative easing package, you still almost wouldn't have any clue what is actually going to happen to the price of silver, because it seemingly continues to be spoofed at any time, any place. But anyway, we will cover and see what happens. We'll get a refresh there, but silver almost back to flat on the day. And as you can see here, Federal Reserve leaves interest rates and asset purchases unchanged. So let's see what happened here. And by the way, I will again mention this is a live call. So get your questions in there. And I'm going to pull that window up in a moment. And, but yeah, send your questions in and we'll field those. There we go. I see it. So as we dig into the statement, well, give me a second. Got a couple windows up here, but yeah, we'll dig into that statement. And again, let's get this off the screen. Send in your questions and we will start getting to those shortly. But Federal Reserve kept its foot to the floor Wednesday in terms of the help it is providing for an economy that central bank officials say has slowed down, yet is still at all-time highs, I might add. And we'll take a look at how the bond market is reacting to this as well in just a second. In terms of providing, they say it's slowed down. So I will say that would be a key phrase. The fact that they think it's slowed down. I mean, obviously anyone that reads Austrian economics and has broken through of the Wall Street spell knew the economy has been slowing down for the last 15 years. But when you hear central bankers say it's slowing down, that means there's more money printing on the way. Consistent with market expectations, the policy-making Federal Open Market Committee said it was keeping its benchmark short-term borrowing rate anchored near zero and maintaining. Wait a second, weren't they in the last meeting? They were talking about tapering. That was the reason why gold and silver got hammered then. Now it's back to zero. I guess the taper is off. And maintaining an asset purchase program that is seeing the Fed buy at least $120 billion a month. All right, I'm going to get, let's see, 12. I'm going to get 1.44 trillion over the year. Let me check my math. But if we have 120 times 12, thank you, Mrs. Parks, for those third grade multiplication tables. And so that's 1.4 trillion over the year. Keep in mind that former Fed chairwoman Janet Yellen, who's now running the Treasury, has said that it's time for the U.S. to act big. So if we were already on a pace for 1.5 trillion of hyperinflated dollars this year, and now the Fed is going to act big, I mean, we'll see. What are you supposed to think about that one? We'll get back to the announcement, although I do think we will be having a live guest appearance from the great Andy Schechtman, perhaps amongst others. So anyway, appreciate your patience. But I think we're about ready to kick in now. So At the core of the move to keep policy historically accommodative was an economy in which most sectors most vulnerable to the pandemic are taking the hardest hit. The pace of the recovery in economic activity and employment has been moderated in recent months. I wonder what's happening to silver as this is. Okay, silver is just sitting there doing nothing. I mean, this makes me want to buy more silver vol, which is not legal recommended financial advice, but pace of recovery has moderated. COVID causing strain. Otherwise left the statement unchanged. Fed took the rate to 0. So, oh, here we go. Though inflation remains low now, right, what planet you're on, investors worry that the Fed could start to taper the purchases unexpectedly. No. I'm calling BS on that one. Show me the investor that's sitting there worried that the Fed could start to taper purchases unexpectedly. I mean, they telegraph everything months before they do it. I can only imagine which banks get in on that before I find out. So if you find the person who's worried that the Fed's going to unexpectedly taper, please let me know so I can play poker against them or gamble somehow. It's possible. There's no one. No, it's not possible. Statement offered no new guidance. Fed officials remain cautious on an economy that has seen a 2-speed recovery. I love the car metaphors, like they're two-way gears shifting the economy, as if these guys like talk about they're going to tweak inflation. You know, it's 2% is our target, but it's only 1.88%. So we'll buy just the precise amount of bonds. I mean, it doesn't quite work like that. They can't even measure the inflation that's already happened, let alone anticipate it in the future. Under the approach, the Fed no longer will raise rates in anticipation of inflation, but rather will just tolerate the higher levels in the interest of a more inclusive recovery. Wow. I wonder how many copywriters it takes to come up with this one. In the past, jobs would fall consistent. The Fed would institute preventative hikes to stop inflation in its tracks. I don't see any preventative hikes coming in the near future. But what I could tell you is that Andy James Bond Schechtman has joined me on the line. And while he's logging in there, let's take a look at some of the other markets here. Let's see what is happening in bond land. I mean, essentially, the Fed said nothing, which is par for the course. But Andy, are you there? Can you hear me?
I hear you, Chris. How you doing, my friend?
All right. I guess we do not have Andy quite at the moment. Andy, let me know.
I'm here, Chris.
Andy is logged in there.
Chris, can you hear me?
Andy is talking, but is apparently muted. So we will get that figured out. And Andy, if you can hear me, feel free to join in anytime.
I do hear you, my friend.
Anyway, we'll dig back into the markets here. Let us
Chris,
see.
Can you hear me?
What has happened with the bond market? It was right around 1% and not much movement there. And so far, not a whole ton of activity in silver, sitting there pretty flat. So I guess this is the kind of thing that, I don't know, maybe I am the only one who thinks about this, but this morning you had silver go from 25.40 down to 24.80, below 24.80. Fortunately, I saw that one right this time, and I actually did buy some call options right there, which worked out well. Then it rebounds another 60 cents in about an hour or so. And then when you have the actual meeting, there's no reaction in Silverland. So anyway.
Can you hear me now?
They could hear Andy, although I couldn't.
I'm back, brother. Can you hear me?
Okay, well, give me 1 second. I figured out the issue here, and bear with me. But yeah, that just always strikes me as odd when you see, such wild movement earlier in the day. Almost have us set here to go. There was a workout video. I did buy the V-Shred Options course. Andy, are you there? Can you say hello?
Hello, my friend. Can you hear me this time?
Andy, I can hear you.
Fantastic.
Got us all set up now, so thank you for the audience for getting that cleared up. And Andy, we just had the Fed meeting. Like usual, they said nothing, but I mean, Janet Yellen is telling us to act big. So any thoughts on the Fed announcement and so far muted market reaction?
No, I mean, look, the blessing in it all is typically when the Fed speaks. Leading up to it, you see massive sell-offs, always in front of the farm labor report, or anytime they have a meeting, typically we see a sell-off. But the thing of it is that I think there's a growing awakening and awareness that they are running out of tools. They are running out of arrows in their quiver, I think, to continue to paint a narrative that is becoming increasingly poor. And so, no, I'm not surprised one bit at all. And I don't know what else she can say except to act big. And the question becomes, once you act big and start paying people money to not be productive, how do you ever stop that? How do you ever stop that injection of liquidity that keeps people feeling okay or wealthy? So it's these are interesting times, Chris. Very, very, very interesting. And I think the Fed really doesn't have much to say anymore, except we're going big. So no, interesting times for sure.
Yeah, well, Andy, in terms of other things that are going big right now, and I see one comment in our chat window there was about this situation on the stock GameStop, where apparently, and I'm kind of catching up to speed on what's happened as it goes along. So perhaps anyone in the chat room who has updated information can chime in. But basically, there was a short squeeze, and the stock went from, it was like $18 a couple of weeks ago. Then it got up to over 200, and today it's up like $200 right now. And it's interesting. I got a lot of Twitter messages and comments saying, "Hey, are these guys going to be aware of silver?" I don't know. It would certainly make sense, and just shared a video in the chat there of what I would share with the Wall Street Reddit crowd. Andy, I mean, doesn't this thing went up 20? I think it was about 18x. Tesla's gone up 18x, and Bitcoin's up 10 to 13x. And then you have the silver profile where it's half of the 1980 high. It's kind of interesting to think about what could conceivably happen.
Maybe you call me old school Andy. I know you like to joke about that a lot. And when I started in this industry in 1989, the Dow Jones was 2,100. And I'll tell you, I'm 50 years old, and I'll tell you, I've learned that the more things change, the more they stay the same, with the exception of the stock market. And you have a whole generation of people who are growing up believing that those types of returns are normal, that you see casino type returns, like slot machine ringing bells type returns. And granted, it is becoming more commonplace, but here again, ask yourself what would happen if the Fed hadn't been and stopped injecting liquidity into the system. They just completely let Mother Nature take hold. All of these massive gains would be exposed for what they really are, illusionary. And for the people out there who have made these types of gains, the issue, and trying to be completely impartial, I mean, take out of the equation that I and you believe so much as we do in metals, and I own a company that sells it. Honest to God, take that out of the equation. You got to be out of your mind to not take some of this stuff off the table and put it into something so massively undervalued that is so completely and totally needed and sought after in an ever-increasing green and electric and digital world. These types of gains are not natural. I mean, they're just not, unless the laws of investing and economics are being rewritten right out from under me. And, there is a fine line between being a traditionalist and old school and getting with the technological, age. I realize that has a lot to do with it, but, Mother Nature has her way of correcting things that get irrationally out of whack. And when you see these types of movements in a stock like that, it's irrational. It's a distortion due to massive money creation by the Fed, low interest rates. These things will change, and when they do, that's when you see spiritual experiences for people who have been indoctrinated and believe completely and totally that this is how markets behave. Because I can promise you, in the 45 years, the 25 years prior to the last 4 or 5, it certainly didn't work this way in my experience.
Well, Andy, speaking of spiritual experiences, I think the shorts on GameStop are getting a taste of that, because I have the chart pulled up, and on January 7th, it was floating around $18. And let's go back to the 5-day here, because it's about $42 a week ago. And then what is today? I believe is the 27th. Okay, so yesterday thing closes at about 150, and it's up 112.93% today. So after closing at 150 yesterday, which a week earlier was 40, a week before that it was 20. So now it closes at 150 and then goes up 114%. After closing at 150 is up $168.99 on the day. So 20, let's do a little quick math here. If we take 315 divided by 18, so that's a 17 and a half bagger in about 2 weeks. What can I say? I wrote the book on silver. I mean,
which should underscore something very important as it relates to the silver short position. When you go long on something, your exposure is limited to 0. You go down to 0. You lose everything. But only to the value of the long position. But when you go short, your potential loss is unlimited. And that's, if you buy silver and it goes to 0, no one wants it, that's your loss. But in this case, this can bankrupt people and completely take away everything that they own, and as it continues to spiral. And that would, when you magnify that by what the commercial banks have been losing in 2020 on their short position and what could happen if this were to take off, you can see in a matter of a day or 2 or a week how fast things spiral out of control when you see a massive short squeeze.
Yeah, and Andy, I believe we have the great Matt Card joining us. So while I welcome him in, we have a question for you from Carlos Danger. Andy, are you seeing a short-term run-up on physical silver premiums? And there's a follow-up question, but why don't we start there? Anything happening with the premiums right now?
Well, I'm so glad you asked that. So every week, I talk to my operations and say, what can we offer for a special for Arcadia? And his exact words to me today, well, first he tells me about some 1/10 ounce gold ox that we bought a bunch of. And he says, but you want silver, don't you? And I said, yeah, I don't want the gold 10th ox. He says, his exact words were to me, silver is getting sketchy. And so this is kind of what I've been saying all along, is that this is a marketplace. And in particular, when you see the amount of money out there, where the amount of money just made in cryptocurrencies alone dwarfs the silver market. I mean, many times over in terms of, what's out there. And if people wake up and start buying, what is abundant today becomes massively sketchy tomorrow. And so premiums will rise. Availability is now getting tighter, and it's happening, and it will happen, and it will accentuate. But it's the same thing, just like this short squeeze. It one day it's great, and the next day it completely changes. And so premiums are beginning to rise, but more importantly, product is becoming more and more challenging to get, just like that. And I knew it would, and I don't think we've seen anything yet.
Well, I think that says it all. Although, fortunately, joining me now is Matt Carr, a good friend of mine, runs his own fund and a lot of options experience, very familiar with gold and silver. So, Matt, thanks for joining on in. How's everything going with you today, my friend?
Oh, it's going well. Thanks for having me. It's an exciting day, plenty going on. So, good time to hop on a call here.
Yeah. So, Matt, you've seen the Fed announcement so far. We'll come back to GameStop. I'd love to get your thoughts on that. I know you've been looking at that, but any thoughts on the Federal Reserve?
Well, we're staying at zero as far as the eye can see here. So, this is remaining easy. No real changes in asset purchases. They kind of tightened the rhetoric on the economy slowing down its improvement, so kind of giving themselves room to continue with QE and zero rates. So pretty dovish, really.
Yeah, and are you surprised we're not seeing more of a reaction in the markets today? So far, again, interesting day in silver. We had this move, just plummets down, which seems completely natural, then rides back up. And Matt, I think I did send you a message when I bought some options here, and this one worked out well today. So maybe later on we'll dig into how you and I are doing some option projects and get some things up and running. But any thoughts on the silver reaction we see here?
Well, there was a big risk-off move across markets this morning. And you saw that in a lot of different equities. It certainly happened in metals. You timed your entry into that call option there in silver quite well, because there's been a bit of a reversion there. So that was a good move. But there are a lot of interesting things going on. I know when I just hopped on here, you mentioned GameStop. But really, it's not just a situation of shorts putting on squeezes. The IPO market is red hot. The SPAC market, special purpose acquisition companies, is hot like we've never seen it. And that's essentially a way for people to bring businesses, companies public outside of the IPO route. So there's all sorts of things happening in different verticals that are pretty aggressive.
Yeah, I mean, it's like on one hand, we sit here, we watch silver not move too much until it finally moves, but there has to be some break point. And it's interesting to see the combination of using an online chat group where people are recognizing things. But again, on some level, people taking matters into their own hands. Andy, any thoughts on that?
Look, Chris, I think that we're not buying silver. People who are buying silver to get wealthy are missing the point. That's not what we're trying to do, and it will take off. It absolutely, most certainly will, just based upon the supply-demand fundamentals. People taking things into their own hands should be mitigating their exposure to a currency that is being debased and destroyed right in front of us. And the market that is so immediate in terms of, it's almost schizophrenic in terms of how we see the risk on, risk off play by the market daily and hourly. I think it's more along the lines of looking at this from a macro perspective, taking a big picture. There are so many ways to make money nowadays by trading this market that has such tremendous volatility. You can really make lots of money. I guess what I'm saying, and in particular respect to your comment of taking things into your own hands, is take some of the chips off the table. Not only is it, on so many levels, supply-demand side, such a good investment, it's so much more inexpensive silver is than its previous 1980 peak, and all of those fundamentals that would say, hey, this is a good buy. But it's becoming really, really, really difficult to acquire. And I think as more people wake up to this, it's going to be center stage. Taking chips off the table, realizing that profit is not a four-letter word, and moving it into such an undervalued asset that is so needed, and taking possession of it, removing counterparty risk, third-party risk, it's so important, and it's such a no-brainer right now. So yeah, I think there are ways to make money trading this market, trading cryptos. And a lot of your listeners are very adept at that. Just don't forget that pigs get fed and hogs get slaughtered. Take some of that profit off the table, put it in silver. It is not only tremendously utilized and growing every day and in depletion in terms of mining and in terms of above ground supply, but it's half of its 1980 price. The fundamentals, I mean, logically, there's very few things on the planet that make as much sense as buying silver right now, period. And the ability, one of the only things other than cryptos, which you can, take in a thumb drive or whatever they're called and hold it in your pocket or know your code in your head. Same thing with precious metals. You can take it out of the system, have possession of it, take possession of it, and take control of it. Be outside the matrix. And once we go to a digital dollar, which will come, a digital currency system, it'll be one of the few things that is autonomous from that system, giving you a little bit of freedom from that type of scrutiny. So, in any case, Chris, I think right now people should be taking some of the profits that they've made in this crazy market and putting some of it into silver, putting it aside and forget about it.
Andy, you have a comment here. Perhaps give us a brief thought on David Morgan said on As Good as Gold interview, said that it is 4 to 6 week on silver rounds in the United States. I'm assuming he meant 4 to 6 week delay. Is that what you are seeing?
No. I have thousands of them in stock. What it means is that when I run out of stock, it's 4 to 6 weeks. So, and that's what people don't understand is that, we're not online, so it's a little bit more difficult. When you go to some of these online sites and you type in quantity, type in 99999, and you'll see what they have very often. But the thing of it is that what is abundant today is not tomorrow. The market is too much just in time, because in order for companies to have things in stock, you got to pay for it, hedge it, and wait for it to be either sent across the Atlantic or produced for you. Now, when no one wants it, those guys are calling you and said, hey, I got a whole bunch extra. I'll sell it to you, send it to you quickly and whatever. But when everyone wants it, and you may have a really flush inventory today, but one guy calls and spends $12 million and depletes 25% of your silver holdings. And then you try to call that distributor and say, hey, I need another 50,000 silver kangaroos. He says, fine, we'll have them to you the third week in February. We'll get them shipped. And that takes another 10 days to get it to you. And before you know it, it's already March 1st. So David's right. But right now I have a bunch in stock. But what does that mean? That just means once it's gone, then comes the 4 weeks.
All right. We're losing you there for a second, Andy. Although, Matt, I'll turn it over to you. Any thoughts on some of the reactions we're seeing here? Looks like nothing happening in the bond market. Stock market's down almost 1.5%, 2% on the day. What do you think there, Matt?
Yeah, I think I'd be keeping an eye on the bond market and in particular the yield curve, because it's increasingly clear we're going to have near zero rates for years. And this is quite a different story than the financial crisis, when a year out of the depths, we had a very steep yield curve. And, that feeds back into other markets, because you're looking to finance things, you're looking to leverage, you're looking for yield somewhere. And it might be the case that that's manifesting itself in some of the activity we're already seeing. But when rates are low and you foresee them to be low for years and years, it can change the calculus on depreciating and valuing assets across the board.
Yeah, and Matt, we've been hearing more and more about yield curve control. Can you explain to folks what that is and if you think that's something we may be headed towards?
Yeah, that's a concept that in action, the Federal Reserve would target some nominal interest rate. So they would effectively be saying, we're not going to allow 10-year Treasury bonds to go above some arbitrary number, 2.5% or 3%, let's say. And then they would stand ready to purchase those bonds in the market such that the price couldn't fall and reflect a higher interest rate. There's some discussion that ultimately they'll undertake a policy like that. There's no way really to know if they do or what rate they would be targeting, where along the yield curve. But that's essentially what the idea is. And there was something called Operation Twist. This was after World War II, when effectively the Treasury was working with the Federal Reserve. And in action, they were targeting lower long-term rates, trying to pin them down. So it is something that we really could see.
Yeah, of course, they did that Operation Twist again in 2011. What I thought was interesting and Wall Street media didn't seem to be as excited to cover was that they also did short-term swap lines to Europe, which kind of offset. So they didn't mention that they were offsetting one half of the hedge there. So really was just outright QE, which is usually the case. Folks, if you have any questions, type them on in and we'll take a look at them. Although I have one that I'd be curious to get your opinion on. Matt, maybe you can take this one first, as I am pulling up something I mentioned on the show recently. Here's the case. Hedge fund manager named Daniel Shack has settled with JP Morgan. Now I'm digging around and been talking to a couple lawyers of what specific, if it's public, what specifically they allege. But basically, if they've reached a settlement and you find out they went with this argument and you use the same argument, it would seem like that and the fact that there's a CFTC statement and from the Department of Justice saying hundreds of thousands of occasions, there are guilty confessions, fines have been paid. So maybe a little bit out of the realm of finance, but any thoughts on that situation and whether investors might have some options?
Well, I think it feeds directly into the question that many have about the fidelity and fairness of markets and the structure of the markets. How many times have we seen these large institutions, large funds, large banks, essentially breaking the rules and just settling for some nominal fee? I think that's part of the discordance that's actually going on right now with retail investors being frustrated. So yeah, you have to stay abreast of what the rules of the playing field are. But unfortunately, certain situations like these spoofing situations or these price rigging situations like we saw in LIBOR, these are really large derivative sets controlling trillions of dollars, how they move. And how it was dealt with, there were a couple of low-level employees that were punished, but firms just kind of settled and moved on. So I think it calls into question how we're actually dealing and enforcing rules in the marketplace. And that's really important to have a discussion around for everyone involved.
Yeah, I think so. Andy, would you like to chime in on that one?
Yeah, I think it's awful, and it continues to happen. If you look at the numbers, it's billions and billions and billions of dollars over the last several years that they've all paid in fines. And if you look at JP Morgan settling a $920 million fine, making $1 billion in profit, so still walking away with the profit for the year and still being allowed to be the primary custodian of SLV. I think it's very disingenuous at best, and these are the things that I think people are this is why I think we are having part of the reason why we're having so much more interest by the mainstream, because these kinds of things are now becoming, I think, more understood by the general public, that the rules on the written on the playing field wall only apply for us and not for the elite.
Well, certainly does seem to be the case. And good news. And we're going to turn it over, go live to Jerome Powell. Matt, do you have any idea? Can I live stream through my channel? If someone in the comments knows whether I'm allowed to do that, type it in now. In fact, Matt, we did have a question from the great Rob Keens of Gold Silver Pros. So while I get that ready to go, maybe you could field this one. And again, if anyone knows, Rob, perhaps you can chime in. Where did your question go? And let me know if I can do that. I'm going to try for it and hope for the best. That's my new motto this year. But here we go. Matt, do you see yield curve inverting on rising inflation pressures in 2021?
Just to clarify the question for everyone, that means will short-term interest rates be higher than long-term interest rates? I think that's a really tough situation to see short-term rates rising. I think the Fed has continually said, they're going to steamroll the front end of the curve and potentially steamroll further out. And, a lot of market activity will probably do a good amount of work for them. U.S. yields are still relatively high compared to other countries, other jurisdictions. So at what point do you start to take into account the currency risk, hedge out dollar risk, and buy treasuries if you're somewhere in Europe and your Swiss bond pays 0 30 years out, or your German bond pays 0 30 years out? So at some point there has to be some of that activity going on too. But an inversion of the curve on the short end, maybe like 10s to 30s, depending on how we issue. I know Yellen just started in Treasury, but she's talking about issuing 50-year bonds. That's one thing I've been surprised, that the United States hasn't issued 50-year or 100-year Treasuries.
I'm waiting for the 100-year. I think it's coming.
Yeah. I'm kind of surprised we haven't done it yet. You have places like Mexico and Ireland that issued 100-year bonds. So,
well, Matt,
we'll see.
You never know. It may be coming before the end of the day. So let's go live to Jerome, and we'll hear what the Fed is saying. And by any means, Matt, if you have funny comments, let me know, and I'll pause it at any time.
Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. We've also taken actions to more directly support the flow of credit in the economy, deploying our emergency lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although the CARES Act facilities are no longer open to new activity, our other facilities remain in place. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Robust as possible.
Thank you, Gina.
I hope they let me in there for a question one day. That's on my bucket list.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I was hoping that you would first react to the wild ride that GameStop stock has had this week. And then secondarily, you and your colleagues have repeatedly made it clear that you really plan to use macroprudential tools as a first line of defense when it comes to financial stability risks, but your macroprudential tools primarily apply to the banks. I'm wondering what your plan is if you see some sort of large financial stability risk emanating from the non-bank financial sector in the coming months, especially as it relates to search for yield kind of activities. What do you see as the solution there? Thanks.
So on your first question, I don't want to comment on a particular company or day's market activity or things like that. It's just not really something that I would typically comment on. In terms of macroprudential policy tools, so as you know, no doubt, we rely on sort of always on through the cycle macroprudential policy tools, particularly the stress tests and also the elevated levels of liquidity and capital and also resolution planning that we impose on the largest financial institutions. We don't use time varying tests and tools as some other countries do, and we think it's a good approach because for us to use ones that are always on, because we don't really think we'd be successful in every case in picking the exact right time to intervene in markets. So that's for banks. You really asked about non-banks, the non-bank sector. And so we monitor financial conditions very broadly. And while we don't have jurisdiction over many areas in the non-bank sector, other agencies do. And so we do coordinate through the Financial Stability Oversight Council and with other agencies who have responsibility for non-bank supervision. And in fact, as you know, in the last crisis, the banking system held up fairly well so far. And the dislocations that we saw from the outsized economic and financial shock of the pandemic.
Did he just say the banking system held up really well through the last crisis? Did I catch that right?
I could have really swore that they were injecting $1 trillion a night into the repo market, so, here again, take the Fed stimulus out and the Fed injection of hundreds of billions, almost trillions of dollars an evening into the repo market, and the banks would have all collapsed.
Well, fortunately, we can rewind a little. Let's see if he actually said that. Matt, did you have a comment?
No, that's exactly right. What Andy said there is the repo market was coming apart in August, September of 2019, long before COVID. And the Fed's involvement there abrogated the private credit system in the repo market. They just started infusing capital directly into it. That was a direct bailout, and that was all prior to COVID. So that's totally accurate.
And while we don't have jurisdiction over many areas in the non-bank sector, other agencies do. And so we do coordinate through the Financial Stability Oversight Council and with other agencies who have responsibility for non-bank supervision. And in fact, as you know, in the last crisis, the banking system held up fairly well so far.
Okay, you really said it.
And the dislocations that we saw from the outsized economic and financial shock of the pandemic really appeared in the non-bank sector. So that's right now we are engaged in carefully examining, understanding, and thinking about what in the non-bank sector will need to be addressed in the next year or so.
By the way, I'm reading this book right now about how to improve writing style, and everything's about really short, concise, get rid of the filler words. I don't know, aside from the fact that he claimed the banking system performed great through the last crisis, I don't know anything that, Matt, could you translate? Did he actually say anything in there?
One thing that sticks out to me is he's talking about providing support outside of the banking sector. And the Fed doesn't regulate outside of the banking sector. That's one thing that sticks out to me. Two, you're starting to talk about infusing capital into different sectors. My next question to him would be, at what level of market cap is this only going to be realized by large cap companies? Is this something that private businesses are going to be able to access readily? The diffusion of that new capital is very important, and it essentially is picking winners and losers. You can have interest rates be low, but if credit availability doesn't exist for that small mom and pop business, it doesn't matter what the interest rates are. So how they
That's exactly correct.
Yeah, how they actually move forward with this is very important. He's talking about picking winners and losers, for better or worse, is what he's saying in my mind there.
Well, let's remember 130,000 small businesses are gone forever. And I will be wrong, I think, with this number, but I believe that the small business sector, small to medium-sized business, represents 40% of GDP. And you pull that out, these businesses that that were hanging on by a thread. They used every cent they had. They've been broke for months. And so when you talk about picking winners and losers, it's the big companies that win and the little ones that go by the wayside. It's very scary what's happening. You can see it very clearly when you look at it in that light.
Yeah.
Matt, you mentioned, conceivably an issue about going outside of the Fed's mandate. Although, fortunately, I don't think you'll have to worry about that because they seem to be changing it on the fly here. And here, I thought this was interesting, how the Fed under Biden likely will be pushed towards addressing racial inequality and climate change, which seemed a little bit outside of the original parameters. But now we're going to solve racial inequality and climate change with more quantitative easing. Someone in the chat room asked what question I would ask Jerome. I think that's what I would go with today. Can he explain how quantitative easing will solve climate change? But let's go back and see. Maybe that's the next question.
Thank you. James Politi, FT.
Thank you so much, Michelle and Chair Powell. I had a question on fiscal policy. Last year, you consistently said that the economy needed more fiscal support, and I believe we're pleased when the $900 billion package was approved in December. We now have a new president, a new Congress. We have a weakening short-term outlook. Do you believe the economy still needs additional support on the fiscal side, and in what areas?
Thank you. So I guess I'd start by saying that the fiscal response that we've seen to this downturn has been strong, and I think we can say now that it's been sustained after the passage of the most recent act in late December. And that's really a key reason why the recovery has been as strong as it's been. Fiscal policy has been absolutely essential. When we look back on the history of this period, we'll see a strong and sustained fiscal policy response. I would add that we're, as I mentioned, a long way from a full recovery. Something like 9 million people remain unemployed as a consequence of the pandemic. That's as many people as lost their jobs at the peak of the global financial crisis and the Great Recession. Many small businesses are under pressure, and there are other needs to be addressed. And the path ahead is still pretty uncertain. So all of that said, the judgment on how much to spend and in what way is really one for Congress and the administration and not for the Fed. And these discussions are going on right now. So there's a discussion, as you know, right now around those precise questions, and that's appropriate, but not for us to play a role in talking about specific policies.
Well, we'll take a pause right there. And if you heard a sound while that was talking, Matt and Andy, I'm getting messages that apparently silver is now being discussed on the Reddit Wall Street board. So again, Yara, perhaps in the chat room, you could type it in the link to today's video where I shared at least what I would think would be helpful for anyone there to know. But with that said, Matt, any comments on the last one here?
Well, he's trying to deflect avenues of expenditure back to Congress via the fiscal mechanism. And I think we're going to see a lot of spending coming out of this Congress. So, what form does it take? What is the scale? Remains to be seen. And he's really demurring there as far as the Fed actively printing and pushing more money into different avenues of the economy. But, the Fed's a political animal itself. So we'll see if they stand pat and to what degree.
I'd also like to comment real quick, Chris, that, he talks about 9 million people still unemployed. The numbers are far greater than that. You have so many people that had businesses that bartenders, for example, the bars are closed. They're not looking for work. Look at the labor participation report, and the numbers have fallen off the cliff. So, the numbers are far worse than they're leading on. And I think you'll see this type of demanding of intervening and of stimulus until the cows come home, until an economy comes back to some semblance of what is normal. But, when you have so many of the people that ran these businesses on life support are already gone, when does it come back to normal? And how do things come back to normal when the engine of growth, the small and medium-sized business, has been kneecapped? And at the same time, the biggest businesses in the world have grown exponentially and made massive profits. It's a gutting of the middle class, and that's what people aren't realizing is all the stimulus in the world won't do any good. All it will do is create more addicts to government intervention and stimulus rather than incentivize people to get out there and build the economy through savings, investment, and reinvestment. Instead, it's can I put food on the table, and when's the next stimulus check coming?
Well, that does seem to be the case, and let's go back to Jerome. We'll do a couple. We'll go to the top of the hour here, and then really, it's probably not healthy to listen too much of a central banker talk, but we'll take one or two more here.
Thank you. Steve Leisman.
Thank you, Mr. Chairman. I wonder if I could follow up on Gina's question here. I understand that you do address issues of valuations through macroprudential policies in the first instance, but there's a range of assets, and I know you do watch a range of assets, but from Bitcoin to corporate bonds to the stock market in general to some of these more specific meteoric rises in stocks like GameStop, how do you address the concern that super easy monetary policy, asset purchase and zero interest rates are potentially fueling a bubble that could cause
context? The shock from the pandemic was unprecedented both in its nature and in its size, and in the amount of unemployment that it created and in the shock to economic activity. There's nothing close to it in our modern economic history. So our response was really to that, and we've done what we could first to restore market function and to provide a bit of relief. The recovery, and hopefully we'll be able to do the third thing, which is to avoid longer run damage to the economy. Our role assigned by Congress is maximum employment and stable prices, and also look after financial stability. So in a world where almost a year later we're still 9 million jobs at least, that's one way of counting, it can actually be counted much higher than that, short of maximum employment, and people are out of the labor force who were in the labor force. The real unemployment rate is close to 10% if you include people that's the labor force. It's very much appropriate that monetary policy be highly accommodative to support maximum employment and price stability, which is getting inflation back to 2% and averaging 2% over time. So on matters of financial stability, we have a framework. We don't look at one thing or two things. We look, and we made that framework public after the financial crisis so that it could be criticized and understood and we could be held accountable. And the things that we look at are we do look at asset prices. We also look at leverage in the banking system. We look at leverage in the non-banking system, which is to say corporates and households. And we look at also funding risk. And if you look at it across that range of readings, they're each different, but we monitor them carefully, and I would say that financial stability vulnerabilities overall are moderate. Our overall goal is to assure that the financial system itself is resilient to shocks of all kinds, that it's strong and resilient, and that includes not just the banks, but money market funds and all different kinds of non-bank financial structures as well. So when we get to the non-financial sector, we don't have jurisdiction over that. But so I would just say that there are many things that go in, as you know, to setting asset prices. So if you look at what's really been driving asset prices really in the last couple of months.
What are the chances he finally admits it's his interest rate policy?
It isn't monetary policy. It's been expectations.
Oh, there we go. Of course, nothing to do with monetary policy, just completely unconnected. I'm sure that Tesla went up 18 times since he started his swap lines is a coincidence. Matt, did you have something to add there?
This is just an unprecedented situation with the level of QE, the reaction we've seen since the repo issue of late 2019. And it doesn't look to be abated here. I mean, this is a question of how easy they're going to be. It's a question of degree, not direction. And he's not saying anything to me with regard to tightening, even thinking about tightening. He's checking back to Congress on fiscal spending. Not yet. Not yet.
Well, why would he? Because he just explained that there's no correlation. It's completely nothing to do with what's going on. Let's hear the end of this one.
And it's also fiscal policy. Those are the news items that have been driving asset purchases. Asset values in recent months. So I know that monetary policy does play a role there, but that's how we look at it. And I think that the connection between low interest rates and asset values is probably something that's not as tight as people think, because a lot of different factors are driving asset prices at any given time.
The indicators he looks at, it's like when his check engine light goes off, it's like he goes to the brakes looked at and then doesn't see the correlation, although maybe market sell-off intensifies with hour until the close, Dow now down 600 points. Maybe somebody else is watching this and getting a similar reaction.
Chris, it's so disingenuous what he says. How does $900 billion in payments and $600 or $1,200 checks to people drive asset prices? It's all the low interest rates and easy money, and the Wall Street banks are able to borrow it at next to nothing and drive asset prices higher. It has absolutely nothing to do with fiscal policy whatsoever. That's just an intravenous life support type of injection into the real economy, keep people going another month or two. But I would argue his monetary policy has everything to do with what's happening in this crazy environment, with real interest rates almost at, negative 1 or 2% right now, and there's no question. It's so much monetary policy and virtually nothing in the way of fiscal policy that's driving asset prices.
Well, seems to be the case. Last one before we wrap up for today, fellas. This one came out last night. Biden administration to buy enough doses to vaccinate most Americans by the end of the summer. Guessing it does not mention how that's going to be funded. Matt, do you have any insight on that, or would you care to venture a guess?
No, I don't have any insight as to what the schedule or plan behind that would be.
Andy, you want to take a stab at how this one might be funded, the 300 million vaccines?
No, but just like the way everything else is funded, they just create money, and most people think that it's just that's just how it happens. They create money, they pay for it, but someone has to pick up the bill at some point. And when they issue a 50% tax rate for the top income earners, when they jack up capital gains taxes and corporate taxes, you'll pay for these types of expenditures through taxation and spending and a tax and a massive debt on our future generations. Nothing is free. And when you get to the point where we are, where it becomes exponential, people are forgetting and neglecting to understand that there is a price tag, and that government just doesn't come up with the money. They have to come up with it somewhere, and it's through more debt and more taxes, and that's what we can expect over the next several years.
Well, that sounds about right. And fellas, just in wrapping up, Matt, can you let folks know where they can find you if people can contact you, find out a little bit more about some of the things you do?
Yeah, we're at qcipartners.com. You can email us at info@qcipartners.com.
All right, and I will get the site there pulled up in a second. And Andy, any specials going on? Anyone's looking for silver? Anything they should know? Parting words.
Yes,
there,
absolutely. As far as specials on silver, we have 2020 silver Krugerrands that we are able to do at $3.19 over the price of silver, and silver Britannias from the United Kingdom. You can do it $3.09 over the price of silver in any quantity. And people can reach us at Arcadia at Miles Franklin. And thanks for letting me drop in, Chris. Always appreciate the opportunity.
Well, appreciate that, fellas. Certainly an interesting day. Maybe the prices weren't moving all that much, but hopefully this was helpful. We got a couple questions in there. I'm learning to get more in, but Matt and Andy, thanks for joining me. Will be interesting to see what the near future holds, but hit the subscribe button and the notification bell, and that way you can stay posted. And with that, we are signing off for now. Here with you for Arcadia Economics on a very wild day in Silverland. Where to begin? We'll start with First Majestic Silver, which you can see is up in pre-market trading over $6, approximately 45%, let's call it. And I'm guessing you're already aware. If not, we've had this situation this week. Couple short squeezes happening, particularly in GameStop, as you can see up here, which was soaring once again. There is a forum on Reddit called Wall Street Bets where they've been targeting some short situations. GameStop, I believe, was over $500 this morning. So let's see. Wow, came back in quite a bit. I thought it was up a couple hours ago. Certainly, you're going to see a lot of volatile trading in these. But it looks like they targeted First Majestic Silver, which is fantastic news because talked before. In fact, we did an episode last week highlighting the short position in First Majestic Silver, which you see down here, 23% of the shares floated. We had Dave Kranzler, Chris Marchese, and Rob Keynes talking about that last week. And hopefully I'm live here. I'm getting an indication that looks like we are. So anyway, I will continue on here. Hope that you guys are seeing me out there. But anyway, yeah, we did a call on that last week, that short position. And sure enough, really overnight, this has happened. You see, let's take a look at the chart going back a couple days here. So yeah, it was still at the close yesterday, 1380-ish, 89. And again, you can see pre-market up at 1893 on this feed. Let's take a look at First Majestic here on CNBC. They are showing 2025. Again, when the market opens, a lot of this will become clear. And I know we're humans, so we all want to watch and see what it's looking like. But you'll find out soon enough. A few notes on that. Aside from, I think this is a historic day in Silverland, especially First Majestic being the leading silver company, Keith Neumeyer being the one who's spoken out for so long about the short position in silver. I don't know if that's connected to why there was a large short position on First Majestic yet. In either case, making a crack in it today. I know there's a lot of people in the silver world that are going to be thrilled just at $19 or $20 First Majestic, although let's take a look at GameStop, which was an $18 stock 3 weeks ago. So while certainly $20 is $21 is good news. And by all means, this is not legal financial advice. Definitely a day to talk with people you know and trust. But we really don't know. No one really knows how this will play out. Based on what you see in GameStop here, let's take another look. I'll pull out the 1 month. So here is GameStop at, what is it, $40 here, a little farther back at $20. I wonder if we can see the overnight trading. So it went from 20 to 310. And as you can see early in the morning, yes, just a couple of hours ago was over $500, then got hammered down, and then got hammered down again. That's the kind of movement that you would expect to see in a situation like this. But also makes you wonder, Could First Majestic be at $50 or $100 in a day or two? To be clear, I'm not saying that will happen, but when we live in an environment where Bitcoin goes up 10, 15x in a year, Tesla's up 19x in a year and a half, GameStop just did what it did in a couple of weeks, and here you have a heavily shorted stock in First Majestic Silver that people are finding out about, let alone the silver situation, and we will have some brief news about that as well. So again, this is not legal financial advice, but it's a situation where, as a former current equity option trader too, but I used to be an equity option trader running a specialist post on the New York Stock Exchange. So I would see things like this, and anyone who goes out there telling you they know exactly how this is going to unfold, I would be careful of, but going to be a great day, it looks like, and certainly congratulations to Keith Neumeyer. Well-deserved, sir. Well-deserved. Also, congratulations to Todd Anthony and Mark Carruthers. I know a lot of you know both of them, run their investor relations, and I mean, it's exciting. I did load up on some call options this week, so I'm particularly excited for the open on this one, but also just really getting to know those guys, becoming friends with them, and feeling like a partner in this cause. So again, congratulations to Todd, Keith, and Mark. We're going to make this one short. Actually, we'll have a separate video coming up. We've got some silver events that now tacking on, but just if there's anyone in the Reddit group or anybody outside of the Reddit group, but new to the silver manipulation, wanting to get up to speed, maybe like something that could instantly put this in perspective, I'd watch this one, the silver manipulation smoking gun. Link is in the description field below, so you can go down there and click on it. I thought that was one of the videos that really laid out the glaring nature of this, and will give you some stunning data points in case you're wondering, could this really be happening, as many in Silverland allege. Fortunately, you don't have to take my word for it. In fact, I'm going to cue up the sound on that one too. This is Bart Chilton, former CFTC commissioner. He was a commissioner during the agency's silver manipulation investigation back, it was like 2009 to 2014. So when they said they found nothing publicly, although keep in mind, this is the exact period that the Department of Justice now has found, in their own words on their press release, hundreds of thousands of occasions of spoofing. Now, spoofing, suppression, manipulation, in the end, they dump contracts on the market that paper, gold, and silver that doesn't exist in any amount that is helpful. I'd say the terms, people get caught up in the semantics a bit, but just for anyone new to this, again, this is a regulator who was inside CFTC. So let's hear what he had to say. Again, I appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, if silver is trading $20.05, there's a lot of stop orders placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop, with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal to put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal. But it's actually also...
Now, you can go hear the rest of that, what is spoofing. It's on YouTube, because he goes into next 3 minutes some of the technicals, although I would say after basically going through the technicals, he summarizes it here.
A second. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
And I think we've seen that. Anyone who follows silver regularly sees that regularly. So anyway, plenty of videos about that on the channel. So hit the subscribe button and the notification bell and take a look through there. Basically, anything you'd want to know about silver has been laid out on the channel. And again, I heard the forum was closed. I guess not anyone can just hop in there, but here is Wall Street Bets. Thank you guys so much for bringing some attention to this. You know, there's a lot of us in silver world that are excited about silver and have been studying this for a while. And for whatever reasons, now our paths are crossing here. So anyway, appreciate you guys taking a look at this. And I think you'll be beyond stunned by what you find. In fact, I actually did write a book about this, which I released last year. And I know you saw that silver chart there, don't I? I'm aware of it. I'm teasing you a little bit. We're going to get there. But here's the big silver short, which is available on audio if you like listening to audio instead of reading. But for anyone on that short squeeze club, here's the title. This wasn't written yesterday. This was last year. How the Wall Street banks have left the silver market in place for the short squeeze of a lifetime. I will stand by that title or subtitle as strongly now as I did when I wrote it. Again, one of the things that I personally love about the way the book come out was it wasn't just me sitting there writing my own opinion, but I interviewed 15 random silver traders, but the most intelligent, informed people on this situation going back decades that I could find. That's what the Bart Chilton interview was for. Keith Neumeyer is the one mining executive interviewed in the book, and he talks about why he's been speaking about this for so long. David Morgan, Andrew McGuire, Ted Butler, Craig Hemke, Dave Kranzler, really trying to create something. So if you were starting from knew nothing about silver and wanted to come up to speed as quickly as possible, well, again, you could watch that video here, this one, the smoking gun, but a little bit more detailed and extensive, and you get really 15 experts with hundreds of combined years of experience. So again, I'm not trying to, I guess I'm pitching the book, but I think it'll be helpful in this particular situation. So anyway, gonna wrap this up. I am coming back with a very short video about silver because look at that. Yes, it's gonna be a fun day. Although we're gonna wrap this one up real quick. Would like to let you know there is a conference tonight. Rob Keentz of Gold Silver Pros is hosting Solutions 2021. Going to be kicking off in a little bit. Quite a hot schedule here, which the link to this is in the description field below. But there's James Anderson. Sure, there'll be a lot of talk about, there's my man Alex Newman, but a lot of talk about silver, First Majestic. And with that said, the markets are about to open. So I'll be back shortly with a video about the actual silver spike, which is quite exciting. But want to wrap this one up here. Hit the subscribe button and the notification bell. That way you can stay posted. And I will see you again shortly. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a very wonderful day in Silverland. And in case anyone who has been saying, I'm tired of waiting for manipulation, silver this, silver that, well, take a look at this, up $1.36 the same day where we see First Majestic. Where is it? Trading is halted. Ooh, trading halted on First Majestic. Hopefully I am indeed live here at this moment now and you're able to see this. Again, I guess that we'll call that some breaking news. First Majestic is halted. And perhaps give me a moment. I'm going to get the chat window pulled up so that type in your questions. I'm going to stick around a little longer for this one and we can take questions, see how things develop. But there is some breaking news. Yara, if you're watching and you can tweet out from our account that First Majestic is halted. I'm sure people know already, but Let's see, is this clickable? Not yet. So we have quite an exciting day. Even the silver spike, I'm sure you guys have been watching that. First, I think actually I can check my phone here. Fortunately, I take a lot of pictures and send them out on Twitter. So yeah, I saw first it was up 68 cents. Then by the time I called, Silver Bill Murphy was up 95 cents. And now you see, let's see, about $1.39. And let's make sure I have this all streaming properly. I think we have it. I think I have the wrong title in there. So give me a second. I will update that because the silver short squeeze is on. Is what I meant to say. So sorry we're doing things live here, but I am going to make it worth your while, I believe. And looks like we do have things live properly, which is great news. And I'm going to get it queued up so I can see your comments in a second. But in the meantime, we can just sit here and watch the chart. Click. Oh, $1.48 now. Let's take a look at the silver stocks. If you've been waiting 10 years or 40 years or however long, what an amazing day. There's Endeavor Silver. Fortunately, that I bought options on yesterday. It is now up 20%. You heard from Brad Cook of Endeavor Silver. I think it was last Monday. There's Fortune up $1.37. MAG up 11%. First Majestic up 29, almost 30%. And now it is halted. SILJ is up. I mean, everything in Silverland is up. So I'm sure your portfolio is also up today. Everyone who's been waiting, for a long time, just congratulations. I think this is, here's the best part. I think this is just the tip of the iceberg of what is to come. Now, by all means, today, I'm not giving legal financial advice. There's a lot of people watching, and everyone's situation is different. So, again, I'm giving you my research. And for anyone new watching, my background, I used to trade equity options in New York for a firm called Susquehanna, and I ran a specialist post on the New York Stock Exchange. So, we do talk about options here from time to time, and we can dig into that a little bit today. Probably not suitable for most investors because that is a very high risk thing. Although if you do have option positions on a day like this today, things go really well. Although I would point out, keep in mind, we're going to see some wild swings here. So we'll see when we get some news about First Majestic being halted. Yara, if you're listening right now, perhaps you can check in with Mark or Todd from First Majestic. I'm sure they have a lot going on, but maybe if we can see if they have any idea, and then we can update the audience. And we'll see what we can find out there. But certainly good news overall. Yet I would point out here is this is the overnight chart for GameStop, which you see now is looks like they're still trading. But you can see up here this morning, twice it got above $500. This thing closed Tuesday at $150. Then yesterday went up $200. Then today, pre-market was up at $500, comes back down $75, then back up 75, then down 150. So First Majestic, I'm guessing this is good news that it is halted. Let's see what Google can tell us. I've not seen a reason yet, but hopefully my dear partner here at Arcadia is out there, or someone could perhaps opening up the window with the chat so I can see your comments in a moment. Just got a message from Blue Horseshoe Grandy, who you've seen on the show. He is smiling now. Interesting message from another friend that I will leave nameless, but I think is somewhat fitting. He writes, "Holy smokes, the power of the internet." And, you know, I'm not going to go all Tony Robbins on everybody today, but I've always felt that we do have more power out there than we imagine. Yes, there's some people with a lot of money that do some things that are not so everybody today, but I've always felt that we do have more power. We'll close that window in the background, although now I can see your comments. But yeah, I think that it's especially something like this that is information based. That's why I wrote the book. That's why I do this show, because I always thought at the end of the day, if let's see what we got news here. The following issues have been halted. Trading halt. Let's see what we got here. I mean, at the end of the day, I always felt this was stuff that if enough people actually knew what was going on, I mean, they're being lied to. So, you know, when people know what's going on, that's what you saw, how quickly the Wall Street Reddit thing has, okay, pending news. Reason pending news can make a decision to, all right. So we'll see if we can get an update on what that pending news is. Perhaps if anyone watching live right now has any insight. And let's take a look in the Comex. AG halted, pending news. Now, keep in mind there was, okay, Yara, I see you in there. So yeah, if you can check in with Todd or Mark, that would be great. There also was news on the tax situation last night. Yara just logged in. So Yara, again, if you're listening now, can you perhaps call Todd or Mark, see if we can get any comment on what is the news coming. I'm going to pull up. There was news last night about First Majestic. They had an update with their Mexican tax situation. Didn't seem to be, I mean, I would call it a small positive. First Majestic gets break in opening round of Mexico tax. So again, not that the situation is resolved, but I mean, there's some, I don't know, the way we would look at it on the option floor, there's a difference if something's 50% to happen versus 55% to happen, or whatever you want to call it, but at least a net positive. First Majestic gets break in opening round. And as you can see, I don't pay the $290 a year for Bloomberg. So you can, perhaps someone can put in the chat window a link there, and we'll keep an eye on First Majestic, see when that opens back up. We'll take a look at the silver price, $1.40. The other thing that I call this unofficial, but we've seen often the thing shoots up, then comes back down. But the fact that it's kind of, there's been 3 separate gaps is encouraging news. Getting updates. I'm not a Reddit user. Maybe I'm about to become one, but I heard that the chat room there, let's see, on Wall Street Bets was actually got closed to the public because there was a lot of action in the silver room. I'm told the activity is picking up, which certainly is exciting. And I'll tell you what, for anyone who's new to silver, again, if anyone doesn't want to buy the book, you really need a free audio copy, fine. I'm not trying to, sit here to pitch the book, but just that was the purpose of it, that if you're getting into silver and starting from the beginning and wanted things laid out in a clear way where you grasp what's going on, you can check out the Big Silver Short. There is an audio version as well. So I think that will be handy because we saw a little bit last summer, some of those events play out. And I might add, See the subtitle, How the Wall Street Banks Have Left the Silver Market in Place for the Short Squeeze of a Lifetime. I would very much stand by that subtitle that I didn't just make up today. That's been there for longer even before this. But yes, I think that we're just seeing. Now, are we at the ultimate short squeeze? Obviously, I don't know the answer to that. This is certainly a great indication. Also, to see it happen in First Majestic first, because this was all happening after this started after the close yesterday and just escalated higher. And this happened after that. So, I mean, we had First Majestic up back here while silver wasn't moving. Now to see that up, again, where does it ultimately leave us? We'll find out. But, you know, the fact that it's the same exact time as what we're seeing here now, GameStop back up another $60 from 5 minutes ago. So that kind of volatility, you can expect that. Guessing we'll be seeing plenty of that in silver. Let's take a look at some of the stocks. There is the Silver Junior Miner Index, which I don't think is appropriately named. I mean, in fact, one of my projects, I'm interested in making what I would really call a Silver Junior Miner Index, because I don't, for example, now it worked out well if you have a position in the SILJ because First Majestic is part of it. So you're winning big to that. And by all means, I think that if you own SILJ, you'll probably do incredibly well in the long run. But not First Majestic is not a junior miner. But in either case, you can see the juniors up 12%, junior index up, SIL miners index up 9.5%. There is First Majestic, which is currently halted. News from First Majestic coming shortly, says Yara. Well, that is awesome. Zach Demon, no free copy. Chris, your stuff is worth it. Well, I appreciate that, and I appreciate the sentiment, and I agree. Although, just to the degree that, I mean, even the way that we do the show here, yeah, I guess there was some. I have a lot of thoughts, and this whole experience has helped me to grow and mature as a man and in a business sense as well. There was always a part of me that felt it was important for people to know this stuff, whether they have a lot of money or they just don't have money. So by all means, yes, I would encourage people to buy the book. But if there's someone out there that really wants to dig into this and you're struggling, then I'll tell you what, take this link, tweet it out, copy Arcadia Silver One and Arcadia Economic without the S, which is my address, and we'll give away a few audio copies to spread the word. And so I appreciate what you're saying there, and I agree with the school of thought. And yes, go buy the book too. In fact, go buy multiple copies, and then you can give it to some of your friends who can start learning about silver. And we can amplify. It's kind of like when Ben Bernanke talked about that circle of virtuosity when he sold hyperinflation as a concept in his 2010 Washington Post op-ed. Actually, this is a real circle of virtuosity because the short squeeze is on. Let's take another look at some of our prices. By the way, if you want your friends to know about what's been happening and building in silver, and it's still, I think the managers might be thinking about exchanging the lineup cards. I mean, they're not even out of the dugout yet. This is not the second inning. This isn't the eighth inning. Keep in mind, Bitcoin, which was let's say, I think it was maybe 2016 or 2017 when it was $500. So at 32 grand, that's a 64x multiple, let alone in the last year. You have when it was down to like 3,000 or so 10 or 12x multiple, depending on what the price is today. And we can take a look at what the price is today, see if anything is happening. And even though this is the silver channel, we can still talk about cryptos without getting our feathers ruffled. I won't dwell on it. I know where's that theta thing that bought a bunch of those a couple of years ago. Every once in a while, I just like buy something just for fun and end up being like a 20 bagger. But I mean, you see, there's theta. Yay. Actually, here's another one, gold and silver related crypto. I've had Reggie Middleton on the show before, and I will just say this is one that I keep an eye on. I'm not telling anybody else what to do, but Veritasium, very interesting situation going on where they got railroaded by the SEC. Makes it somewhat fitting that Gary Gensler are about to take over. And partly what they're doing was making software that you could have financial markets where you are not able to sell the same piece of silver to multiple hundreds of people. That's right. Especially if anyone in Reddit crowd is watching. In that book, The Big Silver Short, one of the questions I asked these guys, this was done interview style format. It isn't just me like running my mouth about silver. Bart Chilton was in there, the former CFTC regulator commissioner who was part of the investigation where he found plenty of evidence of manipulation, which he talks about. I might add for anyone new to this, go to YouTube, Silver Manipulation Smoking Gun, includes chapter 16 of the book. That'll tell you all you really need to know. But one of the things I asked the folks in here was that for each ounce of silver, how many paper claims are on it? And I did not get an answer of less than 500 to 1. In fact, here you can take a look, David Morgan, silver 500 to 1. Let's see if that one comes up. How much supply was lost? So there's somewhere in here. I'll try that because I chopped out that question. Let's see. Okay, here we go. Let me make sure the sound is queued up on this. All right, we got share sound. So here's David Morgan, one of the leading, most well-known silver expert around today. And again, I asked him for each ounce of silver, how many paper claims are on it, and we'll play a second of that. Well,
is it possible?
Is anybody having
urinate?
Bladder issues? You can go to whatever this guy's thing is called. We get the name in there a little sooner, but here we go. One last area to dig into with silver. We hear a lot about all the paper contracts that are written. I've heard numbers from folks like Bill Holter that there may be as many as 500 paper claims to each physical ounce that is out there. What have you heard and seen in terms of that? Are those reports accurate? And if so, how does that unfold?
Yes, yeah, they are accurate. I mean, CPM does probably a better breakdown than the World Silver Survey from the Silver Institute. And really, 500 is, the idea is what's important. I mean, the numbers are important if the numbers are important, but it's greater than that. And why? And, you know, Bill and I are pretty close friends, and I'm not calling Bill out on this. I'm just adding to what he said. We have no idea what the over-the-counter derivatives are because they're not transparent. We're just looking at what the London Metals Exchange, the LBMA, the Comex, and all the derivatives markets that are out there in Netherlands that are reportable. That's reportable numbers is 500 to 1. Well, all these bank-to-bank, peer-to-peer, mine-to-mine, mine to corporation, corporation to mine to banker, banker to corporation to hedge fund to, you know, a coin dealer, you know, those kind of hypothecations and rehypothecations in the over-the-counter market probably are equal to. So you could probably not only have 500 to 1, you might have 1,000 to 1.
Right.
And
let's hear that part again.
500 to 1, you might have 1,000 to 1.
Right.
So you could probably not only have 500 to 1, you might have 1,000 to 1.
Right.
And
which makes it kind of special. Now, I know a lot of investors were not happy last year. You had silver go from was it $18 to $29 was the peak. Ooh, wow. Market Watch can't handle the First Majestic action. Well, we'll go back over to CNBC. Keep an eye out there. So you had silver go from $18 to $29, and there were times where First Majestic silver was trading lower. Like if you look at the price when it was $18 at the last week of December of 2019, and then you look at times when silver was $25, First Majestic was actually trading lower, and a lot of people were frustrated. My call options that ended up worthless last summer were, it was a learning, but that's the difference. I mean, I would suggest to folks who are trading this stuff, if you're expecting silver and the stocks to go in linear fashion, and now we came back in a little bit. So again, to be expected, you don't have to, it's still okay. Still up there. It's back up 9 cents as you refresh. So, relax, have fun with this. If you can't have fun with this today, then probably something better to be doing in life. But anyway, you're going to see moves like that. And with First Majestic, it seemed to me that, you're not going to, accepting that you're not going to get silver goes up this, and because the beta is that First Majestic is going to go up that much on the same day, doesn't quite work like that. Obviously, there are days when the stock market is down, so the stocks will be sold off. But if you kind of just get an idea of where this is going for the long term and roll with that, I think you give yourself incredible power. And with First Majestic, it seemed to me a very intriguing situation where, because like you have, obviously it's heavily leveraged to the price of silver. And if silver is suppressed, and there's a massive short keeping silver lower, and then there's a massive short keeping First Majestic lower, it's like a short squeeze on top of a short squeeze. You really couldn't make this stuff up. So that's anyone in Wall Street bets, just let your friends know that First Majestic is a short squeeze on top of a short squeeze, and on top of that, it's halted, and we are awaiting news. Chris is smiling, I see in the comments today. Well, I sure am. In fact, I looked, I did my other video first, and then I looked at my option portfolio today, and it is quite good news, reminding me of the days of 2011. Again, I'm not saying it's not legal financial advice, and certainly for anyone who's done this for the last couple of years, was a thorough beatdown pounding, although the days where it goes well is certainly nice. And my partner here at Arcadia, Yara, who many of you know or talk with in the chats, fortunately, I bought her. We talked, I don't know, it was an hour or so before the market closed, and I run her account for her, and she was saying, should we have some in my account? I'm like, yeah, probably. So bought her some First Majestic call options before the close. And thanks to our great management over at First Majestic, that, again, congratulations to you guys, Keith, Todd, and Mark today, who have really stood up to a lot of pressure. All right, so it looks like it is unhalted, and First Majestic is a little bit lower now. So perhaps maybe if somebody else is seeing the news, can post that in the chat window. And let's see. Again, there was a development on First Majestic and their Mexican tax situation. Not a huge change, but could move the needle a little bit. Further good news. And if anyone sees the news that is actually coming out on First Majestic, let's see, what are the chances they would put it on a darn page here? Well, we'll refresh and see. Maybe you can type it in the chat window there. So First Majestic down a little bit from its highs earlier today, but don't get sad, anyone. It's going to be okay. Just look at the game spot chart. There you go. Back over 400. Trading halted in GameSpot. So lots of halts today. Might mention something. I'm going to ruffle some feathers here. I do like listening to Cliff High. I don't know always what to think. I mean, some of it's like wild, yet the guy strikes me as incredibly intelligent. So I do listen and follow along. I'm not telling you what to think, although I found it interesting. He was mentioning in his most recent video that he was picking up some emotional language around January 28th, which is today. I remember going to sleep last night. I was wondering, what are the chances if whatever he's seeing was like, finally, we're going to see something happen in silver? And I think we're seeing that. Again, as I mentioned before, I would say this is the first inning because I was pointing out the multiples on some of these other assets. And you have Tesla. I mean, I know Kranzler digs into it a bit. I don't know if they've ever even made a profit yet, and they went up 18x in the last 15 months. So, I mean, what if silver reached its fair value and then went up 18x after that? And here's silver at 26 and change, still 50% below not only its 2011 high, but its 1980 high. That's 41 years ago, before quantitative easing, before, trillions of dollars of debt. There you go. See, it's coming back up. Nothing is going to change the situation. So the only thing that's going to happen is eventually more people are going to find out about what's going on. Now, with that said, could you have a situation where the thing ends up back lower where it closed yesterday? Yes, that's certainly possible. I mean, think of it like a tie game in the fourth quarter. We could be sitting here seeing GameSpot-like numbers an hour from now, or maybe the thing could be down on the day. I don't think that's going to happen. I think the cat is getting out of the bag now. And once people find out about something like this, I think that's what ultimately ends it. But just keep in mind that the path between here and there is likely to be rocky. So, hey, Chris, can you talk about the mechanism to stop the rise if prices are too high? Released 3 to 5 years ago. I'm not quite sure what you're referring to there, but I mean, the mechanism is typically, and I'll get a picture pulled up here. The mechanism typically is that when the price rises, they just dump paper contracts on the silver market. And when you can write unlimited paper, and so, I mean, let's say the Fed comes out and says, we're going to do QE 8 and 9 today. And people would be most likely buying a lot of physical silver. And you would probably think they would buy SLV and other things like that. But then if no matter how much they buy, someone comes and hammers more paper, because you can sell infinite paper. And that's kind of what has been happening. Yep. And there we go is a chart, which I will be able to pull up momentarily, which will show this. But yeah, that's what that's the mechanism. But that's why you saw that clip from David Morgan before, where he was explaining how you keep adding, it's probably beyond 100 to 1, and then when you finally have this moment where someone, in this case, looks like Wall Street Bets, is helping spread the word. And mean, if enough people were, actually doesn't even mean enough people. It's really, I would say, a better way of phrasing it would be enough buying power comes behind that. That's always been the Achilles of this thing, is that if you have 500 paper claims for each ounce out there, and you just keep increasing it every time people buy more silver, then yeah, it's going to frustrate a lot of people. It's going to be insane while it goes on. But if you ever get to that point where people demand their metal, that's when you have the end of It's a Wonderful Life. And certainly it's encouraging. I mean, there's a lot of people in the silver world have been talking about this for a while, but now that we saw what happened in GameStop, obviously silver may be a trickier situation, but Here's a chart from last week. You see price falls off a cliff right as volume is dumped. Price falls off a cliff. I'm trying to get access to some of the trading data so you could actually see. So I'll make a note to do that today. We'll call Mickey, former floor broker. See, when I was trading equity options back on the New York Stock Exchange, if something traded at my post, it was a big trade, the brokers would come by and say, hey, I see this on the tape, what traded? And it was required to say, you know, customer bought these for this price tied to this stock. So you get color on the trade. I'm assuming there would be a way equivalent of that on the Comex. Then again, assuming anything fair, transparent on the Comex is probably a little bit dicey. So let's not be foolish yet. I'm going to look into that because I think you would find that. And here you find silver back up another 11 cents. So for anyone who's, you know, getting panicky, there, look at First Majestic, can't be held down. How beautiful is that? We go back over to our chat window. If anybody has seen the actual news on First Majestic, if you could put that back in there, again, that would be great. Arcana Silver is sleeping. Working on getting Arcana on the show. I know someone there. Let's see. Anyone type in the news? Does anyone know what is the news on First Majestic? Start promoting physical silver on forums everywhere, says Barbara Spector. Yeah, we'll take anything on this channel. Tweet it, share it. Hit that subscribe button. In fact, just to show you the kind of silliness that we do here in Arcadia land. Let me see if I can find our silver giveaway this month. Yara, perhaps if you're listening, you could send that over on Skype and I will pull up our silver giveaway. I don't know. I think part of the fun is to get silver in the hands of people as well. Share the message. So we're giving away a 10-ounce silver bullet this month. Link is in the description field below. That's what it looks like. Yeah, it's 10 ounces of silver. Let's click them together. You can hear the ding, ding. Yeah, so get your silver now before... Actually, I'm going to be careful how I phrase things. I cannot guarantee the price will go higher. And in fact, I will try and be responsible and point out that even... In fact, let me put it like this. Let's say silver is $100 at the end of the year. I'm not saying that's going to happen. But even if it were, you should expect to see days where First Majestic is up $4, and then you look an hour later, it's down $2, then up $6. Kind of like what you see with basically every other asset these days, where it's become normal to see these wild moves. And it's interesting how you even suggest that. All right, here we go in the chat room. Win that 10-ounce silver bullet. So if you even suggest that the same kind of volatility could occur in the silver market, you know, people think you're looking for aliens and all that stuff, which, you know, I'll just say that there's no one has explained to me what I'm missing here. I don't get calls from people disputing it. Again, I'm not saying everything that I write is correct or, you know, or that I get everything perfect. I'm not by any means saying that, but I'm just, in fact, I think for people who've been watching the show or know me well, I mean, my general style of investing is, you know, when I come across something and I see it, and then I'll spend years trying to think, all right, how could I be wrong? Where could I be missing something? So it was September of 2011 when after silver had gone up to $49 that April, then got back up a bit higher into the 40s again by September, and then seeing the prices crash down. In fact, I'll show you the exact moment where it started to be like, yeah, maybe I had heard that there was something funky with the prices being manipulated. And let's show you a couple of the key ones. That is silver. But actually, what really started all of this, here is the gold chart of September 6th, back in 2011. This was after the US had been downgraded. Let's go back one day. Debt ceiling, you know, these guys were making an ass out of themselves. So gold was at its all-time high, had crossed through $1,900. US is on the ropes. Europe is printing. Greece is blowing up. And then right around here, still remember it clear as day, because I get this, I have a big position on back then too. I thought it was home free then. Maybe this week will be the week and I'll do the next show from the beach. But right around here, you get this announcement from Wall Street Journal saying that the Swiss had just pegged their currency to the euro. Now, what that means is that at a time where the supposed safe havens are being exposed as the frauds that they are and were, essentially the Swiss were saying, you know, we're going to start printing too to make sure our currency doesn't go. So supposedly the last safe haven is going to start printing. I remember thinking, geez, is gold finally going to go through $2,000? Instead, you see this, which I'm sure is becoming familiar to a lot of people. In fact, you can see there was one 2 days ago. This actually looked bigger when it happened, but today's move has made it look small in comparison. Back up $1.24. There we go, silver team. That's right, Reddit. Let people know what's going on in Silverland. Here's another one you can let folks know about, because as silver was rallying following Ben Bernanke's virtuous circle of money printing in 2010 into 2011, silver had gotten up to $49. Again, I'm not a technical analyst, but I'm guessing the fact that silver reached $50 in 1980 and then it got right under 50 in 2011 is not that silver hasn't, as a commodity that people most look to as an inflation hedge in a world that's being hyperinflated. I don't think it's that people thought, well, it can't be worth more than it was 30 years ago. But you see Sunday night open down $6 instantly. Chris's portfolio's trash. But these were the two events that made me start thinking, gee, there's something unnormal going on here. And so I basically spent the next day driving everyone around me nuts talking about silver. But this, again, was an attempt to disprove that, was an attempt to say this can't be, I must be missing something. So rather than write the book myself, it was done interview style format. Andrew McGuire, Ted Butler, David Morgan, Bart Shilton, every silver expert I could find who could add some insight. One of the things I think was interesting is a lot of the details behind the scenes that are kind of hard for people to confirm. You heard echoed by so many different people at the same time, such as Warren Buffett getting forced out of his silver position, which was bigger than the Hunt brothers, and that being what led to the formation of SLV. So again, some of these things that basically the story is that Warren Buffett was caught up in some scandal and they basically said, you know, let go of the silver or we're going to have lawyers all over you for the rest of your life. I wasn't there, but I found it interesting that, again, you had multiple well-respected analysts confirm that. So anyway, I say that just in the sense that I've spent a decade thinking about this. There could be some blind spot I can't see, yet do this show every day, brought on everyone outside of Santa Claus who even wants to talk about silver. And if there's some other explanation, I can't seem to figure it out, but maybe it just is what it is. And the title here, how the Wall Street banks have left the silver market in place for the short squeeze of a lifetime, could be appropriately named. Let's take a look back over at the silver stocks. We'll give this one a little refresh here, but as you can imagine, seeing some big numbers. The texts are rolling in. I think someone was scared of the silver prices. Well, I mean, I guess there's no day to be scared. I mean, maybe it's, again, I want to be careful the way I phrase this, but keep in mind, based on this, I mean, we could be in the early innings of First Majestic. Again, it's not set in stone. There's a battle going on here behind the scenes, and could come. The shorts could win out this round. I think ultimately, again, not legal financial advice, but ultimately, if people just sit there, buy and hold, you're going to be okay, and you don't have to be a hedge fund genius yet. Either case, let's take a look. SILJ up 13%. Is that ultra? What is this? Ultra Silver Pro Shares up 11%. First Majestic up 31%. So nice to see it's hanging in there. There's MAG up 233. MAG, a good stock to know about as well. Big silver deposit. There's Endeavor Silver. I'll leave her nameless, but my friend woke up. I have a friend at Endeavor. It was only up 7%. She was like, wow, it's only up 7%. Love it when stocks only up 7%. We're disappointed, but how about we almost get a blackjack and triple that one up, 19.5. Maybe it'll hit 21% shortly enough. Fortuna Silver, big day there. 18%. Pan American Silver, which I think is more of a gold stock if you look at revenue from the different assets, but there's Silvercrest up $1. Here's an interesting Silvercrest. We'll take a look. Fit that First Majestic profile in the sense that, where's my Silvercrest window? Yeah, like when you had silver, when it was $18, I think for Silvercrest is almost flat, which, let's see if we can get that click in there. So Silvercrest, I would say, is still seemingly, I mean, the First Majestic is finally like doubled since not doubled. First Majestic, and okay, here we go. So here is January 19 of 21. Okay, well, we want the 5-year chart. Oh, there we go. So here is, let's go back. Here's May. So you had a big rally here. But here's June. We'll even go a little farther. So July 1st. Okay. So July 1st of 2020, last year, Silvercrest is at $9.98. So July 1st. Yeah, there we go. $1.35. Silver coming back again. So what did I say here? July 1st of 2020. So here you see silver is still below $18 on July 1st. So below $18 on July 1st, we saw Silvercrest was $9.98. Now with silver, what is it? $8 higher. So here, let's call this 18. And then silver's up $1. Forget it. 20. So 18. So almost $9 higher, and Silvercrest has ticked up a penny. Again, you can mark it from different places. I know a lot of people mark from the lows of COVID. I kind of look at that as the anomaly and not the best place to look at it. Hey, you can mark it however you want. Not offering legal financial advice, but there are some thoughts. There's Lexco up 7%. Good news. Long some Lexco deltas. Look at some of the juniors. There's Reyna up 12%. There's my friend John Lee, Silver Elephant up 8%. Kuya Silver, there. We had David Stein on the show. I guess that was 2 weeks ago. I like Kuya Silver, and big day they're having, up 20% there, getting in on the party. And anyway, you can see, well, there's Endeavor Silver about to hit there's the blackjack. All right. So there, Endeavor Silver flying, First Majestic rallying, and Wall Street bets, excuse me, helping the cause. Let's take another look at our silver price. Seeing $1.35 there right now. $1.31. Okay, so as you can see, prices go up and down. That's normal. No need to panic. But let's give a special thank you to Wall Street Bets and all the folks there that love finding assets that are wildly underpriced because of a short squeeze, then spreading the word to, I imagine, fund managers and wealthy investors who get together and do something about this, which I think is fantastic. It seems completely legal in a public way where people or investors are sharing information, and there's like a Robin Hood like feel to it of finally, and that's what I think is encouraging, seeing that we do have power. Yeah, the government does this, the government does that, and they leave people feeling powerless, but this is just a snippet of when we let go of, I'm on this side or you're on that side of the parties. People believe in honest markets, honest living, honest government. I hope this isn't an inappropriate analogy. I say this respectfully, but when I think of what it was like for the people who were slaves that, and you have this one guy comes around beating them up all the time, but then eventually they say, wait a second, we're making all this stuff. This guy just comes around and hassles us. If we throw him in the lake, you can actually, interesting what can be possible. And I do think we have power. I think this is a great example of it. I personally believe there's still a lot of things going on behind the scenes regarding the politics, which doesn't mean you have to agree with what someone known as a letter of the alphabet says. I think there's and I think, no one even mentioned that. People go, oh, it's conspiracy theorists. Okay, fine. I think there's a lot of psyop misinformation mixed in. There's often the way that I find in finance or in politics is that, you mix in these things where there's part truth and part complete not truth. And then so it's like if anyone even considers the argument and looks for the different pieces and see which ones might be accurate. So I'm not saying that is the way to look at it, but I think there is stuff happening politically behind the scenes, whatever that may be. I guess we'll find out. I don't think it's completely unconnected to seeing what is happening here. And anyway, we'll take one final look at some of these markets and then going to wrap up for now. Maybe we'll be back later today. We'll see. Do have Dave Kranzler coming up, I believe, today, or maybe we'll save him for tomorrow, because also place to be today. In fact, we'll save Kranzler for tomorrow so he can cap off the week with a nice recap of what he's been seeing. But because today is Rob Kientz of goldsilverpros.com hosting the Solutions 2021 conference. Link is in the description field below. Going to be a lot of fun, and it's free to attend. How to survive a currency crisis. I mean, all these issues we're talking about. I am appearing at 3:30 Central Time. What do we actually do when the dollar dies? I'm sure we'll be talking First Majestic. Then there's an after hours party from 6 to 8 Central. So a lot of your favorite gold and silver speakers will be there. There's the great Jerry Huang. Look how darn handsome that guy is. But anyway, if you have questions, want to talk, hang out, great conference going on today, hosted by Rob Kientz. So go sign up there now. And when we get to that happy hour anyway, we'll see what price GameStop is. We will see what price First Majestic Silver is. Looks like as I get ready to wrap up here, it's about $18 silver. Let's get a final look at that one. $1.25 now. Also in the description field below, sign up to win this silver bullet, and you'll get posted with these videos. So as I maintain my pledge to keep you miles ahead of Wall Street on a regular basis. That way you can get the information there. So go have fun looking at your portfolio, refresh how much money you've made, enjoy it. You know, we've all certainly gone through enough days seeing the price down. I would say trade and invest responsibly. Talk to your advisors. But if you want to know any more about what's really going on in silver and what I'm seeing, by all means, hit that subscribe button, the notification bell, and plenty of content on the channel. And with that said, gonna wrap up for now. Maybe we'll be back later, but come join us at the conference and have a happy silvery day, everybody. You are watching the Silver Squeeze 1-year anniversary, a look back on the unresolved issues in the silver market here on Arcadia Economics. Well, hello there, my friends. Chris Marcus back with you on Silver Thursday. Maybe if the fireworks continue on this one throughout the rest of the day, maybe get another $1 or $2 in silver. And this will be a bit of a historic day. Certainly has been the case for First Majestic Silver, which is still up. It's come back in a little bit. Still up about 279, 20%. Although we had some breaking news here. GameStop and AMC trading restricted by TD Ameritrade, Schwab, Robinhood, and others. Very interesting development. Here's the quote. We do not believe this situation will subside until the exchanges and regulators halt or put certain symbols into liquidation only, said Interactive Brokers. So some brokerage houses have begun to respond to rapid buying by social media inspired platforms. Somewhere down in here it mentions that they're halting buying. We have placed over restrictions out of abundance, blah, blah, blah. Margin announced that. Option trading, liquidation only. Now, if I know we have a lot of silver investors in here, if this is all sounding familiar, like what happened to the Hunt brothers, I would say that it is. In addition, long stock positions will require 100% margin. Short position will require 300% margin. Let's see. So they are somewhere in here. They're putting a limit on opening buys, I believe. I saw it before I started. We put several restrictions on the transactions. Says charge requirements, limiting how much an investor can borrow. So anyway, you can dig through here. I guess the main takeaway, anytime you have a market, supply and demand is what it is. You put a steak in front of your dog, he thinks what he thinks about it. Now, if you pet him and let him eat it, there's going to be one reaction. You can scare him so that he's afraid to eat it, would be another reaction, but that's not going to change that he wants to eat it. So when you start tinkering with demand, is the same as when the Fed tinkers with the interest rate markets, and then it always blows up because it inflates bubbles that eventually pop. And if the same here, you know, if you're trying to alter the supply and demand, people want to buy it and you say they can't, or you create legislation or rule changes that they can't. Reminds me of when you pull the goalie in hockey. It's kind of like a last ditch move, which can work. And maybe this does subside, yet there's also the chance that if that blows up, then watch out. We'll see what happens, but it reminds me of when the the government tells you, oh, everything is under control, we got the budget and everything, and find out later that things are imploding underneath the surface. So GameStop shares fall over 50%, halted several times after brokers placed restrictions on trade. So you can see the impact there. There was a note at the top. Robinhood has halted buys. Maybe it was in a different article I saw, but let's click back here, see what they're saying. So down to, this was $500 like 3 hours ago. So wild volatility. I'm sure that may be reining things in First Majestic Silver a little bit. Was as high as $18 earlier this morning. Let's see, after halted several times after brokers placed restrictions on trade. David Tepper telling investors to be careful playing speculative names. I think, let's see. Don't be scared of the drop. One trending post said Thursday, don't be scared of the drop. I won't comment on these posts. I mean, keep in mind, I know there's a silver thread going, which I hear is quite hot right now for understandable reasons. There's probably a lot of good information. There are probably comments that maybe aren't exactly what you would follow. So, you know, I know it's going to be a little bit of might be a confusing time for people. Just talk these things through with people you've known for a while and trust. It's great to read the boards, see what's going on. I appreciate that you're tuning in and watching me right now. I will promise I'll give you my best honest opinion, and I think I've gotten pretty darn good at some of these things. So, but I mean, again, I think when we go out and research, the part if you're getting information and keeping track of these things is great. But at the end, the more in any area of life we take ownership for the results and what's happening, that's an important part of the formula too. So just passing along that word. And before I wrap up, here's another one I just saw. Is the Reddit rebellion about to descend on precious metals? So this is on Zero Hedge, and they're talking about the chat group in there. I won't go through all the reasons that silver is the most manipulated asset on the planet. You can check any prior videos. Go ahead and hit the subscription button and the notification bell so that way you can stay posted as we cover more. But I am going to look for, where's the view count? Because Zero Hedge, well, they have quite a large audience, and usually you can see that somewhere. So 140,000 people saw this. And, you know, I think, again, you have a situation where once the word gets out, watch out, and the word is getting out. Wall Street bets, silver thesis in full. Well, let's take a quick, let's look at it together. Why not? We'll hang out for another minute or two here and see what this one says. And then soon I'm going to go eat breakfast, which I didn't get around to yet, but well worth it on such an exciting day. Gold fix, Wall Street bets, silver thesis in full before the open, silver, gold, oil, and they all skyrocketed. So anyway, you can go through that one. Let's take a quick look at the other metals before I close this out. I'll hit the refresh here, but silver getting back up there. I might add, again, while this is not legal licensed financial trading advice, I bought, what did I buy yesterday? It was these SLV calls, and I'm trying to exhibit some restraint. So I bought the SLV Jan 29 of 20. So expiring tomorrow, I was making a 3-day bet. I bought the 24 strike. Let's see, what did I? SLV. So I paid 13 cents. I bought 24 of them. And I just sold 4, fortunately at 84 cents, which is nice. But really what I'm getting at here is that, you know, if the whole point is to buy low and sell high, yes, I think this is still early, but I don't know. I mean, if you told me silver was down on the day, I wouldn't be stunned. So especially if you do have some big gains, at least I'm not telling anybody what to do, but a time to consider some money management. I do think in the long term, things will go higher. So if you're just playing for the long term, then the best part, you can just sit there, watch this, not have to do anything. If people are trading a little more actively, I have a mix of both that I do. So anyway, that's just how I look at it. Not necessarily how you should look at it. Although fortunately, if you do have any questions, later on today is actually starting now, the Solutions 2021 conference by Rob Keents of goldsilverpros.com. I'm speaking at 3:30 Central Time. I think we're going to live stream that to the channel. Then fortunately, there is happy hour. So grab yourself a nice something to drink and eat, and we'll all be hanging out. You can talk about a wild day of trading. So this is in the link in the description field below. And with that said, again, we will see what happens. But now trading houses limiting buy-side orders. And I wonder now, actually, the final thought, I mean, at this time, if they told people that they could not initiate buy orders in First Majestic, if that gets placed on the list, man, that would be the ultimate showdown. Because again, you know, sometimes that can delay things, but could go the other way. We shall see. Hit the subscribe button and notification bell, and I will see you soon.
Listen, we can say a silver squeeze. What I'm seeing is silver momentum. I don't know if you have the chart, if you can pull up the chart. Just looking at it, not only is this move in the last 2 or 3 days completely healthy, it's completely justified. We've talked about for the last year how silver needed to catch up to gold. Gold had that big run up into 2020 through August, then started to come down. Silver never regained its all-time highs like gold did. It had to play catch up. We're not even there yet. This is a healthy move. Where we go from here, I don't know. I think we can continue to consolidate and squeeze before a big move higher. I am excited. This is great. I thoroughly love it. I'm getting so many calls and emails and messages from people asking me about silver that never gave a flying shit before. And so this is good. I'm glad more people are coming in. Now, this is not overblown. I've got to address something that people who think, this is not a healthy move. F that. This is a healthy move. It's not at all-time highs. We haven't even reached $30. The squeeze, I don't know if this is as much of a squeeze as it is just a momentum. This is a good move. We need this move.
No, I think it is extremely good to get that attention on, right? And it all started earlier this week, or actually late last week, with the GameStop short squeeze and the Reddit group Wall Street Bets bringing a lot of attention to this whole sector. And people were just looking for short sold or sectors, stocks that were massively short sold, right? And the silver was brought up, and it's got over 10,000 likes. I think the Reddit group is at over 6 million members right now, just following what is going on there, looking for the next hot pick. And fortunately, silver made it, and we're in the junior resource space. Phil is a major miner here, so really excited to have him come on in a few seconds to give his perspective. But run us through it. Like you made some bold statements there, Trevor. Like, where is this headed? Like, and I want to talk a bit. And fortunately we got David Morgan and Chris Marcus coming on as well. I really want to talk about the fundamentals of this as well. Are we even strong enough to push the silver price? Who are we fighting? Right, that's I think something we want to get to the bottom of, and that's why I'm extremely excited to have these three guests on. I'm asking Trevor, should we switch over?
Okay. So I posed this question. Our friend Pete Panda thinks that J.P. Morgan dropped their short position last night. Pete, I think you're wrong. I think Chris is going to back us up, but the data shows they probably dropped that short a while ago. I think what we had been fighting was literally just sentiment. Nobody cared about precious metals for the last couple of weeks. They were chasing these high-flying tech stocks. And this is why I wanted on Chris. I started reading his book about a week and a half ago. A lot of great information there. Is this a Hunt Brothers type of scenario? Probably not yet. But the bullion banks are definitely scared. Like, listen, like for every ounce of silver in the system, there's 500 contracts and derivatives. Compared to that, to GameStop being short 140%. I mean, I know Chris is like laughing. He's like, every time I tell Chris he uses the word manipulation, he has to take a shot of tequila. Well. No. Hopefully he got his bottle next to him. But this is the game that the system was set up for them to have a higher power in the price. And now people are starting to push back. And this is good.
Fantastic. Like, let's get to the bottom of this. I've seen lots of photos on Twitter where people post their bullion and they just bought bullion. And I think it was Gold Ventures, a Twitter user with over 35,000 followers on Twitter, who told everybody, buy silver now, buy it physically. It's got over 2,500 likes, a zillion retweets as well. Now I want to switch over to Phil Baker. And I just switched over. So Phil, you're live. Thanks for joining us. Really appreciate it. Are the bullion banks calling you? Are they desperate for silver? What's your feeling of that market? Are you getting more retail inbounds? Like, I've been getting some posts under our Twitter feeds, like who is AG in that case, First Majestic, or what is a short squeeze? Are you having retail investors now that invest maybe $500 into Hecla, reaching out to you or your IR department, say what is going on? Do you see that actually?
Phil, yeah. We've always been talking about there's going to be some sort of catalyst that moves precious metals higher next, right after this consolidation. In fact, we are currently seeing, as I'm talking, I mean, gold and silver are coming back down from its daily highs. But here's my question. Like, we never knew what the catalyst was going to be. And in hindsight, we wouldn't have known what the catalyst was until after it happened. Do you think this is that catalyst?
Phil, I really appreciate you joining us. Thanks for playing ball this morning. It was awesome. We said, as Trevor said, we set this up within 10 minutes, and I hope it worked all out. And really appreciate you being available. That was fantastic. Thanks for coming on. Bye.
And can you imagine being a CEO of a silver mining company right now?
It's got to be fun. I have to admit, it's got to be fun.
Just as exciting as being the CEO of a gold mining company when gold went up to 2,100 or whatever it was.
Exactly. So, Trevor, before we switch over to our friend Chris Marcus here, I'm going to ask you to jump out of Zoom so we don't get an echo. I'm just making sure. Okay. So just making sure we have our eyes and ears and everybody out here. So this is a live session with me as the technical director and running this AV poop show here, right?
You're doing a hell of a job.
So let's see if this keeps working out, and let me see if I can get Chris Marcus on here in a second. And I'm really excited to hear from him. I think I just need 1 second here to get him set up. I thought it had worked before. Let me just get him here, and maybe Trevor, you can you can talk about what you're seeing. Where's the silver price at right now, and where are the major miners trading? What do you see?
So I'm seeing silver's February futures is at 26.90. It has come down. It tried to get up to 20. What was the high? 27.77. So it is coming down, but it's still up for the day. Gold, on the other hand, has come down about $28, maybe a little bit more than that from the high of the day. So pretty interesting, but there's still continued flow. I mean, what I'm watching here really is we're seeing a sell-off in the major markets. I mean, futures on the S&P and the NASDAQ really have tumbled in the last hour. The Dow Jones is down over 2%. And I think it's just kind of bringing a lot of people are kind of selling almost everything right now.
Okay. All right. I got Chris Marcus on. Chris.
Where's your battle axe, Chris? Let's show him your battle axe, buddy.
Resting for the studio, but I am planning a concert in Denver soon, Trevor. So I hope you're going to be ready to come out, and who knows what the price of silver will be in a month or two, but great to be here with everybody today. Thanks for having me.
Oh, it's fantastic.
We certainly miss you here in Denver, my friend.
Well, it's be back there soon, and it's fun following what's happening today. That's for sure.
Hey, Chris. Okay, you tell me. We kind of iterated it. How many derivative contracts supposedly are out on a single ounce of gold in the system right now?
Are you saying how for each ounce of gold, how many paper claims are there?
Silver. Yeah.
I mean, I guess I have some clue, perhaps. I mean, I'd say the first thing, it's a lot of issues silver related, and maybe David Morgan can confirm this when it's his turn. We're guessing at a lot of this data. But I mean, when you look at, I think we hit 2 billion ounces traded in Comex yesterday. I was looking forward to seeing the volume there. I think it was 2 billion ounces. I'll pull it up later perhaps, but 2 billion ounces traded. In a normal year, you only mine about 900 million ounces. So that's twice So all these mining companies, they go out, they dig up in a regular year. Forget last year where the mines got shut down because of COVID. Regular year, it's about 900 million ounces. And yesterday on the Comex, they traded 2 billion ounces. It's funny. I remember when I was doing the book, the big silver David, as well as several of the other people I interviewed in there, was that for each ounce of silver, how many claims do you think is on it? And I was actually watching David. I cut out his clip again because I love his answer. And he's saying, well, it's based on certain pieces of data, about 500 to 1, but we don't even know what's in derivative land or the stuff that they're not reporting. I don't know, maybe does even Jamie Dimon or JP Morgan, could they even calculate their true exposure? Probably not. So, a lot of it's guesswork. I've yet to hear someone give an answer lower than 500 to 1. It's a lot more than 1 to 1. I think the concept is more important than duking it out over whether it's 100 or 200 or 300. I've not found anyone who can explain to me another outcome aside from eventually the end of It's a Wonderful Life. And that's why, I'm sitting here holding the book. Trevor, I don't know why you just waited to read it. I got your copy a year ago to help you out. But here, with David Morgan in it, the big silver short, subtitle, How the Wall Street Banks Have Left the Silver Market in Place for the Short Squeeze of a Lifetime. I didn't just write that yesterday. That's been there for a year. I've been studying it for a decade. And perhaps the last thing I would say is that that's kind of what I thought back in 2011. The book was almost an attempt to find, I'm like, no, there's got to be some blind spot or something I'm missing. So this was more of an investment where I could be, at least I stand by that subtitle of it being the short squeeze of a lifetime more than ever. So we'll see if that plays out in our near future. It seems like it is starting.
If I could jump in there, Chris, and you said short squeeze of a lifetime. So you actually do believe that the current events are strong enough to take us to a new level? Or is that just a blip on the silver price radar and it's got to be gone and nobody's going to care about it next week again when the media stops covering it and Reddit is shut down or Wall Street Bets is shut down, Robinhood went the way of the dodo bird? Like, what do you think?
Well, to be clear, I did not say that. Maybe I'd phrase it a little differently. I see Trevor's got his sword out. Hopefully I'll have an answer that pleases him. I don't want to get him upset. Well, on one hand, you could say it's already made an impact. First Majestic's up $3 or $4 in the last 2 days. So,
is that sustainable?
Yes, but it's like a tie game in the fourth quarter. I think people assume this stuff. And I can understand that because a lot of the things are rigged. A lot of things are planned in advance. And I think when you really study and look at the things that have happened, but I think there's also that degree to which, it's not decided. And I think this is incredibly exciting to me, seeing that people are standing up and making a difference. Also, perhaps worth considering. Now, this is just something I'm wondering. Don't want to lead anyone astray here, but I see all these other things where you have influence from groups like Soros or one party or the other party. Is it at least conceivably possible that a political influence is in some way connected with what's going on? I don't know that to be the case. I've not seen any evidence of such, but as someone investigating a lot of unusual things going on at the moment, so I don't know much about that group. I don't know who's in there. Maybe Warren Buffett goes in there with his hot chocolate every afternoon for all I know.
Can I bust in here real quick? And I want to play a little bit of the other side and maybe less conspiratorial and more just what the facts are.
Okay.
The government, the Federal Reserve has printed 30% or more of all the U.S. dollars in circulation right now have been created in the past 10 months. Your dollar has been devalued, continues to be devalued for the last 80 years. Now they can say they're going to create another $2 trillion in stimulus, and maybe the overall population of the country will get $2,000. That doesn't make up for the loss in your buying power because of the devaluation of your currency. The government is not going to come save you, and it's not going to come in the form of a check. They have lost control, and we're seeing people move into something that is either decentralized, like a Bitcoin, or actually has hard value, like gold and silver. One of the things that surprised me this week, and Chris, maybe you can shed some light in on this, is I was seeing the data from the podcast. We have a lot of young listeners, a lot of millennial type and even younger who are listening to this podcast. But I don't necessarily think that the market, the silver and the gold market, is represented by that younger generation as a whole. It's always deemed like, oh, it's like, your grandpa's safe haven market, or your dad held silver coins just in case of Armageddon. But I do think that there's more going on for a hard asset allocation from a younger generation than we probably thought there was.
I mean, there may well be. Again, I'm interested to learn more about the history of that Reddit group. I don't know that much about it. I'm sure someone who is familiar with it. I mean, it's interesting to think who could be in there. It's like, even when you have a podcast, even if 1,000 people listening, well, who are the 1,000 people? It can make a big difference. But I think more than age, perhaps I thought there were maybe two ways this could end. Either A, someone eventually shows up for their physical metal and is not there, which it's hard to know how close we are to that. But I mean, now you have Janet Yellen in the White House with a $8 trillion Fed balance sheet talking about how it's time to go big and supersize that. So, it's like,
you think you think 2 trillion's big, like wait until it's coming down later.
So, I mean, in case people didn't have enough reasons to buy silver yet, I mean, I don't know what you're supposed to think about that, but I mean, it's also, to me, either my entire thesis is wrong and there's no massive short position out there, or it's not levered up some insane number, or it is. And at some level, whether it's Wall Street or Reddit group or a fund manager, the real dynamic is, say, when you have enough buying power that realizes or even thinks, whether rightly or not, that they can do something about it. Yeah, I think it's very vulnerable. Will we have like $50 silver next week? I don't know, but if you told me this is how it unraveled. So again, I want to be clear the way I'm phrasing things. There's a lot we don't know. There's imperfect information, but if you told me that one day my thesis is going to turn out to be correct, that is it possible that this could have been how it went? I would think so.
Is this the opportunity of a lifetime in the silver space?
Yeah, I think so, because whether it happens this week with Reddit or next year with something else, I mean, I don't know. I can't figure out how else it unravels, because I can't figure out how the Fed undoes the balance sheet. I personally don't think they're trying or want to. I mean, I think these guys are just stealing whatever they can and hoping that no one notices. And that'll go on until it stops.
I think I disagree with you about the opportunity of a lifetime in silver. I think the smart trading came in when silver was down to like $13 back in 2018.
Trevor, it's still half of not only its 2011 high, but it's 1980 high. So even before QE, before like 28 trillion or whatever the real amount is. But we're in an environment now where Bitcoin goes up 10 or 15x in a year. Nobody flinches. Tesla's up, I think, 18x since they started the swap lines a year and a half ago. GameStop, I think, was up 40x. So, I mean, we're talking about, what if silver gets back to its 1980 high, or whatever the correct inflation adjusted equivalent actually is, and then goes up 17x after that? I know that's like, people say that like it's like we're not allowed to talk about that in silver, but it seems to be happening in just about every other asset on the board.
Okay, we got David Morgan here waiting on the other line as well. We want to switch over to him in 1 second as well. So last question for you, Chris. Where are we going to end February? You give it 4 weeks. Silver price of silver at the end of February. What's your prediction with the information that you have right now?
I think there's a good chance it's a decent bit higher. I'll leave it at that.
Okay, fantastic. Chris, really appreciate you joining us impromptu. It was fantastic. Thanks for coming on. I think based on the viewers we got, we actually have a lot of attention here. And use the chat as well. Like, feel free to exchange ideas. We got the YouTube chat going. We got Twitter commentary going. Use it. Chris, we're going to get you back on very soon. Talk about what's going on here.
Thanks so much.
Thanks, buddy. Miss you, man. Love you.
All right, fellas. I'll see you soon.
Fantastic. All right, let us switch over to Mr. David Morgan. And let me just double check the sound that we don't have an echo coming in. I think it looks good. David, welcome on the program. Thanks for being available on such short notice, but we felt it was urgent to do it. And your name has been dropped a zillion times, so we're excited to have you on.
Well, thank you.
So a lot has happened, and maybe you help us understand it. And
yeah, I think if you don't mind, Kai, I'll just jump in a little bit. Everything Chris said was pretty accurate, but I want to just kind of set the record here. The rule of thumb of the paper ratio to physical is usually around 100 to 1 minimum. It's been as high as 400 plus. However, in the last several months, it's dropped down substantially, which indicates to my thinking that the leverage boys are not willing to put on the type of leverage that they were in the past. The other part of Chris that's very accurate and doesn't get talked about hardly ever is we only know what's transparent on the futures exchange. What we don't know is what is the over-the-counter derivative market doing, which is far bigger than the transparent market. So the way he kind of smirked, I remember him asking me that question, or at least my memory was we were riding in his car out of New Orleans, I think, when we discussed this. But so I want to make sure that, to set the record straight where we are right now. And so just let me give it back to Trevor and Kai and see what kind of questions you've got.
Hey, I was wondering, one of my questions is so it's been a few days since we've seen the last commitment of traders report on the precious metals. And I'm just kind of curious, is that something you look at every week? And if that comes out later this afternoon, I mean, do you think that's really going to show really how dynamic this market was?
It won't, because it only goes through Tuesday. Okay. So we'll have to wait till a week after that to really see what's going on. But I do pay attention to it, not as much as I used to. When it was way back when there wasn't an ETF, prior to the SLV, you could almost trade weekly basis the COT. It was that much good information, and the timing was pretty associated with the report. That hasn't been true ever since the advent of the SLV onward, which is a lot more silver ETFs than just the SLV now, as you're well aware. So yeah, it's still important. The last time I looked was about 2-3 weeks ago before I left the States, and it was neutral, meaning there were just about as many, it was about as bullish as it was bearish, the way I interpret it. There is a little bit of art to it, but it's pretty easy to determine when you're getting near the top and it's ready to fall in paper price, because the shorts have infinite money and the longs don't. So when you're betting at a poker table against somebody at table stakes and they have infinite chips and you've only got 1 million, the odds are highly favorable to the player that's got infinity to play with is going to beat the person that's got a measly $1 million.
There's no risk at the table, right? So fantastic. David, I was just checking out SLV. I was looking at the share price of First Majestic as well, and Hecla, because we had Phil Baker on, and it seems like we're running a bit out of steam here, right?
Yeah.
What is happening? And I asked that before, what is your opinion? Is this movement that we're seeing, I love all the eyeballs on it, but is it strong enough to catapult us to that next level?
Doesn't look like it. I got excited yesterday. I mean, look, if you look at the last 3 days of trading, on the 27th, we had a flat market that was around 25.50, which is it's an okay price, I'll call it. But certainly silver could be a lot higher. And I like what Chris said about, who knows what the correct price is because we don't have a free market. So yesterday, this thing with the GameStop Reddit folks, et cetera, just started hitting everybody. I was getting flooded with TMI, too much information, and it took off. And we went from around the 25.50 level in New York on the open all the way up, almost hit 27. And then it started to sell off, which means that the short sellers, the professionals, were taking it down. And it closed at about 26.50. So we're up about $1 on the day. It held through the aftermarket or the Globex. And then we opened up in New York and we got all the way up to about 27.50. And we traded for a little more than an hour. And now it's back down to, I don't know, as we're doing the interview, it looks like about 27. We need to get over 27 and we need to stay there before I get bullish on a short-term basis. I'm bullish long-term, almost a perma bull. And that's how I see it. I don't see enough momentum, but I did a little bit of arithmetic and I looked at the warehouses. And what I determined was that there's about $4.5 billion worth of metal that the registered category has. So that's really all these guys have to play with. Now, of course, they, as we already said, hypothecate it 10 times, 20 times, 25 times, 100 times, whatever. It varies. But the real physical metal is about $4.5 billion. So if 1,000 people put in $5 million to take care of business. Now, not that the price going up wouldn't cause people that hold it now to sell into the market, but I'm just going to discount that and do a thought experiment that everybody holds their position. There's buyers only. So 10,000 people at $500,000 would corner the market. 100,000 people at 45,000 would corner the market. But here's the interesting one: 1 million people at 4,500 will round up to 5,000 would corner the market. And I think in a nation state of whatever the U.S. is, 330 million people, there's probably 1 million that could be savvy to the silver market. But that's just the U.S., which is 4 or 5% of the world's population. So I think you could easily see 1 million people putting 5,000 U.S. equivalent into the silver market would take care of the entire registered category on the Comex. And then it's, in theory, game over. Now, of course, a market's a market. Not everyone's going to hold as the price goes up. But silver's interesting. It always moves more when you start hitting the new highs. And I think that's how most of the algorithms go. And I think someone mentioned that earlier. I think it was Trevor, that once you get to a certain level, you actually have less risk buying high for a while, because there are no sellers. Everyone that sees that silver's at, $55 and it's never been there before nominally, I'm not selling. Why would I sell? Maybe it's going to 75. So any little bit of new buying drives it up to 75. And I'm not selling. It's probably going 100. Maybe that David Morgan isn't a crackpot. And all of a sudden, a little bit more buying comes in. So you see where I'm going with this. Now, it's not just true of silver. It's true of any market. But it's especially true of silver, especially because anyone, of course, I am biased as all get out. I've devoted so many hours of my life to studying the silver market. So bear that in mind. Nonetheless, there is something to be said that silver has a unique place in not only monetary history, but the technological age. I mean, it's the most important commodity known to man outside of oil. Without oil, the world stops, basically. But without silver, it also stops. So, and there's other things that are important. I know food, water. I mean, I'm not trying to be one way about it. I'm looking at it from an investment or a monetary perspective. So let me give it back to you and Trevor.
Yeah. David, I just, that napkin math you just did was quite fascinating, actually. So thank you for that. But I just keep on thinking, I think Wall Street Bets had what now has 4 or 5 million?
6.1 this morning. So yeah.
6.1 million followers globally. I mean, so what you're stating,
Yeah. I mean, sorry to interrupt. It gets me excited because let's say that 5 million of them, they would only have to put in about $2,000. Game over. Game over. If the game stops, stop the game. Let's stop the game. You follow my drift?
Yeah. Well, and it's like based on your examples you made with silver just going higher and nobody's selling. Well, look at what happened to Tesla. Nobody was willing to sell that stock because it was just getting momentum. And there's really a very simple analogy, right? And of course, there are other factors at play. And I've seen actually the major markets come down a little bit. I think the Dow Jones went down from over 31,000 to closer to 30 right now. Do we see maybe some risk aversion or people taking money out of the main markets? Is that what we're seeing right now, the Reddit crowd, and are people getting more conscious about the main markets now?
Well, I think the overall shift is going to take place this year, and it's going to be from things we want to things we need. I mean, the food, category I've been, I would say complaining. I've been talking about for quite some time about the food supply problem and food disruptions, and also kind of a slant on, meat bad, non-meat good. And there's a lot of factors, but the main point being that the foods prices are going higher, higher, and higher still. That's number one. Most people look at that as inflation, although it's going to be perceived as inflation, but really it's going to be more of a supply shortage, which means no one's going to stop and consider what most people are just going to say, it costs me more to eat. I think I better buy more food. And anyone that has savings is going to say, hey, I might want to store my wealth in gold or silver. And the spillover into silver will be unbelievable this time, in my strong, studied opinion. And the reason being that once the institutions run the gold, when the pension funds go, oh no, there's only one thing we can do. We got to put 5% in the gold market. No, let's do 10%. So when you've got all the IRAs, all the pension funds, and all the Wall Street money that's looking for the next hot thing, and the dollar destruction continues even further, because heck, we could only print up 30% in a year more than we had and not have any repercussions. Are you kidding me? How far do you go? You go to the tipping point. You go to the crack of boom that Mises talked about so many years ago, where people finally wake up and smell the coffee and say, you know what, I don't trust the dollar anymore. And when that's hit, and it's already hit, but not at the level where it's going to really move the gold market. But once it happens, you can't turn it back. It's a psychological event. It's not a monetary event. It's not based on how much they print. It's based on how much faith and trust there is in the system. And when enough faith and trust break down to the point where people say, I'd rather buy 10 cans of tuna than hold on to these dollar bills, that's the problem.
Kai and David, I know Chris is still on, and I know Chris has actually got a follow-up question for David. Is there a way to get Chris back on here real quick, Kai?
We'll probably completely destroy
I'm
the
here.
design here. Let
Can you
me
hear
get
me?
him on in a second.
Okay.
No, we can't. Like it's
okay. So
not on the live stream. I can hear you, Chris.
Typing them as Skype, I can read it.
All right. So Chris wants to know if you can
Can you hear
discuss
me?
what would be.
Yeah, Chris, we can hear you, but the stream cannot hear you.
Yeah.
Okay.
So here, so Chris just texted me. He's like, what would be the best way for Reddit to actually force the squeeze?
It's always been the same story, Chris, and you know the answer. I think you just want verification. The only way to squeeze them is to get a hold of this. The thing that's beautiful is I don't know the demographics of the Reddit crowd. Obviously, they're smart, and obviously they understand how rigged the system is. So, you don't need a brokerage account. You don't really need a third party in the metals world, which is beautiful. You just basically call up a dealer, and you can, over the phone, order the product. And so you lock in your silver price at $27.50. There's a premium on the coin. You send them a wire, a check, a credit card, whatever they accept. 2-3 weeks later, you get it in your mailbox or delivered by UPS or FedEx. And that's the end of the story. So that's what's going to do it. That's why I use the analogy, the analogy I use with the napkin math. There's only 150 million ounces sitting with the dealers. Again, that's a fact. That the part that was a presupposition, a fantasy maybe, I doubt it's a fantasy, is would there be much selling as the price moves up and up and up? The answer is we don't know. We certainly know that the professionals would probably sell into it because, after all, it's just a bunch of Reddit folks. What do they know? Until all of a sudden the supply starts being drained off. And now they're in a position where not 25, or, they shorted more at 30 and 32 and 33 and 38. Now they got a really big short position that they really don't, they're having trouble managing. I I mean, that could happen. It basically happened with the Hunt brothers. The Hunts bought a lot of silver a lot lower than the prices where the exchange started to get in trouble. But the main short was a member of the exchange. So they basically broke the rules. Now you'll say, oh, well, no, there'll be people that will defend that. But I happen to know who the fund manager for the Hunt brothers is. I'll consider him a friend. I've met him a few times face to face, personal, up close, talked to him directly. And he says, and I agree, they changed the rules. They said you can only sell. Well, how rare? Isn't that what just happened on this GameStop? You can only sell. Yeah. So these people work from a criminal perspective and pat themselves on the back for being regulators. What are they regulating? They're regulating their own pocketbooks. That's what they're regulating.
No.
David,
by the way, let me jump in real quick, Travis. Just a quick public service announcement. We brought Chris back on the screen. I sacrificed the whole design of our live stream here, but Chris, you're back live with us. We can all hear you. So,
thank you.
So it's great to have you back on. And I'm not sure. And just a quick second, not sure what everybody's cutoff time is, but I know we have a lot of viewers, and maybe we can jump to a couple of questions after a couple more for David and Chris here.
I have only a few more minutes. I have an appointment here with Roskin Gold actually in 7 minutes that I need to jump on. Shameless plug. But I do want to just probably leave you open-ended for both David and Chris and even Kai about the significance of this moment in history when it comes to the financial history of, the global markets. And I don't think you can downplay really the significance of what's happening and how this is like almost like a grassroots move to democratize and force transparency in markets that have just been lining their own pockets for such a long time. There is a real, I think we'll look back in this in maybe in the years to come and realize this was maybe a moment in change. Do you think this could be it?
I'll take it. Yeah, I think it could be. I think you outlined it pretty well. I mean, I could go even further. I'm pretty amped up today, as you could probably tell. I mean, basically, the way I see it, in my opinion, is that there is a one world religion. It's called money. It doesn't matter what part of the world you're in. Money is your God. And that's true. Now, most people won't admit it, but it is the truth. And the power elite, the banking elite that control the money system have all the power. That's our quote unquote God, small g, I'll say. But the point is that if the people realize that the power is in their vote, in other words, you've heard it over and over, Trevor, Kai, Chris, if you really want to make a change and get rid of this certain detergent that's harmful to your clothing, gives you a rash, quit buying it. And you know what? If everybody quits buying X brand of detergent, they're out of business. Well, really, the same thing plays here. If you are saying, I got all this digital money sitting in my bank account and I don't trust it anymore. I don't trust the banks. I don't trust the system. It's obvious what they're doing to these Reddit people. I want out. The easiest thing to do is make a phone call to a coin dealer and make a real money purchase. Think about it. When my dad started, when I was a kid, 5-year-old, my dad made $6,000 a year. We had one car, but my mom didn't work. And $6,000, if people don't know, a dollar is about 0.77 77% of an ounce. It's not 1 ounce, even though the current dollar is 1 ounce, because the Treasury doesn't know what a dollar is anyway. And that's the truth. I just proved it. So $6,000 was about 5,000 ounces. So one contract a year put a middle-class American man in good stead, no real financial worries, paid all the bills, was able to save, able to add on to the house, keep everybody, entertained, happy, healthy, and everything else. So you might consider that, what's a 5,000 ounces of silver going to do for you 10 years out or 20 years out, depending on your age? And the answer is, I think it'll be significant, but I've thought that way for a long time. But it'd be interesting to see a free market. So I probably overtalked it, but believe me, I'm not seeing the data I'd like to, that I'd say we're there and we're really going to go. But that doesn't mean it won't. I still believe, regardless of Reddit, it would go. But as you said, and I have to give credit here, Jim Paplava wrote the article, Silver Looking for a Catalyst. And you know what? We might get a synergistic catalyst. The Reddit might just be lighting the Atlas engines that start the rocket ship going. And then all those people that have been conservative and listen to people like me and others, obviously lots of others, and said, you know what, that kind of makes sense. He isn't telling me to put my life savings in silver. He's saying put 5%, 10% in there. And I don't trust the banks, and I don't trust Wall Street. And I've never bought a stock in my life, and I don't want to buy a stock. But I know what that coin is. That's the real money. Real money. I used to end my little videos with, get real, buy real, be real. It's maybe time to reassert that. Get real, be real, buy real. We're living in a fake world. Everything is fake. That's what Robert Kiyosaki's new book is, right? Fake. He's right on. Robert is correct.
David needs the sword. I wish you were holding the sword, David.
I love how riled up he is. And that's actually true. Because I did an interview with Robert Keynes, and everybody knows Robert Keynes as well, the other day, where I walked into the interview at 10 a.m. I was like, Robert, what are we doing? Are we masochistic staying in the gold silver sector investing? Like, what's happening? It's been very, very terrible. And then 6 hours later, I'm sitting in my chair clapping like a little kid, super excited about what is going on, right? So we've seen a massive shift there. So I just hope some of the eyeballs stick. And Chris, I got a question for you, because you've done an interview with Robert and it came to mind just now. And you looked at the overall silver coins. I think it was you who talked with Robert. I might be wrong. But Robert looked at the silver coins, and you could see the demand of silver coins. I think I don't know the time frame. It was 3.8 million. I think it was last month, right? What is there a lag in physical demand showing up on the buy side, or is that immediate? Like, do you know what I'm getting at? Like, I want to know, where can I see physical demand for like the Silver Eagle picking up, and B, like, is there a lag from physical demand to price?
Yeah, I think you're asking me. Yeah, there's a tightness in the market right now. Maybe asking Chris. Chris, I'll hand it over to you.
Chris is on as well. Yeah, so both of you could answer. Like, is this more a general question? Because I want to track it, right? Like, I want to see how real this is, because I've seen so many photos on Twitter of people posting photos of their physical bullion, like of silver coins, right? So I want to see if there's a blip.
I before you get started, I really have to jump. I'm really sorry that I got to go.
Okay, Trevor, we're going to wrap this up in 1 second. And
okay.
Like, Chris, if you could answer, and then we're done.
Yeah, the short answer, I mean, people can email Arcadia at Miles Franklin if they, even just want to find out what premiums are doing. I also bring on Andy Scheckman, who owns Miles Franklin, every Saturday night. Market, or the price on the Comex, generally has very little to do with what's happening in the physical market. Is it conceivable that we are nearing the point where those two forces revisit each other? It's possible. To be clear, there's not enough, at least that I'm seeing, to say that definitively. But, you keep throwing enough darts at the board, you eventually hit something. And, part of the fun, just like David and everybody else said, if you just own your physical silver, then it doesn't matter whether it's this week or next month or next year. And before Trevor explodes over there, I'll wrap up and say thanks again for having me. Great to see all you guys today.
Trevor, it was your idea. It was a fantastic idea. I got to host, fortunately. Thanks for joining us, Trevor. Follow everybody. Mining Stock Daily. He hosts a daily podcast on gold, silver, junior mining stocks. Follow him. He's doing an interview with a gold junior in a minute. So join his channel. He's on all of the podcasting platforms. David Morgan, the Silver Guru, the Morgan Report. Really, really appreciate you joining us on short notice. And of course, Chris Marcus, Arcadia Economics, runs a fantastic YouTube channel at Arcadia Economics. And he's on Twitter as well, Arcadia Economics. So really appreciate everybody. I'm speaking very fast because I know everybody has to go, and everybody else. Have a great weekend and enjoy the ride.
Thanks, Kai. Thanks, David.
Kai.
Thanks, Chris.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics for this week's session with Dave Kranzler, silver market expert, chapter 1 of the Big Silver Short. By the way, we thought we were recording the episode. We're just sitting there like making silver jokes for the last 5 minutes. Didn't realize I had not pressed the appropriate button. But anyway, hopefully now you can see and hear us. Special Friday episode, I would say really targeted at whether you are a member of the Reddit Wall Street Bets group, or I know a lot of the people in our audience are probably going in there and in the chat room. So, Dave, it's really great to have you here. And again, you have Wall Street trading experience. It's not coming out of left field. You've seen how some of these things work. A very credible opinion on a very
Traded
interesting
junk bonds institutionally for 9 years.
Yeah.
Making.
So you have that background. For anyone who's new to my career, I traded equity options for Susquehanna, which was...
You made markets also.
Yeah. And then in 2009, I started learning about gold and silver. 2011, started realizing something was not quite, despite the CFTC saying they couldn't find squat. Well, they actually found, Bart Chilton found plenty. They didn't tell us. Anyway, so a lot of stuff going on, and welcome on in, and it's going to be fun to dig into this situation. How are you?
I'm doing well, thanks. Happy Friday.
Well, thank you, Dave. It's a pleasure to have you here. And real quick, before we get started, I do have one announcement. Pleased to announce my friend John Lee of Silver Elephant Mining, their company, Silver Elephant, named to the 2021 OTCQX Best 50. And I'll read a quote here from John. States, Silver Elephant's pursuit of mass silver, nickel, and vanadium metal resources in the ground has great appeal to investors looking to preserve their wealth and profit from energy metals in the future. So certainly with a lot of attention drawing on silver, the commodity. Good time to be aware of Silver Elephant mining stock. And there's
Can I ask a question?
Please, Dave, go ahead. Yeah.
I thought elephants were gray, not silver.
This one is looking for some silver. He's digging his trunk around. He thinks he found some. Okay.
So I get it. So he's saying, hey, I got an elephant-sized silver deposit somewhere under the ground here. Where's this project, in Peru or something?
It's in Bolivia, Dave.
Bolivia, yeah.
Yeah.
I knew it was in that part of the world.
There might be
if he's got a big silver deposit,
elephant-sized deposit. So if you want,
why not call it silver mammoth? What if it's a mammoth-sized deposit, or silver brontosaurus? If I was him, that's what I would have called it. It's not just an elephant-sized deposit; it's a brontosaurus-sized deposit.
I'd say whether it's an elephant or a brontosaurus-sized deposit, maybe you want to go to the website, learn more about the company, so you can.
I look at it. I like the idea. I don't own it, but I like the idea. I'd like to see it go down in price, and then I'd own it.
Well, it's going to be interesting to see what happens to the prices of a lot of things. Obviously, I know people have seen the prices of GameStop, AMC, historic events. So, Dave, before we get back to silver, any comments in general on what we saw with those short squeezes, and then we can tie into how that might play out in Silverland.
Sure. I mean, these stocks, the non-mining stocks that are getting the dickens squeezed out of them, most of them, or a lot of them, had short interest that was in excess of 100% of the float, which means that whoever was shorting it, whether it's a hedge fund, maybe a Wall Street trading desk, maybe a sophisticated high net worth investor, I don't know, probably was naked shorting some of it. My guess would probably be there were hedge funds that were naked shorting it. I mean, GameStop, the company itself is just a shitty little company, right? And it got juiced because the founder of Chewy, which also loses a lot of money every quarter, it generates massive operating losses. So, the founder of Chewy decided he was going to take a stake in GameStop and shut down their brick and mortar stores and move it into the completely digital world. Well, the problem is it doesn't matter if it's digital or brick and mortar, that company can't make money. And so there was a reason why it was trading where it was trading before the market got a hold of it and squeezed it inside out. So, and eventually it's going to head back from whence it came at some point. I mean, who knows how long this short squeeze will persist, but I mean, that's why hedge funds were, short as hell this stock, because, it was headed toward bankruptcy, and it probably will be anyway, eventually. So, I mean, it's, these short squeezes that are being generated by primarily retail. I'm sure there's plenty of hedge funds that are jumping in on the action. Not every hedge fund is a short selling hedge fund, and some of them are actually traditional real hedge funds where they're long and short, right? So this game probably isn't going to last a long time. I don't know if the regulators are going to step in and shut it down. Certainly, Elizabeth Warren is jumping up and down as she's
Hey, come
do.
on, Gary Gensler's on it now. Of course, it's going to
Gary Gensler, sure.
Soon.
What I will say though, there was a nice article from Wall Street on Parade out this morning, and believe it or not, I mean, one of the objects of attack by the Wall Street Bets group are the big banks. Well, J.P. Morgan was long out the ass GameStop stock. So they, if they sold it when it was over 400, they made, 9 figures on their position. So it's not like you're, the thing of it is these Wall Street banks and at the longer standing hedge funds, these guys are sophisticated traders. They've been at this game for, as long as I have or longer. They know how to play this game. And they're not, there may be some hedge funds that are being hurt like that Melvin, but so what? Citadel, my old boss, who's the head of my trading desk, worked at Citadel for a while. I guarantee you Citadel is going to make a fortune on that acquisition of Melvin. So, you think you're attacking Ken Griffin. He's out there. He's laughing. He's laughing all the way to the bank. So is Jamie Dimon apparently on this, so,
Dave.
I mean, I applaud the effort at going after the man. Believe me. I'm as anti-establishmentarianism as anyone I mean, Abby Hoffman was my idol when I was in high school in the late 70s, right? Most of the people watching this probably don't even know who Abby Hoffman was. So I hate Wall Street. I hate all the financial corruption. But what's going on out here is not going to bring hedge funds and Wall Street to its knees, believe me.
Well, Dave, I don't even know where to begin. I'm appalled that you would suggest that JP Morgan could in some way be involved in some sort of inappropriate behavior. I mean, what are the chances of that?
Listen, I hate JP Morgan and Jamie Dimon as much as I hate anyone.
Yeah, well, I had a feeling you might say, well, the first part, it looks like First Majestic down 36 cents after the close, but I guess... Hey, here's the thing is that I don't know who's in the Wall Street Bets forum. I'm going to start going through it, though. I'm excited to do that. I think people have been posting stuff on our behalf in there. But, I mean, you never know who is in there. I mean, and perhaps more significantly, I guess the what I would say to silver investors, First Majestic investors, just the fact that this is like front of CNBC. Okay, maybe they're not covering the silver part yet, but look at these. Here's the headlines on. Get this. Okay, I see. Thank you. I got that alert. Nope, it's not going to go away. But silver rallies after Reddit post about executing a short squeeze. So let's take a look here on. I mean, that it's at least in the conversation now, whereas, I don't know, despite, I think we have fun like talking and making jokes about JP Morgan every week, but I think the majority of the world has no idea about this. So anything that sheds light on it, to me, is a net positive because, okay, maybe there's not, let's say for a second, there's not enough buying power in there now. Well, maybe by the time the word keeps spreading and now it's a national media event, I just see it can only be a good thing. And let's see if we have any. Okay, so there, First Majestic on CNBC. And we'll come back to this Robin Hood guy. But any thoughts on that, Dave?
In terms of?
Just that the fact that this has been a crime that, they tried to keep hidden, and everyone's like, whenever people like you or I or the others that speak up, I mean, there's a handful of them out there, but anytime we point out evidence, they tell us we're conspiracy theorists and all that stuff. but I mean, it's actually pretty simple. And I think the more that it gets out, now you create that environment where, I don't know, maybe there's some hedge funds that don't give a darn about silver as money, but they're like, oh, this is an interesting situation. Wait, Comex shows them being short. How many contracts? Or actually, give me a second. I'll pull up. I was curious to see what the volume of the futures was yesterday while we were seeing a roller coaster in the markets. So what if all those people reading Wall Street Journal and CNBC, maybe if a handful of them, a couple hundred people watching here now, if they see this darn thing lows, but basically you had 200,000 contracts trade yesterday. Not 200,000. Basically, you had over a billion ounces of silver trade yesterday.
It's paper silver. It's not
right, but
silver.
I'm just saying that there's a tension on things like these. Maybe some hedge fund managers notice so 205,000 contracts. That's over a billion ounces. And I might add.
You had almost the same amount on January 8th or 6th or whatever that was before any of this stuff started.
I noticed. So here's a little trick. January 8th, I did this last night. Whenever there's heavy volume, let's take a look at what happened to the price on January 8th. Let's go to the historical silver chart. But Dave, I guess the bigger point being that people are noticing what's going on. All right, let me put it in different terms. There's one on my question list. What do you think Eric Sprott is doing right now? What's he talking to his friends about right now?
I don't know. Maybe where they're going to take his Learjet for the weekend. They can fly without wearing masks because it's a private jet. So
maybe they're going to go to the Comex.
I'll tell you what. He's not
there's
out there.
There's your January 8th chart.
Not out there loading up on paper silver. He's probably have his guys. His team is probably still scouring for junior mining stocks with highly prospective silver projects to invest in. Maybe he's buying more physical silver. I don't know. I don't think Eric Sprott dicks around in the paper silver market.
Okay, that's great. That wasn't really my question, but
you asked me what I think he's doing right now.
I won't leave a question.
What he's doing right now.
If I can,
doing what he normally does.
Okay, then I'll share my opinion if I may for a moment.
Sure.
I wonder if there's any chance that at some point this weekend, Eric Sprott talks to any of his friends who aren't probably high school kids, but have investable funds and think, gee, maybe there's a vulnerable situation. And I don't want to speak for Eric, obviously, but I mean, I just think that thought is running through a lot of people's minds, which to me makes the situation interesting.
I
see you're not impressed. Okay, but
honestly, I'm not sure that these silver mining stocks make great short squeeze candidates.
That's not what I'm talking about, though.
What about
PSL? A lot of these guys in the Reddit group, they're talking about PSLV, and we'll get to the mechanics of what might be the best way to do something like that. But you have now a spectacle that is bringing attention to silver, and in the meantime, I think this happened after last week's show, and I don't think I can wait any longer to share this one. Despite the Fed's balance sheet now being almost $7.5 trillion, they're moving Janet into the White House allegedly, and she's saying it's time to go big. I mean, I'm going to call, maybe if Andy Scheckman's listening, call in and we can just put this on the front of the Miles Franklin homepage. You couldn't make a better marketing campaign. I'll get a picture of the balance sheet. I'll put her there. And then now we have Reddit groups that I'm told is picking up steam, and there's like more people joining by the second. But I see you're not phased. You're like, okay. All right. I got, don't worry, I got a backup plan. All right, let me try the curveball. Let's see if
You know, that nasty picture of Janet Yellen just leaves me speechless. I mean, every aspect of that woman horrifies me, intellectually and physically.
Okay, well, how about
she should be like, you know, somewhere in, you know, living in like San Diego, knitting sweaters for her grandchildren or something.
Well, how about, you know, we'll look at the antidote for central bankers, which would be GATA, our good friends, Silver Bill Murphy and Chris Powell. Chris Powell's been on fire this week. He's the one who writes these headlines. By the way, Chris and Bill, if you are listening, your first Majestic Silver cubes came in. Yara has
Where's
hers.
my cube?
Dave. You didn't win a cube, buddy. You got it.
Yeah, well, I have this.
Start answering some of the questions, buddy, and then maybe you get yourself a cube.
Look at that. I've got this.
That's like a little.
It's a 1 ounce silver bar, minted by Degussa. With, you know, and that's a tennis player. That's me right there. That's what I got.
The silver tennis Dave ounce.
I don't need no stinking first Majestic silver cube, although I do want one. They're really beautiful.
I love when you start pouting. It's one of my favorite parts of the show. Dave, all right. Well, maybe you can start building your resume for a silver cube at Silverfest 2, which is right around the corner in September. Here, JP Morgan helpfully lists 45 other shares vulnerable to the short busters. Wow, that certainly is kind of them. I wonder if they mentioned JP Morgan. I tried to find the list. We'll click on their link. I don't know if this has been updated.
I guarantee you, before they put that out, the first thing they did is they went out and their prop desk loaded up on call options on every single one of those stocks.
Dave, come on now. This is a family show. I gotta issue the warning here. You know, the legal stuff too. So obviously, you know, we can't just go on the air and talk about a bank being a bunch of felons. Well, actually, yeah, you know, actually,
well, I mean, it's exactly a true assertion, right?
Because there's already 74,600 search results when you Google JP Morgan felonies. 2 more felony counts for price manipulation.
Right. See, you can call him a felon. It's
920 for
misstatement.
And I think I'm seeing one of my lawyer friends this weekend who I've got excited about the premise of figuring out how Daniel Shack and his hedge fund already got a settlement from JP Morgan. And so I'm going to find out somehow what he said that made them write the check. And then I'm going to invite a couple thousand of my silver friends to come to the party. Dave, you can join in on that too. But not surprising to see JP Morgan involved in this one. But Dave, I'm going to get to some of the questions I have here. I guess, first of all, did you happen to catch the guy from Robinhood? For folks who may not have heard all of what happened, Robinhood and several other brokerages put restrictions, basically saying you couldn't buy. Sounds kind of like the Hunt brothers almost. You'd probably know a lot better than me. I hear there's, you know, if it's remove the buyers, kind of would help the shorts. And then he came on the air and there was some video with him on CNBC. I didn't understand anything he was saying, to be completely honest. Any thoughts on what Robinhood and the brokerages did?
You mean when they restricted the trading?
Yeah, that was, yeah.
Yeah. Oh, I don't watch CNBC, so I will say the guy who started Robinhood probably could use a haircut, though. But I mean, honestly, brokerage firms have a right to protect the integrity of their business. I'm not saying Robinhood is a business of high integrity, but when they extend margin to their customers, I mean, that's a service that the brokerage firm is providing. They don't have to extend margin if they don't want to. They have to borrow the money themselves, and they need credit lines in order to be able to extend margin to their customers, right? So it's quite possible that they either ran out of capital that they needed to fund margin accounts so that people could use margin accounts, or they were probably worried because of the high volatility that, you know, they may be over their skis in terms of the amount of margin they've extended to a large body of their customers. They're all retail guys, right? You know, and so even if you're talking about odd lot positions, you add that up over thousands of customers, and that's a pretty big margin tab. And it's one of those things where, you know, if you owe the bank $100 and you can't pay, you're screwed. If you owe the bank $100 million and can't pay, the bank's screwed, right? And so my guess is, this is what I said before the news even came out yesterday, that they tapped into or got extended credit lines, bigger credit lines, and they got $1 billion cash injection from the people who have originally invested in Robinhood. So my guess is they were worried about either blowing themselves up because their customers would default. And GameStop yesterday, keep calling, yeah, GameStop. I want to call it GameStock, but that thing dropped from, like, you know, 485, I think, is where it peaked. It was trading under 200 at one point. I mean, that can blow up a brokerage firm if the customers can't meet their margin calls. Now, you know, fortunately, and who knows, you know, Robinhood might have even been itself may have been part of the, you know, part of the push to push the stock higher to protect their franchise. But, you know, that was, didn't look at that in the same light as what happened to the Hunt brothers. That's not why the Hunt brothers were for, you know, that's not why the Hunt brothers were shut down. And for a while, the Comex was only letting people sell silver contracts, not buy them. I honestly think Robinhood probably was in danger of blowing up if enough of their customers had margin calls that they couldn't meet, because then all of a sudden Robinhood owes that money to the banks that they borrowed the money from. So I don't, again, you know, I think Robinhood is a detestable business, but I don't think it was done to stop people from buying GameStop. I think it was, or, you know, any of these stocks. I think it was done so that they could protect their flank. And you know, it turns out I was probably right, because they had to raise $1 billion right after the market closed.
Yeah, and Dave, I guess this was. Excuse me, one second. A contact lens issue, but we'll continue on here.
Work around it, man.
I'm gonna go one lensed for a little bit here, but you have here when I heard Elizabeth Warren come out again. This is just what I'm wondering. Given everything we've seen in the last month, do you think it's possible that somewhere involved with these short squeezes is one political party trying to stick it to the other in some fashion? Again, I'm completely speculating, but just as an option trader who wonders about possibilities, and we've seen a lot of unusual stuff. As soon as I saw, here's Elizabeth Warren, I wonder who, maybe she's counting on Gary Gensler to do something. But do you think, I mean, we hear Soros's name pop up a lot of the time when money shows up for unusual things. What do you think there, Dave?
I think it's a shame that Elizabeth, and I find Elizabeth Warren as detestable as any of them. But I think it's a shame that, you know, it's gotten to the point where you
Should I leave that up for you?
Oh, God, please. Where you have, you know, congressmen who are calling out the SEC over something like this. I mean, again, don't get me wrong. I'm all for attacking the man, but these short squeezes in the market, ultimately, a lot of people are going to get hurt. I mean, this is not really any different than what was going on. I mean, the motive might be a little bit different. And again, I think the motive is superficial. but this is exactly what it looked like at the end of the dot-com bubble in late 1999 and early 2000. I mean, you had stocks going up even more than GameStop has gone up, or more than AMC went up and is now falling back to earth. But to me, this is almost identical to what it looked like when right before the dot-com bubble blew up. And I saw a study that came out a couple years after that whole thing happened, after the NASDAQ had crashed 85%, I think, from top to bottom. And 95% of the retail day traders who were, all of a sudden trading experts for about a year, they got completely wiped out. So very, very small percentage of retail traders actually ended up not losing money or making money. And what I'm fearful of is that you're going to see the same thing happen here. So honestly, I'm kind of surprised the FCC. The SEC is supposed to be the watchdog that protects the public, right? It's a public servant. It doesn't operate that way anymore. It's more like it serves to protect the bank interests. What?
I mean, maybe it never really did, but
there was a time when the SEC actually performed the role that it was supposed to perform, and that was probably the case up until, I don't know, the mid 1980s forward, and it got worse under Clinton, and it just gets worse under every president. So it's the regulatory capture of the big banks. They've got basically the people sitting in the positions at these regulatory agencies, the Justice Department, SEC, the CFTC. They're hand puppets for Wall Street billionaire titans. That's what they are. So, I mean, to me, again, it's shocking that Gensler has been silent. Silence of the lambs. He's been dead silent on this, and it takes a criminal like Elizabeth Warren, who, remember when she claimed to be Native American? And she did a DNA test, and she had like almost zero Native American DNA in her. So I think it's criminal in and of itself that it takes a congressman to call out the SEC before, and we don't know if the SEC is even going to do anything. Who knows?
Well, I mean, at least that's one of the things I try to get across on the show where.
Well, but what I will say at the end of the day, and I'm predicting this, call me out if I'm ultimately wrong, I think there's going to be a lot of retail traders, these newly minted experts who took their stimulus check in March and gave it to Robinhood. I think there's going to be a lot of those who end up losing all their money, and they're going to be hurt by this. And it's not like Robinhood is basically, they sell all of their order flow to Citadel. So when you trade on Robinhood, you're actually, a pawn for Citadel. Citadel's making a lot more money off of this than these traders are.
Well, that's usually baked in there somewhere where nobody's looking. Right. Although, Dave, in terms of, again, not legal financial advice, but just an old timer like yourself, if any of the kids are watching and be like, all right, maybe someone made a couple $1 billion or $1 million on Bitcoin or GameStop, where I hear the market cap is about 27 billion, which probably could many times over buy the available silver supply. So in terms of available options, obviously, if someone tried to take delivery on the Comex, and I know you've done that before, so you can comment on that if you'd like, and if I'm remembering that correctly. I find it interesting that these guys have been targeting the options market, which certainly I would do if I knew the price was going to. So yeah, I fortunately did last week, and this time it worked out okay. Although, I hear a lot of people talking about SLV. And obviously, I know we've talked before about do they have the metal or not? Who knows yet? It made me think, what if, what is it, 50,000 or 500,000? There is supposedly a redemption feature of SLV. Do you remember how many units that is? I know it's like really big, so it's like beyond most average retail investor, but like, what if someone, I don't want to even put a name, and because it's, again, I'm speculating, but let's say there's a couple billionaires on the reading those messages right now, and someone wanted to buy $1 billion worth of SLV shares and then try to execute that redemption feature. What would that play out like?
It's already played out with GLD.
No, SLV.
That's happened with GLD, where wealthy entity or individual has tried to go and it's a redemption basket. See, I don't know what it is with SLV. I've read the GLD prospectus front to back and back to front. And I think it's been, I wrote a paper about it in 2009, but I think it's 10,000 shares of GLD is what you need to redeem for gold. People have tried it and they've been told to go pound sand. The only entities that are allowed to redeem shares for bullion are the bullion banks themselves. I think they're called approved participants or something like that. So, and again, I know of this for a fact because I was having a conversation with someone, and this was several years ago, off the record, someone who's well known. Most of the people who are in the audience probably would know who it is, but he insisted in anonymity, who said that he knows specifically of certain couple people who tried to redeem shares from GLD and they were denied. So make of that what you will, but I have never thought that either of these trusts have all of the gold or silver that they're supposed to have in them. And we already know that GLD leases a fair amount of its bars from the Bank of England as a sub-custodian. So those bars never leave the Bank of England. I mean, technically GLD they don't own those bars. They're just borrowing them. So I don't think you're going to squeeze SLV, because if a lot of cash flows into SLV looking to buy the shares, and just buying the options in SLV, that's not going to do anything. That's not going to create a gamma squeeze, because they'll just print more shares. You know, that's the same thing with Comex contracts. You're not going to squeeze the shorts.
Although, Dave, to be specific, I'm not saying just buying SLV shares, but what if someone took $1 billion, bought the shares?
Yeah, and what I'm saying is they're going to be denied. They're going to be denied. It's already happened with GLD. I know for a fact it's happened with GLD.
Well, this is perfect, though, because if somebody did that, then we could call, in fact, if someone with $1 billion goes in, buys SLV.
Call Gary Gensler at the SEC and whine?
No,
I'll laugh at you.
If somebody actually does that and gets denied, email me and I'll call Elizabeth Warren and invite her on the show, and we'll explain it to her.
She won't care either. She's essentially a captive of the banks, believe it or not. She's just grandstanding right now.
Although here's the thing is that, yeah, of course that's true, but I always leave open the possibility that, like, for example, I'm not a big fan of Nancy Pelosi, but what if somehow, like, I presented, hey, if you, here's the silver thing, the Republicans let it go on their watch, and look at the security. It's like somehow if you pit these bozos against each other,
they're all the same flavor. They're all like, go look at who their biggest donors are.
Ye of little faith. Well,
I've been doing this for 20 years, and I've seen pretty much everything and every attempt at trying to break the bank cartel.
You sound like the guy who said they couldn't run a 4-minute mile.
There's only I did run a 4:38 mile in high school. There's only one way you're going to break this, and I don't think you can do it, because I'm with the Hunts. That's all the Hunts simply tried to do. They figured out there was more silver contract open interest than there was silver in the Comex. So they were basically just doing a rich man's arbitrage, you know, a billionaire arbitrage. They were going and they were going to just say, okay, let's see how much silver the Comex really has, and we want to own silver. So they went and bought bunch of contracts and tried and wanted to redeem them for silver, and they were shut down because the Comex didn't have enough silver to fulfill the delivery demand. So
all Ponzi schemes end, though. I'm not saying I to be clear, I don't think anyone can sit here and say like, all right, yeah, the silver guys are defeated, but it's going to happen someday. And I mean, it's you're one of the people that
I'm not sure it's going to happen
the
on the
housing
Comex,
bubble,
though.
and you're one of the people that forecast the housing bubble collapsing in advance. And I think it would be a similar sentiment. You know, there were probably times when you're watching that. I mean, we saw in the movie The Big Short how, yeah, you had to sit there and wait. There's days where it's like, gee, is this ever going to happen? And again, to be clear, I don't have the information to say that it's Wall Street bets is going to be able to take it down. But to say that because it's not happened, I mean, if you say that the theory that the metal is levered and that, you know, silver isn't undervalued and $25 silver makes sense, and I'm just completely missing it, okay, fine. Maybe there's some probability of that. But if this thing is a Ponzi scheme, and that, in my view, that it's a fractional reserve Ponzi scheme that has more people watching than ever, I don't give a darn if Nancy Pelosi or Donald Trump likes it. But if you know, I mean, you already have Elizabeth Warren commenting on it, and yeah, probably they're not going to go out of their way to talk about silver, but I'm just of the school of thought that when you keep throwing all these darts and the bubble's that big, that eventually something hits, and you know, and that's fine. I see your old curmudgeonly old man like, well, it's fine. That's okay though.
That's cute, Chris.
You were all cranky at me because I didn't give you official warning that I was loading up the call options earlier this week.
That pissed me off.
I'm
But,
just
I got
telling
other
you
things to do
what
besides figure out what Wall Street Bets is going to do next.
I'm just telling. I told you in advance.
All you had to do was text me.
I did that. I mean, I recorded a darn webinar about the whole thing. Like, I don't know what else. In fact, Dave, you were even. gotta warn him. All right, Dave. I gotta point out the. Oh yeah, actually, I should mention this. This is actually quite intriguing because as we're sitting here talking about a short squeeze on silver, but I mean, it's already started playing out on First Majestic. I don't know if you remember we dug into that.
I don't know how long that's going to last. I mean, the short interest was what, 28%, 25%?
Yeah, just that's great. But
I think First Majestic will go up on its own merits as the price of silver goes higher.
Okay, and I think it's interesting that a week ago, you and I and Chris Marchese and Rob Keynes did a call saying, what's up with the short position on First Majestic? You and I talked about, I think it was Monday after we saw First Majestic trading a little weird. Any thoughts there? I mean, it could just be interesting timing, although it was spooky or surreal to see. And
someone on Wall Street Bets saw the podcast and said, hey, let's gamma squeeze First Majestic. Because I think what you saw yesterday and today with First Majestic was done primarily with call options, not like
that might have been me
the short. It's easy to squeeze a stock that has a short interest that's in excess of the float. But I mean, here you're only talking about what, 27% of the float. And again, I would argue that, I mean, who knows to what extent price of silver is up 4.5% today. It's up $1.16. That's not Wall Street Bets guys squeezing the Comex. It's not the Wall Street Bets guys going in there and loading up on silver contracts. I think that is a product of big investors saying, hey, look at what's going on here in the political and economic system. Look at all the money the Fed's printing. Silver and gold are really cheap, and silver is really cheap relative to gold. So, to what extent, I don't know, you could run a regression analysis on it, maybe. To what extent was the increase in First Majestic yesterday and today a function of the price of silver going up? And how much of it was a function of Wall Street Bets guys and you didn't give me a heads up, because I would have done it too, buying out of the money calls, right? I mean, you bought at the time, First Majestic was trading where, 14, 15, and didn't you buy 18s?
Bought a whole bunch of stuff, but it's
but it was way out of the money. I mean, that, and if enough people do that,
we'll see
it forces the market makers to buy the stock, and that's how you create a gamma squeeze. I don't think what you're seeing in First Majestic and Fortuna was also another one that was up a lot yesterday. I didn't really look at Fortuna today, but
everything was soaring yesterday. I mean,
right, because all of a sudden everyone's looking, hey, what's silver stocks? Even the 5-letter OTC bulletin board silver junior stocks that I own a bunch of, they were up a lot yesterday, and they don't have options that trade. But I think people, they're in and of themselves, their options, right?
I mean, I think you're proving my case for me that you saw the whole silver board soar yesterday.
Yeah, because the price of silver was up also.
All right. Well, I'm just saying.
And based on that headline that you showed of that really nasty, gnarly looking lady, she basically she's telegraphing, hey, the Fed's going to print a shitload of more money. And the government's going to deficit spend a shitload more. That's the perfect recipe for gold and silver, And again, silver is 2 to 3 times cheaper than gold right now, especially if you consider, that the gold silver ratio is around 71, 72, and it's headed down to 30 and probably lower. So if I'm a fundamental investor, I'm going to look at this and say, I don't care what Wall Street Bets is doing. I think silver's cheap as hell. So I'm going to go buy some.
Well, that's why you're Dave, the silver expert, they call him, right? In fact, I got
about this.
Well, I will re-raise you, Dave, because I have this book here. I'm going to turn can we get it there? The big silver short coming through maybe I'll turn my background off a second, because interesting, this book, Dave, there's chapter 1 about some guy from Denver who lays out.
Some idiot.
So we got the big silver short. Chapter 1, Dave Kranzler, gold and silver expert, newsletter writer, fund manager. Actually, I have this thing I've tried a couple times. Maybe we'll do today live on the air. It's actually interesting. If you just pick a random page, and then it's funny how it often connects to what's happening. And it really, so here on page 14, okay, perfect. And isn't JP Morgan the custodian of SLV?
Isn't it amazing, the coincidences in this world?
So
also the largest silver short position on the Comex.
I mean, maybe Elizabeth Warren will actually, I'm going to step back into my silver vault, my basement, finish this one up. Although, Dave, we're gonna wrap up. I'm exhausted. I mean, it's been a great week and a fun week, although a long week. So just a couple last news items here, and I'll give you the final word. But here, seems somehow inflation is not the low inflation crisis does not appear to be spreading to Germany as much as it is in the Central Reserve's, or the Federal Reserve's central banker office. Apparently in Germany, they're getting plenty of inflation.
Bernie Sanders there in the red jacket?
I don't. It's kind of hard to tell. He's wearing his mask.
Look, it's Bernie and Janet.
Well, the CO2 price, that's driving the inflation rate. Man, the things these guys talk about that are driving the inflation rate and how they manage to avoid. Oh, who was it? Powell the other day in the press conference. He actually said monetary policy had nothing to do with the inflation. Or he said some whopper like that.
He said that the Fed's money printing and balance sheet had nothing to do with the rise in the stock market. So I immediately found a graph that showed the pretty much 99.5% correlation between the spike up in the Fed's balance sheet and the spike up in the S&P 500, and tweeted it out.
Yeah.
I can't believe, I honestly can't believe that guy gets in front of the public, and expects the people who are watching to believe the bullshit that comes out of his mouth. I honestly, if he really thinks that people are going to believe what he says, then, and I don't think he's dumb, or stupid or low IQ.
It's not
But
ruled
if he
out.
really believes that, if he really thinks that people are going to buy that bullshit, then he really is stupid.
Well, let's keep all options open here. I mean, let's not be hasty on the, I don't want to sell that.
I am
Put
keeping
it
my options
zero.
open,
You know what I
especially
mean?
after hearing some of the nonsense that comes out of his mouth.
What did you think about when he said on 60 Minutes last year, said prior to COVID, the economy's never been stronger. You didn't seem to explain the part about the swap lines that had started about 6 months prior to that and how he was pumping trillions into the economy.
The economy's never been stronger. You know what they're calling growth since 2008, since the last recession, is the weakest level of GDP growth in the history of the country. So I don't know how he could say it's never been stronger.
I
And actually, if they
explain
used a
that
real
for you.
GDP deflator, a reasonable estimate of inflation instead of that BS that they call the CPI, you wouldn't even register nominal GDP growth. GDP growth would decline. I did a paper on that with Paul Craig Roberts and John Williams several years ago.
Will you
And
come and
you'd
read
be
it
stunned.
to us one day?
Pardon me?
Will you read us the paper one day?
Yeah. Pour a cup of warm milk and read the paper by the fireside.
Could be lovely. I'd love to know what your thoughts were on that one. In fact,
it's on my blog somewhere. You just got to search for it.
Well, I'll tell you what. Here's an interesting piece of Dave Kranzler history that
no
came
All right.
across the other day. Dave talking about the options expiration, which that one happened earlier this week. But Dave, this is a young Dave Kranzler there. You look sharp, buddy. All right, we'll take down young Dave Kranzler and replace that. I figured out why Powell, you said you didn't understand how he came to that conclusion, but I got an anonymous tip. I don't know if it's accurate that he was sneaking into Ben Bernanke's lectures at Princeton, and like, wow, I want to be like Ben, who said subprime is contained, and other Keynesian economic ideology that might, I don't know. I don't think that Jerome Powell really believes any of the stuff that he says there, but we'll leave that aside. Dave, did you
leave our options open?
Yeah. And even better than him, did you sign up to win this month's Arcadia 10-ounce silver bullet giveaway?
No, but I'm going to right after we're done here.
It's 10 fine ounces. Keep it out of the bank.
I'd still rather have the first Majestic cube.
Well, you gotta start answering the questions. Maybe next year will be your time. I got one final question for you. Where can people go to figure out how this is all going to play out in the gold and silver markets?
Go to church on Sunday.
I stumped him again. You could go to investment research.
Go to church or synagogue this weekend and pray.
Or I'm wondering if there's a mining stock journal by a guy named Dave Kranzler that backs up the truck. Dude, why don't you just send your truck over to the Comex? This thing will be done by Monday. Come on, buddy.
Well, that one, I guess, was visiting the U.S. Mint. But
if you had taken your truck to the Comex this week before my weekly options expired, we could have been doing this from the beach already, Dave.
Well, you know what? What I will say now that you mentioned the Comex and physical gold and silver, if the Wall Street bets crowd wants to really squeeze the silver market, you're not going to do it by getting long Comex contracts, because the banks will just print more and sell you all you want to buy. Okay. What you got to do is you got to buy, and you can even do it with one contract, 1,000 ounces of silver. Well, one contract, a big contract of silver is 5,000 ounces. So, form LLCs with your buddies and buy a contract of silver and stand for delivery, and then tell the Comex that you want to take delivery of the bars and move them out of the Comex. And so that would be 5 bars. So you get 5 buddies together, form an LLC, fund it, buy a Comex contract, stand for delivery, and then remove the bars from the Comex. That's the way the Comex is going to get squeezed. Not in the paper side of the Comex, but by people, entities who stand for delivery, stoppers they're called technically, and rather than leaving the bars in the Comex vaults, take them out. We did that in 2000. I think it was 2009, April. It was April, the April contract, maybe. I forget. But it took us 6 weeks beyond when we were supposed to have the bars delivered to get our silver out of the Comex and into the depository where we keep our silver. 6 weeks. And if we had a bigger fund at the time, we probably would have filed a lawsuit against HSBC, because HSBC was the counterparty, just to bust their stones. We didn't want to waste the fund's money on that at the time.
Well, that's now we got the good stuff. That's what I was trying to get an hour ago. But yes, so kids at home.
Well, that's what I mean. That's the way the Comex is going to get squeezed. If stoppers remove their bars from the Comex, and not coincidentally, the Comex incentivizes people who take delivery to leave their bars in the Comex, because there's fees that you have to pay to load out your bars, and the fees that they charge to keep the bars in Comex vaults is much lower. The fees are much lower than it would cost to keep the bar. And we're talking like, 0.5%. So it's not like you're going to go broke storing your bars. And I personally would, store all my personal silver and gold on my own premise. And that's what I would recommend that everyone does. But if you form this LLC and you take delivery of the Comex silver bars and you move them to another vault, Delaware and West Point aren't the only places that have precious metals vaults.
Can I send some of my silver to be stored on your premise?
You'll never get it back, but I'll be happy to return fiat.
What if I just keep hopping the fence and showing up in your hot tub?
Buy some Bitcoin and trade you the Bitcoin for the silver. How's that?
That sounds good, buddy. So anyway, folks watching at home, where's the darn webs? There we go. Investment Research Dynamics. You can get the Mining Stock Journal, back up the truck like Dave. And perhaps if anyone has been active in the Wall Street Bets Forum, perhaps someone could put a timestamp of that last section, Dave, where you explain not legal financial advice, but if any kids at home are toying around with a couple $1 billion and want to know how it's done, maybe you could even do a write-up in the Mining Stock Journal, how to short squeeze the Comex. That could be a hot little seller, right?
Maybe I'll do that.
So you don't know, but you got to subscribe to find out, right?
That's right.
Yeah, that is right. Dave, final question for you. What has Trump been doing? The last I think we've heard from him was Tuesday before he left the White House. Where has he been in the last week?
I don't know. Didn't I hear that he bought a small island somewhere in the Caribbean or something?
I didn't hear
I have
about
no idea.
that.
Maybe he's in Mar-a-Lago, holed up in his bedroom, trying to get back on Twitter, eating Big Macs or whatever. Oh, doesn't he like the double Whopper with cheese or something? Whatever the McDonald's thing is he likes. It's just getting more fat and grotesque.
I don't know about that. Although, did you see that CNBC article that I don't know how I missed this? Apparently, he called the Federal Reserve officials boneheads at one point, which I thought was.
I'm going to miss that.
So, Dave, I thank you for being here. Great call as always. Thanks for telling people how they can put some pressure on the short squeeze again if they do so at their own risk, and it's something they want. And not legal financial advice. And just in closing, what I might be wondering this weekend is that if Trump talked for 4 months nonstop about the election being rigged. He's shown the term backing down does not appear to be in his arsenal. But he's just gone. You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Late on a Friday night. I thought we were done for the day, but the silver news, it's like the ballots when they come in. They come in all night. Silver news coming all night. So here we are, and well, the Wall Street Bets Reddit crowd made their presence known today. And we have the first sign of some data here because hats off, hands out. A little exhausted and tired tonight, so if I don't make complete sense, bear with me, please. But let's give a round of applause to Bob Coleman, first one for reporting this. Bob on Twitter at Profits Plus ID. Bob found SLV just added 37 million shares to the trust today. 1,150 metric tons of buying in one day. This is huge. This is equivalent to 25% of all of the registered inventory backing the silver Comex futures contracts. Maybe we can read that again. I guess my haste, I was focused on this. Although you can read along at home with me. This is equivalent to 25% of all of the registered inventory backing the silver Comex futures contracts. So interesting that, I don't know, maybe you could call Thursday day one of Wall Street bets and Reddit targeting in on the silver market. And certainly we saw First Majestic, and we saw silver move on Thursday too, but that's quite an impact. Now let's put this in perspective. Actually, before we do that, let's show the data. Here, Bob was kind enough to send a picture from the SLV sheet. You can see January 28, there's 610 million ounces. January 29, there's 647, so 37.15 million ounces. Now, again, anyone who's new to silver, I know a lot of the veterans know this or have heard this already. Is SLV actually adding the shares or the depositing the metal? I've called, it may have been iShares or BlackRock. I don't remember who I called, but I dialed up a bunch of phone numbers to actually call them and ask, to at least ask the question. Whoever I spoke with, they sent me a few things back and basically said yes. They claim metal was going in. Now, does that mean it is? I don't know, but I thought, for my own amusement, I'd at least have on the record that they told me that. Whoops. We're going to mute that in the background. But so they're supposed to be adding metal, silver, every time they create a share. So if new people buy shares, if there's additional demand, I don't know, people can sell their shares or the SLV can create new shares, which require the deposit of metal. Does that happen? Well, keep in mind, guess for anyone who's new to this, just take a guess who is the custodian. So who's supposed to make sure everything is safe? You're going to think I'm making this up, but it's JP Morgan, who just got fined $920 million for rigging gold and silver. So, I mean, in terms of watching the hen house, maybe we could paint costumes on there, actually get a fox to do it. But either case, as bizarre as that may be, they are alleging, I've not seen the metal. Now, we asked Andrew McGuire, there was a 20 million ounce deposit I believe it was last week, that was massive. There's people who don't believe it's physically possible to process that much metal. I mean, that quickly. I don't know. I guess there's always a way, but I mean that's a lot. Now let's put this in context a little bit. First of all, here is the great Gold Charts R Us, Nick Laird's site. Keeps us humming with all the data. Let's see if I'm not sure when that gets updated, that latest day, because I've been curious. Looked over here earlier today. In either case, you can see last week 20 million ounce deposit right there. And to put that in perspective, this is the 3-month chart. You look at 6 month, it's the biggest. 1 year, it's the biggest. 2 years, it's still that one there. It's biggest in 2 years. 5 years, still the biggest. 10 years, it looks like there was one in 2013, slightly bigger. I mean, you get the idea that 20 million, except for that thing in 2013, I mean, here's back 10 years. So aside from that one, what we saw last week was the second biggest. And now whenever the chart data gets updated to include today, you have like, I guess where that 5 is would be around where 30 would be. So we'd be above the scale of the chart. Let's go out 20 years, see if the chart, yeah, Nick is going to have to make a new chart because so much silver. Wow, I guess I didn't really think of it this way, but this was an all-time record. Yeah, congratulations, Wall Street Bets, setting on day 1 or 2, depending on how one does the accounting, an all-time record for largest deposit into SLV in history. How exciting is that? Actually, although I'll do you one better, because keep in mind here, all right, I remember how to get back out there. No, that is not what I was looking for. What I was going to say is that SLV is only one of the trusts. There are multiple trusts, as you can see here. So here is, where is iShares, SLV. So this is yesterday's number. Here's the Sprott Trust. So my guess would be, I've started searching through the forum a little bit tonight. I hear a lot of people talking about PSLV. That's PSLV, which is the Sprott Silver Trust, which I would feel a lot safer with, I might add, than SLV. You know, again, there's some people who just want silver that they can hold in their hand, and I can understand either way. But again, that 37 million was for iShares. I don't know. Hopefully we'll have data by the morning, I guess, what Sprott added and what the others added. So that number could be bigger. I guess theoretically it also could be smaller, although that would seem unlikely. So yeah, in either case, I'm going to pull that chart back out there a second. Okay, yeah. So there was so much silver added on, we'll call it day 1.5 of Wall Street Bets targeting silver short squeeze, that on, I'll just call it the first day for artistic purposes here. So on the first day, so much was added that it's a record in the history of silver trusts. I don't think it can go any further. Let's click long term, see. Okay, wait, what do we got here? Oh, that's an interesting one. I've never noticed that before. 1996. I would guess that would somehow be related to Warren Buffett, who some of you might know had a silver position even larger than the Hunt brothers. Although, let's get another interesting little piece of history, because people know about the Hunt brothers and how they cornered the market. I don't know if that's exactly how I would phrase it, but you know, they had that massive silver pile. Some people know, maybe not quite as many, about silver stocks. I don't know if you can see this yet, but give me a moment. Some people know that Warren Buffett, I believe, held even more than the Hunt brothers. But here is what is interesting. Oh my goodness. All right, give me a second. Let me back out and pull this up. Wow. Amazing the things that happen on this planet when you're happen to open your eyes from time to time. So here we see JP Morgan. That was interesting. I think it was back in June or July. It was interesting. Andrew Maguire was on, and we were talking about how on the first day of the deliveries, this was around when things were going on with the Department of Justice case, that 30 million ounces were switched. Let me pull that back up. Always get registered and eligible confused. Okay, so JP Morgan, basically, to put this in context, so you're going to love this, especially if you're hearing it for the first time. The JP Morgan had, I believe, 0 ounces, and I don't even think they had a warehouse in 2011 when silver went up to $49. Comes crashing down. I think they opened the warehouse actually that month. I mean, it was a very coincidental chain of events. You probably wouldn't want to explain in a cross-examination, I'm guessing. So basically they went from 0 and then just kept accumulating over the last 9 years until then on the first day of, I guess it was the July silver deliveries. They delivered 30 million ounces from eligible to registered. So back in July or end of June, this was a number where you see 152 there. That was 160, and this was 0 for a total of 160. So yet you have that happen. You have them get fined $920 million for, I got to pull it up. I'm sorry. You really have to see this one, the CFTC, JP Morgan, $920 million. Because I can understand, I get it. You know, it's like some of this stuff, you know, especially for people who are new to the show, I can certainly understand if you think I'm making some of these things up. I mean, you know, but here's the CFTC's website. There's JP Morgan and their manipulative and deceptive conduct that spanned at least 8 years and involved not a few, not 2 or 3, but hundreds of thousands of spoof orders in precious metals. And let's not forget, they were rigging the treasury market too. So anyway, you know, they had 160 million ounces. Let's get that one back up there. And so 30 million goes from eligible to registered. Now, perhaps what's more significant in some ways is that still does not appear as if metal is leaving the building, which I think would, if there's any like real sign to watch out for, at least in terms of the Comex, it would be that. But in either case, so you had, it was 160. They've added another 33 million ounces since then, while they're getting fined $920 million for manipulating the market on hundreds of thousands of occasions. And of course, simultaneously, they are the custodian of SLV. So yeah, that sounds like an all-around great setup. Can't see how that could go wrong. But I'd like to put, excuse me, this, again, thank you, Bob, for pointing that out. So everybody, big hand for Bob. To again point out how big 37 million ounces is, let's take a look at Silver Institute. Here's the mining supply. So you see 700, 800, almost 900. If you add in the recycling, 150 to 200. So, all right, let's add all that together. You see it's about been pretty consistently right around $1 billion. So if you say 37 million ounces, let's round down to 33 so that you say in 100, you can fit 33 three times. So in 1,000, you could fit it 30 times. So basically, if you take 1,000 divided by 33, I'm going to get my math right here. Let me check it. A little bit tired tonight, but we will make sure I'm getting this exactly correct here. So 1,000 divided by 33. Yeah, okay. So basically, at this pace, over 30 trading days, what was purchased in SLV would eat the entire supply for a year. So 37 million ounces. So if that happened again Monday and Tuesday, that's 100 million ounces. That would be in 3 days. That would be a tenth of the world's supply. Keep in mind, this doesn't include what people are actually buying when they buy physical metal from Miles Franklin, where if you are trying to buy or sell gold or silver, you can find out pricing, quote, information, Arcadia at milesfranklin.com. And by the way, just not biased, you can sell the metals too. They'll give you pricing or information. If you do have any questions about stuff like that, Arcadia at Miles Franklin. But so this doesn't even include the physical that people purchase from all of the dealers. And the 37 million ounces doesn't include that. So that's a lot. And I guess that was the question a lot of people were wondering today, where the Wall Street bets thing, could it really make a difference? Could it really make an impact? On one hand, I think that's your data point that it did. Hearing now, I had wondered, we talked about it earlier in a video today. Is there other groups behind this? And there's a lot of interesting things going on tonight. Hearing about political pressure that may have been lobbied on Robinhood to force them into that decision. So there's some posts going around that are alleged to be from a Robinhood employee. I do not know if those are accurate as phrased, but I don't know. It didn't. I try to phrase things appropriately on the channel. I've learned to trust my intuition more in later years than always trying to find rational proof. So I think that's important too. But I don't know. Often in trading, you don't get an official like flare gun going off. It's kind of like in poker. You have imperfect information and you don't know all these things for sure. And I try and balance this where I think it's useful as someone who trades. I try and share what I think is relevant and phrase it appropriately. So hopefully that comes across right and is helpful. And either case, with that said, get back to Friday night, snuggling with your loved ones and doing something fun. Take a break from silver for a while, but wanted to pass this along. Certainly a very interesting development. What else can you say? But again, it's like just the first data point of the impact of whatever you want to call it, whether it was the Reddit group, whether it was the attention that was placed on Reddit. I saw even Wall Street Journal even had a silver article today. I think that was shocking. I didn't even know they had a commodities section. I'm kind of joking, although, actually I'll take a couple questions here. Why not? Because I see Carlos Danger asks, why in the heck are the folks in Reddit buying SLV? That's a good question. I would not go with SLV if I were trying to cause a short squeeze, because what concerns me is that if you ever, or not ever, I mean, I think it's coming, but if you have a break in the market and we find out that the metal isn't all there and you're holding SLV shares, those are the people, along with Comex contract holders, that, you know, you'd be worried really are going to end up not getting a good outcome. So now on the other hand, Eric Sprott, if you're watching, I'm curious if you've thought of, or someone else like that. I would be curious what would be the impact if someone started, think SLV, like you can't go in and say like, hey, I have 10 shares of SLV, you know, like send my silver into a box. And I think I'm pretty sure it's 50,000. Maybe if anyone in the chat room can help me out there, if they happen to know. But what's it? Yeah, so you'd have to redeem a 50,000 share block. But if somebody did that, that would be interesting. If they started redeeming whatever the size is, large blocks of the SLV and converting that into physical metal. It's not an easy process to do, so it's not like you can just call your Schwab broker. But so that would be one way of doing it. I know they're doing a lot of options, and I guess there's some. I don't know if I'd go there first to trigger a short squeeze. That would be the place that you would make sure that you massively amplified your return if a short squeeze then did happen. But I mean, for the folks that are, you know, have an interest in putting pressure on these short positions, anything that, you know, if you buy physical, certainly that's the safest thing to do. So actually calling a place or going online and buying physical silver that you hold in your hand, that takes it out of the system. I feel the Sprott Trust is putting their metal there 1-to-1. I feel pretty confident in Kinesis Money is putting its metal there 1-to-1. I'm guessing Gold Money is probably safe. There are a lot of good ones out there, and I don't know, maybe that's how it goes in many areas of life, where one bad apple can scare people away from things. But I don't know if SLV, unless someone was planning to redeem a large block of shares, if you were trying to force a short squeeze, I'm not sure if that's the way that I would approach that. Robin Hood is a joke. Everyone is jumping off the boat. Yeah, well, yeah, I can certainly understand that. I'm curious to know, again, there are reports that the White House called him and basically stiff-armed him into pulling the bids. I mean, I think it's, I listened to the Robinhood founder. I was on CNBC last night, and what he said did not make any sense to me, for whatever that's worth. And if basically the guy was sitting there with a lot of pressure on him and had to bite the bullet and give some, forced explanation, that would fit a lot more, because it's certainly, then you have, Elizabeth Warren going out and saying, wow, this is a travesty and we have to get the regulation. Give me a break. I mean, all right, why don't go investigate silver, Elizabeth Warren. In fact, all right, there you go. If anyone knows if Elizabeth Warren has a Twitter, or go to her website. Let's see. Let's see if we can find Elizabeth Warren. Anyone in the chat room can help out here and let me know if Liz has Elizabeth. People could tweet this episode to her, and she needs some help. Senator Warren. Okay, there we go. All right. So there you go. SEN Warren. So if you take the link to this YouTube video and you can tweet it to Senator Warren, because let's see here, she seemed pretty upset about the short squeezing and market manipulation, and my guess is that, okay, stock market isn't our economy. It's a giant casino and playground for billionaires. The SEC needs to clean it up, and Congress needs to do more for working families barely hanging on by their fingernails. So I'm going to start the party here, if I may. Let's see. What should we send Elizabeth Warren? Yes, I will send her. Hopefully not my spelling results. There we go. So I can't spell that great when I'm tired. What are you going to do? All right, pause there. Okay. Let's see, what should we say? Dear Senator Warren, if you are interested in areas of Wall Street that have been corrupted and could really use some investigation on behalf of several thousand viewers nightly. Whoops, serial. Several thousand nightly viewers. I would implore you to look into the silver market. Whoops. Well, let's go back there. Yeah. Let's check it before. We always proofread, read it out loud. Good, catch a lot of errors. And dear Senator Warren, if you're interested in areas of Wall Street that have been corrupted, it can really use some investigation. On behalf of several thousand nightly viewers, I would implore you to look into the silver market. Yeah, well, I will send that. And yeah, I mean, I don't know if you can call her office but keep thinking there's got to be like some politician who some way, could be the hero to their voters. Be like, look, we screwed you. Look at the Democrats didn't do this. The Republicans didn't do that. I'm the hero. So Elizabeth Warren, if you don't, I'm this Democrat. I don't even know. I don't care. Fortunately, I'm I guess if she's watching this, hopefully it doesn't matter. Even what is I'm assuming a Democrat. Who knows? It doesn't matter. But yeah, Senator Warren, the stuff is out there. Watch that video that I posted in there. Find out who Bart Chilton is from the CFTC. The guy was there for the investigation. He talked about what a rigged job it was. So hopefully there's some politician, whether for noble or unknoble purposes, whether it's for their own, fine, use it. Dear Congress, use it for your own political gain in whatever way you want, but there's a massive felony being committed on a day-by-day basis, and you could do something about it now, or you could just wait and let, let's see if there's another 37 million. Well, actually, this is interesting. So if they did 37 million today, and again, if I can encourage folks at home that are watching, post this in the Wall Street Bets forum, and let's see if we can double that score on Monday. Everybody go out and buy some silver. In fact, on that note, all right, we're going to do something. Oh my goodness. We're going to do something special for this occasion. This is going to be a tough one, but I have something special on the way. So as some of you know, my Magnus Opum, if I may, I've been thinking about this literally for a decade. Oh, actually in February of 2011, when I was at Freedom Fest in the Bahamas, that was the last time silver was soaring to 50. And it was wild because we'd come back from lunch and everybody would be like, wow, silver's up another $1. Silver's up $2. And it was pretty exciting. That was where I first came up with the idea of making a silver statue of Ben Bernanke in a helicopter, throwing $100 bills out of it. And I don't know. I mean, I thought, I don't know, you can't really do stuff like that. Who am I? But then years later, if you can see my silver soldier there, was sitting on my windowsill, and I was like, if I can make this guy, I gotta make the silver Ben Bernanke. So in honor of this fine moment and to encourage Wall Street bets, and I say this in completely legal fashion, hey, I mean, do whatever. Actually, to be clear, not legal financial advice, but I'm happy if people buy things they like. And on that note, I'm going to give away the silver soldier tonight. He is ready for a new home. So, folks, go tag Wall Street Bets, Reddit, on Twitter, tag Arcadia Economic, and we'll pick a winner for the silver soldier. This is the exact unit that helped bring the Silver Chopper Ben, which will shortly be coming into reality. An exciting moment for everyone, because I know the joy of what it will feel like having a silver Ben Bernanke figurine spitting out $100 bills on your desk. So anyway, thanks for watching. I guess this ended up being a little longer than expected, but hope you smiled a little bit. And in either case, that's a darn big chunk of silver. So we'll see what happens on Monday.